Hello, future CAs. Welcome to India's first advanced accounting MCQ case study marathon that we have for the upcoming September 25 or Jan 26 exams. Sir, what are these Super 20 case laws that we have? Let me explain that to you guys. If you look at MCQ case guide for advanced accounting released by ICAI, we have various sources, correct? We have questions in RTP, model test papers, mock test papers, past exam papers in new syllabus, and I have also curated my own questions, not just from ChatGPT, guys. ChatGPT plus my human intelligence mixed together, making my own questions. Currently, we have 55 plus of these own case study questions. Sir, where are these 55 own case study questions? This is my MCQ guide that I have. Look at this. If you come down over here, you will have an index over here of all the questions that we have in this material over here, guys. Each source and what topics that are covered. For example, if I take model test paper 5, question number 36, it will be AS 17, AS 10 and AS 26 put together. So like this, there are a lot of questions over here, and for each question on the top, I will be giving this, the topics that are tested and the source. And then if you come down, after the options are given down, I will be giving the answers along with insights, which is nothing but justification as to why that is correct. Now these 55 plus case studies I have solved in our workout and regular classes in the CA classroom who has purchased the classes, and these 55 questions will keep increasing as and when new questions comes. But for our YouTube family, I have picked from those 55 questions super 20 questions which I feel are important, covering the entire syllabus. Look at this, guys. This marathon, the one that you are watching now, these 20 questions covers all these topics in your syllabus, guys. It covers 17 accounting standards, all the standards I have listed here, starting from AS2 and until AS29, all the standards, even difficult standards like AS22, impairment 28, all these are covered. And the big chapters that usually come in case study, buyback, we have questions from that which was solved, internal reconstruction and cash flow statement, and here and there some adjustments in this MCQ marathon also includes schedule 3 topics that are covered over here, guys. Now I'm going to tell you, for these 30 marks, I have two things that I have. If you are going to watch this marathon, what is the order to watch the marathon? Because sir, you have given us 20 random questions. No sir, they are not 20 random, guys. They are super 20 questions. So what order to watch them? And how to plan for MCQ in the main exam for you. Before I get to that, students will want this PDF. I am giving it freely available in the CA Classroom website. You just have to go to CA Classroom website, go to free resources and download the PDF from there, or in the description of this video, you will find this PDF. Now, what is the order, sir, that I should watch this marathon? What I have done, all the 55 questions also in our regular class, and here also the 20 super questions I have given to you covering all these topics. This is not a regular class where you have to watch schedule 3 first and then watch consolidation. Since you are in the end of the preparation, I will be giving you timestamps for all the 20 questions. You can watch any question of your choice whenever you want. For example, in the index, if you feel question number 53, AS 13, MTP September series 1 you want to watch, then you can go watch that question only. So you can watch any question in any order for you to solve that question. Now lastly, how to plan time for MCQ in the exam. This is my approach, and generally when I'm giving you an approach, it comes with lot of experience. In the first 15 minutes reading time, you will read the entire paper and plan your order of attempting the exam. In that question number 1, my view always is please do not take this consolidation or amalgamation until you are very strong, or I will tell you, take that 14 marks that you know damn sure, sir, this question I know, sir, I will at least get 10 or 12 out of 14 over here. Take that as the first question, whichever it is. Next, go to MCQ. So this first question will roughly take you, let's say 30 minutes, guys. Let's say roughly 30 minutes. And then go to MCQ, and in the next 30 minutes, finish off the MCQ, guys. Here and there you will average off out the time. So what will happen in the first 60 minutes of your paper, you will be done with here 14 marks and here 30 marks. Look at this. In the first 60 minutes, you are done with 44 marks that you know very well, guys, because first question you are picking something that you know. MCQ, most students will get it correct, especially if you watch this marathon. So 44 marks is in your pocket in the first 1 hour. Then in the second 1 hour, what you should do in the next 60 minutes, guys, in the next 60 minutes, you should tackle these questions like consolidation or amalgamation, the ones which are time consuming. So by 2 hours, you will finish almost 70% of the paper. And then in the last 1 hour, you do the balance. In exam, it's all about being smart, guys. So here, mainly since I'm talking about MCQ, I'm talking only for the first 1 hour. I will repeat. Take one question that you know very well, then jump to MCQ. So in first 1 hour, 44 marks is done for you. And after that, immediately in the next 1 hour, you take the consolidation or amalgamation question. And by then, 60 to 70 marks will be done. Then you go for the rest of the paper based on the time that is available for you. So this is the quick intro for the MCQ marathon that we have, guys. The Super 20 cases. Enjoy the marathon, and if you have watched the entire marathon, guys, let me know in the comments how useful this was for you, because those small messages from you will actually push us to do a lot more, guys. Enjoy the marathon. Thank you. Welcome to the next question in case-based MCQ, guys. Case scenario 10, which is May 25 MTP series 1. This question, if you look at our case booklet, is very similar to the case scenario 1. So case scenario 1 and case scenario 10 are the same, but case scenario 10 is a little more challenging than the first case. Let's read this question. RTS is engaged in the business of manufacturing of urea, has set up its business in designated backward area, which entitles the company to receive from the government of India subsidy of 20% of the cost of investment of manufacturing equipments and components. This looks like grant in the nature of promote as contribution. Okay. We will keep analyzing each para as we read it, guys. You will also read at your end. If you want, even before you watch the video, you pause, read the whole question by yourself. Second time, read every question with me. In that way, what will happen? You will have a little more understanding and you will be able to match my speed. The company has a contract with the Indian Railways for brake component, which is structured such as, fine, our company after getting the grant, they have a contract with Indian Railways. There are some bullet points. Let us read all these bullet points. The company's obligation is to deliver the component to the railways stockyard when the delivery terms are X works. Sir, what do you mean by X works delivery without tax? Basically the direct cost, the prime cost, all that will be included. And they are saying, look at this. Who is responsible for delivery? The company is responsible for engaging a transporter for delivery. So us being the company, we have to deliver it to the railways. Then railways is sending an order for defined quantity, maybe 100 units, 500,000, whatever, guys. The company manufactures the required quantity and informs railways for carrying out the inspection. So once the company is manufacturing, then the railway will send out for inspection. The railway representatives visit the company's factory, inspect the component and give one quality check sticker. Goods once inspected by railways are marked with a hologram sticker to earmark for delivery, identification by customer when they are delivered to the customer's location. The company raises an invoice once it dispatches the goods to the customer. The management of RTS is under discussion with its auditor. That's why we have this question of the company in respect to accounting of a critical matter regarding to accounts with respect to subsequent events. So next AS is coming over here. So before that, let's try to understand what is there in this particular question, guys. So RTS is the company. This RTS company is delivering goods to the railways, and the way of manufacturing is first railway will tell, okay, please manufacture 100 units. Then RTS will finish manufacturing this and inform to the railways. From the railways, somebody is coming to the company for inspection to check if the products are very good, if the quality is good. Once the inspection is perfect, this inspector in the RTS goods is keeping an hologram. What is this hologram? Like a sticker in the goods of RTS, which indicates that the railway has now given a confirmation that we are happy to take these goods. Please dispatch the same. Fine. Next, what is happening regarding subsequent events? Some points are coming. They have been events after reporting period. We know subsequent events is AS4. They have been checking as to which one of the following events after reporting period provide evidence of condition that existed at the end of reporting period. They are giving some things. Which of these becomes an adjusting or non-adjusting event? Privatization by government, out of court settlement, rights issue, workforce something strike, announcing a plan for discontinuance. Fine. Let us read the question fully to understand what they're asking, guys. The company has received a grant of 8 crores from the government for setting up factory in backward area. Promoters contribution already discussed. Out of this grant, the company distributed 2 crores as dividend. No. Can I distribute promoters contribution as dividend, guys? No. The company also received land at free of cost. Very good. From the state government, but has not recorded in the books because no money has been spent. If a grant is received free of cost, what do we do as per AS12, guys? If grant is received free of cost, non-monetary grant, immediately what are we doing, guys? Non-monetary grant free of cost will be recorded at nominal value by passing the entry asset land account debit to capital reserve. This company has not recorded at all, which is not correct. Then they are saying RTS as subsidiary, some company, an advertising entity which prepares and publishes advertisement in newspaper on behalf of its client. LPP invoices its clients for the commission they are earned to, as well as the media space payable to the newspaper. So what they are saying over here, this RTS now has a subsidiary company. Has what, guys? It has a subsidiary, guys. What is the subsidiary called? LPP, where this LPP is selling space to different clients. For example, let's say one client is CRED. Okay, now this CRED will pay, let's say, 100 crores to LPP for putting newspaper ads. And the question over here is, this LPP will collect this 100 crores and then put the ad of CRED on the newspaper. In this 100 crores, let's say 80 crores are paid to the newspaper. Let's say it is Hindu. So Hindu will take 80 crores and the remaining, how much is there? 20 crores will be the net earning or the commission for LPP. That's what they are given on the paragraph regarding advertisement LPP media. What are the questions here? First, when should RTS recognize revenue as per accounting standard? Now, this is for RTS. First question, AS9. Okay. Would your answer be different if inspection is normally known to lead to no quality rejections? What is the question about? In AS9, when is revenue recognized? For sale of goods. This is sale of goods. For sale of goods, we know in AS9 that revenue is recognized when significant risk and rewards from the seller is transferred to the buyer. Over here, when is the risk and rewards transferred? In our question above, guys, they are saying once the inspection is complete, and look at this, goods once inspected by railways and once they are keeping a hologram is when there is a decision to transfer the goods to the other party. Fine. They are asking when it's transferring. Let's go to next question. In respect of LLP, how should the revenue be recognized in this case? This regards commission. This is regarding advertisement. Next point number C. Which of the events mentioned above is a subsequent events report evidence of conditions existed as on reporting period? Subsequent event. And fourth one looks like AS12 government grant. Before I start discussing the answers, this is how I do for every question also. I want you to pause the video over here, go by yourself and try to answer every question as to what you will answer and then come and discuss. I hope you have spent time for answering by yourself, guys. Your material, you know where to get it from the website, free resources. Now, let's start answering. The first question is, when will revenue be recognized? When risk and rewards are transferred. Revenue should be recognized on dispatch of components, not for delivery. Will be recognized on completion of inspection of components. So far, this looks good because completion of inspection. Revenue to be recognized on dispatch of components. Revenue to be recognized on delivery of component to the railway stockyard. No. Not, we studied in AS9. Revenue is not based on delivery. It is when risk and rewards are transferred. So definitely option D is wrong. Now option A and C talks about dispatch of component. Dispatch means I have dispatched it. Other party has not yet received it. But when do I dispatch? When do I have the right to dispatch? When the railways has completed the inspection, and only when the inspection is completed, when it's putting the hologram. When the hologram is put, I can't dispatch to anybody else. So when the other party is putting hologram on my goods, that is implication that risk and rewards are transferred. Therefore, A and C also are not correct. I will say the correct answer is B, where B says revenue to be recognized on completion of inspection. That time only hologram is kept. The assessment would not change even in case where inspection is normally known to lead to no quality rejections. Same thing is given in question. If inspection is normally known to lead to no quality rejections. What do you mean by no quality rejections, guys? They are trying to say generally inspection means there will be some positive, some negative, where they will tell quality rejection is there. Here they are saying, would your answer be different if inspection is normally known to lead to no quality rejections? That means they are trying to say, if 100% of the goods are of good quality, whatever they are inspecting, everything they are putting stickers. Here, it doesn't matter whether they are accepting or rejecting the quality goods, guys. For acceptance only, hologram is kept. So they are trying to say here, inspection leading to rejections or acceptance is not much important for me. What is more important for me here is inspection of the components only. When that is done, I will transfer the ownership. Next, let me come in reverse, guys. Please guide regarding the accounting standard of government grant mention. First, dividend distribution is correct. No, dividend distribution is not correct. Distribution of dividend of grant is incorrect. Yes. In second case, not recording of land is correct. No, that is also not correct. Distribution of dividend out of grant is correct. Land should be recorded at nominal. Distribution of dividend out of grant is correct. Sorry, dividend itself is not correct. So again wrong. I know by now you would have already figured the answer, but I'm showing you how to read the answer. Distribution of dividend out of grant is incorrect. Yes, we can't distribute dividend. In second case, land should be recorded in the books at nominal value. So the correct answer for me is option number D, guys. Come above. Okay. Let me come above. And here, look at this. Please guide the management of RTS. Which of the mentioned will become a subsequent event? Go to the question. These are the points we read over here. 1, 2, 3, 4, 5. Let's see which is subsequent event. Nationalization or privatization by government. You tell me, guys. This is going to be a completely new event occurring after balance sheet date. So it's a non-adjusting event. Out of court settlement of legal claim. Yes, legal claim is already there. Now we are doing out of court settlement. So it becomes an adjusting event. Rights issue of equity shares. It's a new event now. So non-adjusting event. Strike by workforce. Completely new event. Non-adjusting event. Announcing a plan to discontinue operation during the year. No clue is there. So therefore this also is a non-adjusting event. Come down to question number 3, which says Which of the events is giving an evidence of condition that existed on balance sheet date reporting period, which is only out of court settlement? Option 2. So option 2 is my correct answer. Are you enjoying MCQs, guys? Welcome to case-based MCQs, and this is how you have to apply concepts. Last question, guys. In respect of LPP, how should the revenue be recognized as per the accounting standard? Go through the options. We will discuss it, guys. Go through, but if you have already gone through, let me just read it. LPP should recognize net amount of commission earned by it, only net amount. For example, if they earned 100 crores, 80 crores is paid to newspaper, so net commission is 20 crores. LPP should record the net amount of commission earned by it and disclose the information about gross income in preparation of advertisement material and creation of advertisement and notes to accounts. They are saying, in first case they are saying only show net 20, in second case they are saying show net 20, and notes to accounts you show 100 minus 80, they are saying. LPP should recognize gross income from advertisement through media and preparation of advertisement material and gross amount payable to media and expenditure incurred for creation. Here in third option what they are saying, you recognize revenue as 100, recognize expense as 80, therefore my net will anyway be 20, therefore all the three will be accounted. That is what they are saying in the third option, guys. And fourth, LPP may recognize based on net or gross based on its accounting policy. No, AS9 never gave an option to recognize like this. So option D is wrong. It's either option A, B or C. What do you think is the right answer, guys? Now, in this question, if I am right, most of you would have taken the option as A, should recognize on net basis. Sir, why sir? Because AS9 tells in case of agents, you have to recognize only net commission earned as my revenue. You would have studied this in AS9, correct? For example, if I take make my trip, okay, in make my trip I am booking a flight, okay, let's say I am paying rupees 5,000 rupees for the flight. In this I will pay 4,500 rupees to Indigo and keep 500 rupees as my commission. Then make my trip in their financial statements, revenue will be only that 500 rupees. Or even in AS9 in the study material, first question which refers to Zomato, that revenue company, we will take only the net commission as revenue, correct? Net commission as revenue. But here this LPP is not an agent, meaning look at this, a newspaper company is there or some agency. For them if there is an agent which is LPP, then you can recognize on net basis. But here there is no concept of agent and principal over here given in the question, or nowhere they have mentioned LPP is agent. That means LPP here is the principal and LPP is a media house given in the question. Look at the question. They are saying LPP is an advertising agency which prepares and publishes advertisement on behalf of its clients. Therefore, here LPP itself is collecting the full money of 100 crores, for example, from the client, and then separate transaction with the newspaper or other media houses, they are paying 80. So LPP is getting an income of 20. Here LPP is taking the risk of being the principal of generating business and everything is on their head. Therefore, because LPP is the principal and not the agent over here, the agent net commission concept will not come here. So option 1 is also wrong, and nowhere in AS9 or schedule 3 we have learned to give commission in the P&L and break up in notes to account. So option B also is wrong. Since I am the principal over here, the answer will be LPP should recognize gross income from advertisement through media in revenue and preparation of advertisement material gross amount as payments and expenditure incurred in form of advertisement. That means they are trying to say this is the correct answer, guys. Which one? Because I am a separate entity, principal, recognize my full revenue. This is my separate expense and my net will come over here. I am not an agent. I am a principal, guys. And that's what we have over here. Look at this. Answer is option C. LPP is acting as a principal, hence revenue and cost must be recorded only at gross and not at net amount. With this, we are finally done with MCQ number case scenario 10 in our material. Hoping you are enjoying, guys. Not every case will be this lengthy, close to 20 minutes. Some we will finish in 5 minutes. Some might even take 40 minutes, guys. Depending upon the question, I am teaching you in such a way that you actually understand the entire question. If you already understood the option, you can watch as usual at 1.5 or skip the question and go to the next question, because like I've already mentioned, each question is independent. You can watch at your choice. So enjoy the case discussions, guys, whichever question you're watching. Thank you. Let's start this, guys. Case 11, which is AS 10, 16 put together. Let's start the question, which says Mars is a manufacturing enterprise which is starting a new manufacturing plant at X village. Super. It has commenced construction of the plant on 1st April 2023 and has incurred the following expenses. You tell me while reading itself, will I capitalize this or I will not capitalize this? Okay. Acquired land for installing plant. Will I capitalize? Yes, as per AS10. Incur 35 lakhs for material and direct labor for cost of developing the plant. Will I capitalize this? Yes, we will capitalize this. Company incurred 10 lakhs for head office expense at New Delhi, including rent, employee cost and maintenance. Will I capitalize this? No, I will not capitalize. So far what I am capitalizing is 50 plus 35, which is 85 lakhs. Keep this in the mind. Everybody agrees to this, guys. Okay. The company borrowed, follow, 25 lakhs for construction work at 12% per annum. Loan for the purpose of construction. We will capitalize what? The interest. Okay. As per AS 16 on 1st April. Very good. First day of the year they borrowed. Happens only in exams. Reality, it's not like that. Director of finance of the company incurred travel and meeting expenses amounting to rupees 5 lakhs was the expense during the year. Will I capitalize this travel expense? No, I will not capitalize. On 1st November during the year, the construction activities of the plant were interrupted as the local people along with the activists have raised issues relating to environmental impact of plant being constructed. We see it a lot. Sometimes they will destroy mountains and build some dams. So for that many people will protest. So protest is happening. As per AS 16, we have something called suspension of work. Correct? That suspension is categorized into avoidable and unavoidable suspension. Do you remember, guys? In that what they are saying, if a suspension is avoidable, it is within my control, then borrowing cost should not be, because I can change it. Unavoidable suspension, borrowing cost should be capitalized. Let me give an example for you to understand this. A flood is coming. Is it in my control? No. So it becomes an unavoidable suspension. Do not punish the company for things not in our control. So continue the capitalization. Like this one, strike is coming. Employee strike. It's in my control. Yes. I can end the strike soon. It's in my hands because it's directly in my control. So it is your mistake because of which work is delayed. So borrowing cost should not be capitalized. What is the standard trying to say? Things which is not in our control, unavoidable suspension, I will not punish you. Things which is within in your control, borrowing cost will not be capitalized, I will punish you. What is the life message they are saying here? What you can control, you worry about it. What you can't control, like flood, don't worry about it. Same thing applies for life. Correct? What is not in our control, we still worry about it. Yes? Yes or no, guys? Okay, we'll come back to the provision. So here 3 months there is a how many, so due to the allegation of construction activities came to a standstill for 3 months. There was a suspension. You tell me, this is avoidable or unavoidable? Avoidable or unavoidable? Strike, it's a strike, no, guys. Plant was interrupted by local people raising environmental impact. So this is what? Avoidable suspension. Are you all agreeing, guys? Why avoidable? It's in my control. Flood is not in my control. COVID is not in my control. Tsunami not in my control. This is in my control. Are you following? With the help of government and NGOs, the agitation was over by Feb 2028. Now I have a serious concern over here. 1st November 23, work started off. The strike started off. With the help of government support. How government support? How? How government helped? Company gave some gift. Okay. Fine. So with the help of government support, our recording also is going on. Sorry. Okay. Fine. So with the help of government honestly came and solved the people's problem, guys. So the strike got over in how many months? On 28th Feb. But in this period, we have how many months? No, sir. Correct. 1st November. Correct. So from 1st November to 28th Feb, there are 4 months. But they're saying strike is only 3 months. So what to take? 3 months only. That means in these 4 months, 3 months they were striking. Are you following, guys? In between some days they used to come and work. Are you following? So for me, I will only consider how many months, guys? Because question is very clearly saying 3 months. So next, then the work resumed. However, the balance on impact environment. Okay, now they are saying what the government is saying, because of you some environment is getting affected, some pollution, whatever. To fix that, they are asking you to put some equipment which is costing how much? Will I capitalize this? Yes, like pollution control equipment or water equipment, I will capitalize. So come back over here. From 85 plus 6, how much I will capitalize? 91 lakhs in total. Are you all following, guys? Now come down. Our depreciation rate is 10%. They're asking you to find the following 12 and 16 put together. Now, which of the following expense cannot be included in cost of plant? Tell me, land will include a yes. Construction material and labor cost. Yes. Head office expense. Borrowing cost. So answer is C. Let me go check. C is the answer. Okay. Are you all following, guys? Clear? How much amount of borrowing cost can be capitalized with the plant? They're asking you to find out how much borrowing cost I will capitalize. Come back above. What is the amount of loan? 25 lakhs. Amount of interest? 12%. So come here. 25 lakhs into 12%. How much you are getting? 3 lakhs. So answer is it A, 3 lakhs? No. We are not capitalizing for the whole year. How many months there was suspension? So 3 months I should not capitalize. A common mistake that you may do. So I should only capitalize for how many months? 9 by 12. So 25 lakhs into 12% into 9 by 12 I have to do. How much you are getting? 2 lakh 25,000. Sorry? 8 months, huh? Okay. The work is completed by which day? Help of government was agitation was over by 28th Feb. Incur on 31st March. Okay. Okay. So 3 months reduced. Started on 1st April. Ending on 28th Feb. Okay, let's compute in different ways. We will find. See, MCQ is all about finding the answer if you don't get it. Correct? No, I don't want to correctly solve and give you the answer. Let's try. Let's try to find the answer which is close. I don't want to look at the answer, guys. Let's try it out. So now, based on computation that we had, how much, guys? We took first 9 by 12. We all got how much, guys? 3 lakhs. Sorry, how much we got? 9 by 12, we got 2 lakh. Yeah, perfect. We got 2 lakh. 25,000 is the answer we got. Why we took 3 months reduced? Because question clearly told stand still for 3 months. But when I did this in the answer, 2 lakh 25,000 is not there itself. Okay. So I am panicking little bit. What we'll immediately do? Not exam. We will go and check the answer of ICA. ICA has given answer as B for 2 lakhs. That means now I have to try and derive ICA's answer, which is 2 lakhs. Okay, follow guys. So how do I get 2 lakhs, sir? 25 lakhs into 15%. Only if I do 8 by 12, 12%. If I do 8 by 12, I'm getting how much, guys? 2 lakhs. That means they have clearly taken the gap from 1st November to 28th Feb as 4 months. Now this is a pakka drafting mistake in the question, or how the question is framed, because clearly as per dates they are saying from 1st November the strike started, and with the help of government it was over by 28th Feb 2024. That means that time gap is 4 months. That only I told in the start. As per dates they have given 4 months, but in the same paragraph, the same institute, in the same MTP they have given construction activities came to a standstill for 3 months. Anybody reading this in prudent basis, what I will assume, 4 months there was issue, but 3 months only work was stopped. Therefore 3 months only I will take suspension. Correct, guys? Everybody following? But answer what they have done. They have taken 8 by 12. They have taken for 4 months. Now whose mistake is this? Not my mistake. I am also put in the spot. It's a framing mistake. So this comes in exam. Now what to do? If this comes in exam, you are saved. You are saved. Why? 2,25,000 option is not there. We don't have option for 2,25,000. So the nearest option is to take for 4 months and go with 2 lakhs. The real confusion will come if option D is. What to do? Pick one of these two. Pray to God that they will give you grace marks. Grace marks. But what will happen if we send a mail to ICA that there is a mistake in question paper? Nothing will happen. Next attempt will come. Okay. That's it. I can't do anything over here, guys. Fine. Are you all with me? Are you all at least supporting me in this? Okay. Come back to last one. Total cost of plant. Already we found the cost of plant is how much? 91. Correct? How? 50 lakhs plus 35, 85 plus this. Installation of some equipment, 6 lakhs. So we got 91. Is there an option for 91? Not there. But that's not the correct answer. This is not any confusion, guys. We should also capitalize. Along with 91 lakhs, what we should capitalize? Borrowing cost of 2 lakhs. Which is this? Which is that? This one. Are you following, guys? Borrowing cost of 2 lakhs has to be capitalized. So I will add plus to how much? So answer is C, which is 93 lakhs. Are you following? Last question. Amount of depreciation for the year ended 31st March. Now what is the value of asset? 93. 93 lakhs is the value capitalized as on 31st March 24. Sir, why sir 31st March 24? Come here. Equipment was installed on which day? March 24. And they have given depreciation rate 10%. So can I do 93 lakhs into 10%? Is the construction completed? Have they given anywhere in the question construction is complete? No. As per AS 10, depreciation will start when the asset is ready for use, not completed. When asset is ready for use. Anywhere here have they given it's ready for use? No. They have just given the rate. Therefore, what I will do? Depreciation will be nil. Answer is nil. Construction not completed by year ending. So no depreciation is charged. These are properly drafted. This is a very beautiful question, guys. Only thing is, what they should have done is remove this line of 3 months. Then the question is pakka. There will not be any confusion. But be happy that this came only in MTP and not in the main exam. Because as far as I know, so far main exam MCQs do not have mistakes. Correct? We don't know. Okay. Okay. Fine. Shall we do one more question, guys? Okay. Let's do question number 12, which is AS26, intangible assets. So AS26, let's start off. Intangible assets. Digitex acquired an intellectual property at the cost of 70 lakhs at the beginning of the year. And it meets the definition of intangible asset as per AS 26. That means no headache, whether it's intangible or not intangible, no headache for me. Which will, as per the calculation made by company, benefit from this IP will accrue for the next 5 years. And for the first year it will be 30%, for next 2 years it will be 25%, and last 2 years 10%. What are they trying to say? This 70 lakhs, the benefit I am going to get in the next 5 years, it is going to be 30% first year, 25% next 2 years, and then 10% last 2 years. That means I should also amortize the benefit in this ratio. In the ratio of 30 is to 25 is to 25 is to 10 is to 10. Is the total coming to 100? Pakka, super. That means I can apportion easily, correct? What to do if total is not coming to 100? Question wrong. That's it. You can't do anything. Question mistake. Okay. Fine. Year 2. The company has incurred development cost for its new product and incurred 25 lakhs at the beginning of the year. This is next year, guys. Year 2. Okay. And was of a view that it will get the benefits for next. That means in year 2, apart from 70 lakhs, they have an addition of 25 lakhs. From year 2 to year 6, you have benefits for this. This is a separate asset, correct? So first asset is from year 1 to year 5. Second is from year 2 to year 6. And for this, benefit will come for the next 5 years. They have not given the ratio. So I will presume it is 5 lakhs each year. I will presume it to be equal unless question has some other data. Are you all with me, guys? Keep repeating, guys. Are you all with me? Hello. Those who are watching recording also, keep repeating in your house. Yes sir, yes sir. I may not hear you, but keep doing it. Okay. During the year, it was found that due to change in government policies, no further benefits will be able to company from development cost. This development cost. So year 2 I have capitalized, but year 3 I understood this has to be fully written off. I should write off fully. Are you following, guys? Okay. Intangible asset is basically we don't know. See, I'll give an example of intangible asset. Elon Musk is now building this new chip called Neuralink. Okay. Which he has now demonstrated to the world by doing a surgery and putting in the monkey's head where monkey is playing games. He also demonstrated by calling a paralyzed man, putting the chip in his head, and he is now able to communicate. He cannot talk, but he is able to communicate through the system. So what he is trying to do, he is bringing communication between humans and gadgets. So if I have a chip in my head, whenever it happens, I will not do it, guys, but whoever is doing it, I can control AC off now, AC off. AC on now. How Alexa is doing it now, or in phone you are doing, you can interact with devices using your chip. So what if two people have the chip? They can talk to each other. Are you following, guys? So that means I can see whatever I want in my head. Yes. Are you all following, guys? Okay. Venkat, don't imagine what I'm saying. But yeah. Now imagine this he has proved. But imagine tomorrow it comes to existence that this is having a lot of side effects. By doing this, brain is getting damaged. Then nobody will take this, project will be scrapped. Are you following? So that is what they are saying. In first year I'm capitalizing this asset intangible because it's possible to do this. Subsequent year it's not possible. See, I'll give an easy example, all of you will understand. First to 2-3 years you're roaming with a girl or boy, you're dating them. So you got the hope, hey Samara, this is only my future. So you started capitalizing all the benefits. Then after 3 years, break up, that person, girl or boy, got married. What you will do? Write off all the memories, delete it, guys. That's it. That's what. Now you understood. Clear, guys? Okay. Year 4. At the beginning of year 4, it was found that the remaining 20% benefit from intellectual property will flow to the company in this year itself. Which one is this? Very complicated question, guys. That's why I'm taking time. In the year 4 and year 5, we have 10% left. He's saying, what he's trying to say, In year 4 I have 10%. In year 5 I have 10%. Now he's saying this 10% also I will get in year 4. So year 4 itself everything is closed. I have to write off how much? 20%. Answer the following questions. First you find out the value, guys. Can you allocate this 70 lakhs for all these 5 so that numbers will be ready? Quickly can we do it, guys? So year 1, year 2, year 3, year 4, year 5. 70 lakhs into 30 by 100. Correct? How much? 21 lakhs, round number. Thank God. Okay. 70 lakhs into 25 by 100. How much? 17 lakh 50,000. Again 17 lakh 50,000. Last 10%. 7 lakhs. 7 lakhs. Do the total. Are you getting 70 of this? Always check that. Check the totals once. Following, guys. Understand how to compute? How, sir? Last year 70 lakhs into 10 by 100. Are you all with me, guys? Understanding? Now come to questions. At the end of year 2, what will be the value of intangible asset of the company in the financial statements? He is asking how much will be capitalized. How much will be capitalized? First year we had 70 lakhs. Second year we had 25 lakhs. So what I would have actually capitalized this 70 lakh plus 25 lakh, I would have totally capitalized 95 lakhs. But first year I will also amortize. Second year also I am amortizing. So how much are amortizing in first year? Just now we found how much? 21. So I will also amortize 21 lakhs. They're asking at the end of year 2. That means I have to amortize even year 2's thing. Correct? So year 2 is how much? 17 lakh 50,000. So I will again minus 17.50. How much? 56 lakh. Is this the correct answer? No. Why it's not the correct answer? You amortized only value of this asset. You did not amortize the second 25 lakhs. Are you getting it? The second 25 lakhs each year is how much? 5 lakhs. I told you here, correct, guys? 25 lakhs equal in each year. Are you all with me, guys? Hello? Are you understanding? So if I come here, I should again reduce another 5 lakhs. You are left with how much? 51 lakh 50,000. Are you following? Check the answer. Is that correct? Okay. So what they're doing now? Okay. 51 lakh 50,000 is the book value. But what they're asking, what will be the value of intangible asset of the company in the financial statements? Again, it's again how you read the question, guys. Gross value will be 95 lakhs, but after amortization answer will be 51 lakh 50,000. You understood both. If you miss this 5 lakhs, you would have got 5650. Are you getting it? Next, let's finish the whole thing. For year 2, how much amount will be expensed in the P&L account? That we already computed just now. In year 2, how much, guys? How much? In year 2, first year will be 30%. Next 2 years will be 25% each. Now are they trying to say the ratio? Okay. So year 2, how much will be expensed in P&L, guys? Can you give me the value? This 17 lakh 50,000 plus 5 lakhs. This should be the answer. I don't know why the answer is first. We will check that in the end, guys. But this should be the right answer. Correct? 17 lakh 50 plus 5 lakhs. Third, for year 3, how much amount will be expensed in the P&L account from intangible assets in the financial statements? Say, oh, year 3, yeah, okay. Year 3, how much it is? During year 3, due to change in government policies, no further benefits will be available from
development cost. That means I should write off fully, correct? So my asset was 25 lakhs, in which already I wrote off how much? So I'm left with how much? 20 lakhs is left for me. This 20 lakhs fully I will write off. Along with year 3, how much? 17 lakh 50,000 plus 17 lakh 50. How much are getting? 37 lakh 50. Is that option 1, guys? Yes. Let me again repeat option 3 for everyone's benefit. How much will be expensed? In the first asset, how much will be expensed? This 17 lakh 50. Are you getting that? In the second asset, question says the entire value will be written off because there's no development further. So second asset out of 25, already 5 is expensed off. So what is left? 20 lakhs. So 20 plus 17 lakh 50, you're getting 37 lakh 50. This option is given correct. Okay. Option is 1. Are you following, guys? 37 lakh 50,000. Are you all with me, guys? Clear? Next, fourth option. For year 4, how much will be expensed in the P&L account in the financial statements? Come here. Yeah, come here. In year number 4, this asset is not there. We have to merge this 10% and this 10%. So I will merge how much? 7 lakhs and 7 lakhs. How much? Answer will be C, 14 lakhs. Forget the options below. There must be some error, guys. I am 100% sure about this. You also agree because it's straightforward computation. So first answer. See, what will be the value of intangible asset at the end of the financial year? It has to be 51 lakh 50 only after reducing. Here the answer is going to be 22 lakh 50,000. Here it's going to be 37 lakh 50 and here it's going to be 14 lakhs. Are you all with me, guys? 100% sure, guys. AS 26, this is how we compute. This I will change it myself. Okay. Leave those options. It will be changed in the later PDF. May 25 MTP series 2. I don't know if you guys know, but go to Telegram groups and check. Generally, this RTP and MTP ICA things, there are a lot of mistakes in answers. I don't know how many of you have noticed the answer because they have given the final letter ABCD, but they have not given the breakup computation. So this is the answer. With this, we close case scenario 12. Are you following, guys? Okay. Let's move on to case scenario 13. May 25. Deferred tax and AS 22, whatever. Expert Limited has depreciation amounting to rupees 6 lakhs in its books as per accounting records, and depreciation as per tax records is 15 lakhs. So if you see what is happening, in books of accounts, they have a depreciation of 6 lakhs. In income tax, they have a depreciation of 15 lakhs. There is adequate evidence of future profit sufficiency. Why have they given this line? This is important for creating deferred tax asset. If I go to AS 22 notes, any book, wherever you are following, guys, this has to be there, otherwise the book is not complete. In AS 22, they will mention that if you are going to create deferred tax asset, you need to ensure, especially for unabsorbed depreciation, just know it's depreciation, create DTA only if virtual certainty exists. That means they are trying to say there is future evidence profit. There is profit, so I can create DTA. If it is DTA, we don't know if it's DTA or DTL. But if depreciation in income tax is high, okay, depreciation income tax is high, books it is low, then which is correct? Income tax only is correct always. That means in income tax there is less profit paid, in books there is more profit paid, correct? So in income tax if profit is more, sorry, in books if profit is more, I have to reduce my profit in books. So I will debit my P&L and credit my deferred tax liability. We'll come to it, guys. Situation 2, further they have accrued 8 lakhs towards GST liability for the last month of the year, which is expected to be paid off by the next month as per the provisions of 43B of Income Tax Act. So when 43B will come, 43B is basically this year I have created accrual but I have not paid. So in books I will create expense, but in income tax it will be disallowed. Correct? Because it's not paid. Any expenditure of the nature mentioned in 43B, duty, etc., accrued in statement of P&L on mercantile will be allowed for tax purpose in subsequent year. That's only 43B on payment basis. Answer the following. Only two questions. One depreciation, one 43B, guys. Let's go to questions. How much of deferred tax asset or liability should be recognized as transition adjustment when tax rate is 50%? And next they're asking similar question. What is DTA, DTL recognized of transition in case of if the rate is 35%? Third question also similar. Huh? In situation 2. So first two is, this is for depreciation, this is for depreciation, correct? Huh? Situation 1, correct? Are you getting it, guys? Next is situation 2. This is regarding GST liability. They're asking you to find deferred tax asset or liability. This is a normal 4-mark question, guys. Normal 4-mark question. So you have the question. Basically, they're asking you to find in this case. Let me keep the question itself. In first case, they're asking you if it's 50% what you will do. If it is 35, what you will do. In second case, what they're asking, how much percentage? If it is 35%, what you will do? DTA or DTL. Forget the options. Compute as a normal sum. I will give you a few minutes. Here, recording, pause and compute. Now, I hope you spend some time finding it. But in an exam, you can't spend 10 minutes for this question. Because if this comes for 5 marks in separate question, you will spend 7 minutes. I need shortcuts, correct? I need shortcuts where I get the answer like that. So first what I will do in these 3 cases, I'm going to teach you only shortcut, correct? In MCQ, we are close to the exams, you are watching this. I'm not teaching you the whole standard concept. How to get the correct answer? I need shortcut, correct? Now look at this. Let me go to situation 2 first. Situation 2, it's easy, only one case. What is the amount given over here? Is there anything else in situation 2? Nothing, correct? What is the rate they gave? 35%. So what is 8 lakhs into 35%? 2 lakh. That is the only option. Done. That's it. What else to do? Are you following, guys? But they are not. Now, how much of deferred tax asset or liability should be recognized? If I am the examiner, I will give 2 options. 2,80,000 deferred tax asset, 2,80,000 deferred tax liability. Then you will be confused. This is where concept will come. Otherwise, in this question, we always apply percentage on the difference amount, which is 8 lakhs into 35%. Now I'm coming to the concept. Straight away answers 2,80,000. What is the concept? First of all, will a deferred tax difference come here or not? Simple. This GST in books of accounts, year 1, year 2. In year 1, I am showing as expense, correct? In income tax, I will disallow in year 1 and year 2 only I will allow as expense when the year it is actually paid. They haven't told which year it is paid, correct? So since there is a disallowance this year, there is going to be a timing difference. Therefore, definitely I have to create deferred tax liability or asset. Therefore, I am creating DTA or DTL. That means nil will not be the case because there is going to be a difference and I am going to pay in the future. Now, how to find it is DTA or DTL? I will give you a shortcut, guys. I will give you a shortcut. Zero logic in this, but this will work in 10 out of 10 cases. Logic, I explained this in the detailed class. I need half an hour to communicate the logic to you. What is the shortcut? Very simple. Books, profit, income tax, profit. Write down both. In this GST scenario, simply assume book profit is 10 lakhs, income tax profit is 10 lakhs. Any number, assume both are same. Now, because of GST, in book profit, the expense is already allowed. After reducing an expense only, I am showing 10 lakhs, correct? But in income tax, I will add back. I will add back how much? 8 lakhs. Are you getting what I'm saying, guys? See, 10 lakhs is an assumption. You can be without taking 10 lakhs assumption also. Then, the revised profit here will still be 10 lakhs. Here it will become 18 lakhs. That means, can I say income tax profit is more than book profit to the extent of 8 lakhs. Are you following? Are you agreeing to this alone, guys? So income tax is higher, book profit is less. Are you agreeing, guys? So this is the shortcut. Income tax is high by 8 lakhs, book profit is low by 8 lakhs as per AS 22. Which is correct? The shortcut I gave. Anybody knows the shortcut? Which is correct? This is shortcut. Don't ask me logic why. Income tax only is always correct. Okay. So I will keep income tax high at 8 lakhs. Which is wrong? Book profit is wrong, 8 lakhs. So always in life we have to go from wrong to correct. We have to go from wrong to right. So that correction I will do only in my books. Correct. Now I have to increase my books also by 8 lakhs, so that only if I add 8 lakhs here, both will become 18 lakhs. So in my books, in my P&L, I have to add how much? So if I have to add 8 lakhs, I will credit to P&L. So if I am crediting P&L in my books and adding 8 lakhs, what will debit? Deferred tax asset. Are you following? Are you understanding the shortcut, guys? I will again repeat. I'll repeat, guys. Follow with me. Income tax is higher, books is low. As per my shortcut, which is correct? Income tax is correct. So from books I have to go to income tax. So to increase 8 lakhs, I will credit P&L and debit deferred tax asset. Are you all following, guys? Understood? Therefore, in this question, it is 2,80,000 deferred tax asset. Got the shortcut? I'll tell you one more shortcut. See, we are focusing exam. Okay, this is a what to say, like a marathon for you guys in MCQ. Okay, whenever 43B comes, you don't know answer. 43B came, deferred tax asset. I'm giving you what to say, shortcuts, not the right way to learn, but I taught you concept also. Taught you shortcut. 43B comes means generally it's a deferred tax asset. Are you following, guys? Understood? Now apply the shortcut in the first example, depreciation example. Okay, 6 lakhs and 15 lakhs. In books, how much it is? Okay, in books, let me write that fast here. Books, income tax. In books, depreciation is, income tax depreciation is, let me assume the income in both the places before depreciation is 20 lakhs. 20 lakhs. Simply for my computation purpose. Are you getting it, guys? So revised income in books will be 14 lakhs. Revised income here will be, what is the difference? It is the same difference of depreciation, 9 lakhs. Are you understanding? You can do it straight away also. Now you tell me, income, which is higher? Books is higher at 14 lakhs. Which is low? Income tax is low. Which is correct? I told you shortcut. Income tax is always, which is wrong. Books is always wrong. So in books, I have to make this 14 lakhs as 5 lakhs. That means in my books of accounts, in my P&L account, I have a net profit of 14 lakhs. Correct? 14 lakhs is there. But I should make it how much? 5. That means I have to debit by how much? 9 lakhs. So my entry will be P&L account debit 9 lakhs to deferred tax liability 9 lakhs. But I will not debit the difference. I will debit the difference into tax rate. So 9 lakhs is the difference. That is the timing difference into tax rate. How much? How much? 50%. How much you get? 4,50,000. I will create a deferred tax liability. Are you following? See, we are in MCQs. In foundation maths, I don't know if you remember the concept. Shortcut a formula put, you will get the answer. Correct? I want the same thing over here in this sum in MCQ. So come down over here. I am doing how much? 9 lakhs plus my difference into 50%. How much? 4 lakhs. This is a good question. So 4,50,000 deferred tax liability asset. You understood logic? Now you come here. Here also I can tell you the same question, rate is 35%. So 9 lakhs into 35%. How much is that? 3,15,000. Liability asset. Deferred tax liability. Correct? Are you following, guys? Are you understanding? Hello, all of you with me? Got the shortcut? In the shortcut, don't ask me logic. Logic, AS22, sit for 2 hours, get the logic. Are you following, guys? Will shortcut work in all the sums of AS22? Pakka it will work in all sums. Except where there is math. Math credit also it will work, but you should be a little more smart over there. But it will work, guys. Come down. Oh, one more question is there. Okay. So all the options are, sorry, one more question. What is the question? In assessing whether there is any indication that an asset may be impaired, an enterprise should consider indication from the internal sources of information. Okay, something related to impairment as part of this question. Okay, that means it's not there in the case study, but it's a standalone MCQ. Standalone MCQ for impairment. Following indicators from internal sources of information during the period assets market value has declined significantly more than. This is external. Market value decline is external indicator. Market interest rate, this also is external indicator. Carrying amount of the net assets of the reporting enterprise is more than its market. This is what again? External indicator. Market vandale external. Evidence is available from internal reporting that indicates that economic performance of asset is worse. What is this? Internal indicator. You remember in AS28 they will talk about internal external indicators of impairment. Here first three are what to say? External. Fourth only is impairment. Are you all with me, guys? So come down. The answer is internal source listed here. Others are all external. 413. For this one, first one workings we just know did. Correct? 9 lakhs into 50%. We get how much, guys? 4,50,000. Are you following, guys? I kept in red because in soft copy I will change it later. But this is the answer. Are you all clear, guys? Okay. We'll go to the next question. So let's start off with case 17, guys. This is cash flow along with internal reconstruction. If you come down, J has given the following information below. Some balance sheet is given over here. Additional information given by J Limited. On 31st March, it decided to do reconstruction for which a necessary resolution is passed and some adjustments are given, guys. There are some adjustments. So all these relates to internal reconstruction, which is happening on which day? 31st of March. After that, next, in addition to the above, on 1st April only, there are some cash flow adjustments. Let's write down one by one what each is. Interest received on advance given to suppliers. What type of activity is this? Operating activity, because I am receiving interest from suppliers, I am getting it. If the same interest is coming from bank or something, it becomes financing. Tax liability settled at 14,000. What is this? Operating. Generally default question is silent. Now I will take tax as operating. But if they give capital gain tax, then it becomes investing. If they give tax on, let's say, TDS on interest deducted, then it becomes financing. Next, debtor, 40% is insolvent, 40% of his dues are recovered. Of course, operating, because debtor is my core operation. Dividend is received on investment. Dividend on investment, so it becomes an investing activity. Part of plant and machinery is sold at a loss. This also is investment. When financing will come? Only if you're borrowing money, repaying the loan, buyback of shares, redemption of preference shares. That's when financing comes. They're asking 4 questions. Beautiful question, where first internal reconstruction is happening and then cash flow is happening. So depending upon the question, we have to solve. First one, they're asking only for cash flow. How much is cash flow from operating activities? Since they're asking only from cash flow from operating activities, I don't have to go for internal reconstruction adjustments. Let me come here. First, the interest is received, correct? So I'll have a positive 3,000, correct? Inflow plus tax liability is settled at 14,000, so minus 14,000. Then debtor paid me out of 40,000, he paid me only 40%. So 40,000 into 40% is how much? Plus 16,000. Are you all with me, guys? Understanding? Plus 16,000. So this is what we have in total. Next two are investing activities. So what is the cash flow, guys? -1 plus 16, how much? So here you have negative 11, yeah, positive 5,000 you are getting. So answer is going to be 5,000. Are you all with me, guys? This is easy. Next is amount of cash flow from investing activities. Come above, you have two adjustments for investing. Dividend is received on investment in Star Limited. So my company has invested in some other company. Go above. You will find investment in Star Limited. How much, guys? 10,000 shares of 10 each. And what is the dividend given? 1 rupee per share. So for investing cash flow, first I will write 10,000 because for 10,000 shares, each share I am getting 1 rupee. Are you all with me, guys? Okay. Next, part of plant and machinery is sold at a loss of 3,000. Book value is 15. That means I sold for 12,000. I don't care about loss here. How much money I got? Plus 12,000 because 15,000 worth of asset is sold for 3,000 loss means 12,000. So 10 plus 12 is how much? 22,000. Go check. Do you have 22,000? Yes. 22,000. But be very careful here. One mistake that you may do is you are taking dividend receipt from shares, 10,000 shares, 1 rupee per share. You have to be very careful. In these adjustments below, if they had given for the purpose of reconstruction, if some shares were sold, if the investment shares are sold, if they are given something like that, okay, then you have to reduce that dividend because you don't have those shares, correct? Thankfully, in this sum, they have not gone that much complicated. Maybe after a few years, they will do that. Okay, before that, you will clear, guys. Okay. Third one, what is the amount of closing cash on 1st April? That means I need to prepare one ledger, which is cash account, and this cash account should be after reconstruction and after cash flow statement. Come to next one. Generally read all the questions to see if you can merge them together. Next one, balance of equity shares after internal reconstruction. So I need to prepare one equity share capital account. No need to prepare balance sheet, just my rough workings, correct? Now let me do it together. Yes, all okay. So first, opening cash is 65,500, correct? What is opening share capital given in the question? 50,000. So I will write here 50,000. Are you all with me, guys? Now adjustment by adjustment, I will see where the impact is coming. First one, debentures are settled by issuing them 15,000 shares of 10 each. Will this impact my cash account? No. This only will impact my equity shares, and my shares are increasing by 15,000 into 10. By how much increase of shares? 1,50,000. So I will come to my equity share capital account and add how much? Are you clear with this? Easier. Like this I have to go adjustment by adjustment. Some will be irrelevant adjustments. Equity shareholders give up 40% of their capital in exchange of allotment of new 11% debentures. What is 40% of their capital, guys? Go above. 50,000 into 40% is how much? 20,000 they are going to give up 40% of their capital. So 20k again will reduce here. Are you following? It's just rough working. Don't expect presentation from me in MCQ. Normal sum itself I will not do it, guys. Okay. Now come back. Balance of payable to be written off. Very good. No use for me in this question. Equity shares issued for. So I got cash of 1 lakh. So it has a double impact. Plus 1 lakh here in cash. And equity share also will increase by how much, guys? 1 lakh. Are you all with me, guys? Following. Now come to the remaining cash flow adjustments which you already did. Interest is plus 3,000. Tax is minus 40,000. Help me with that, guys. Interest is plus 3,000. Tax paid is minus 14,000. Are you all with me? Okay. Next. What is the next one? Plus 16,000 plus 10,000 plus 12,000. Correct? So plus 16,000 is for debtors. Then again plus 10,000 is for dividend received. And again plus 12,000 is for what? Sale of machinery. Are you all with me, guys? So you find out what is the closing cash now. 1. Are we getting that? It came in what I did. So 1,92,500. Are you all with me, guys? Hello? This is the answer. What about the equity share capital closing balance that we are getting here? This is 20. It's 20, no? Is it 20 then? Huh? So 2 lakh, 3 lakh. Any other shares there? Huh? Okay. So how much are we getting equity here? 2 lakh is the answer. Huh? What is the answer here? None of the option has that. So must be question error. Let me just check one more time. Anything else with respect to equity? Let's just check once before we conclude that. Previous year paper September 24. Okay. Equity shares 50,000 rupees only they gave, no. But if I put as 5 lakhs, it's tallying, huh? Okay, so then I'll do one thing. Let me keep it as 50,000 into 10, which is how much? 5 lakhs. And in 5 lakhs, 40% is 2 lakhs, correct? Huh? So I just have to add one more 0 here and one more 0 here, correct? So 5 lakhs plus 1 lakh 50 plus 1 minus 2 lakhs. Now how much are you getting? How much? 5 lakh 50 is coming, huh? Sure, guys. So 5 lakhs plus 1 lakh 50 plus 1 lakh will give me 5, 6, 7 lakh 50,000 minus 2 lakhs will give me 5 lakh 50. So answer is C, which is 5 lakh 50. Are you all with me, guys? Understood now? Okay, clear? Anybody has a doubt in this question before I proceed to next one? Question 17, anybody has a doubt? Hello? No? Okay. Let's start question number 18, previous year paper, Jan 25. So now we have moved on from September to Jan. So all the Jan friends will have deja vu here. AS 10, 12 and impairment. On 1st April 2019, Black Limited received a government grant of 15 lakhs for acquisition of a machine costing 50 lakhs. That means 50 lakhs machine, they got how much, guys? That means effectively they paid only 35 lakhs. Why am I hearing calculator sound for doing this computation? Okay. The grant was credited to the cost of the machine. The life of the machine is expected to be 10 years and estimated residual value is at the end of 10 years is 5 lakhs. So far nothing complex. It's like a basic question. Grant came, credited asset, life of asset, residual value they gave. Super. The company is charging depreciation on straight line basis. Due to non-fulfillment of conditions, we are refunding on 1st April 2021. After how many years? Look at this. So 1st April 19, refund is 1st April 21. In between I have 1920, 2021. That means I have to do depreciation accounting for 2 years before I do refund. Again on 31st March 2023. Okay, that is again on 31st March 23. Again after 21, 22, 22, 23. After 2 more years, that means we have 4 years timeline. Okay, Black Limited received certain indicators of impairment of the machine and recoverable amount was only 28 lakhs and revised useful life of 4 years with nil residual value. On 1st April 2024, 5th year starting, company exchanged the machine by paying cash of 2 lakhs and new machine valued 18 lakhs. Answer the following questions. Beautiful question covering AS 10, 12 and impairment. From where ICA took this question, I will tell you from CA final book. I take class for CAFL and impairment we have this question. They have just copied that question, pasted it over here, gave it to you as MCQ. Enjoy, pass the exam question. Okay. Exam question, this is not RTP, MTP guys. What are the questions they're asking? What is the carrying amount on 31st March 2021? So first thing they're asking after 2 years. Before grant, before refund of grant, before impairment, nothing. Basic. Next, what will be amount of depreciation charged for the year ended 31st March 2022? And then what is the amount of impairment loss? Amount of loss on exchange. So basically if you do the whole timeline, the whole sum will get over. Very easy. Take a few minutes. Try it out by yourself. Then I will solve the whole sum in detail. Recording fellows also. Try it out guys. Otherwise you lose the fun of learning. Fine. Let's resume with the sum guys. I'll go question by question instead of doing the whole sum at once. Question 1 is what will be carrying amount of the machine as of 31st March 2021 after charging depreciation for the year. What I have done, I have created a timeline of this 4 years so that it becomes easy for us. First on 1st April 2019, they purchased the machine for 50 lakhs. After a grant of 15, they paid only 35 lakhs. Is this clear guys? So in the beginning I paid 35 lakhs. What is the useful life given in the question? How much? 10 years is given and salvage value is 5 lakhs. So let me first find what is the normal depreciation. So 35 minus 5 lakhs divided by 10 years, you get how much guys? 3 lakhs per year, correct? Are you following guys? We get 3 lakhs per year. So for the first year, my asset will be 35 lakhs minus 3. For the second year, it will be 35 lakhs minus 3 minus 3. Are you all with me guys? 35 lakhs minus 3 minus 3. How much are we getting? 29. Correct. This will be the value as on 31st March 2021. When is the refund happening? Only on 1st April of 2021. So let me go to the first question. What is the value on 31st March 2021? It is simple. So 35 lakhs minus 3 what we just computed, we get how much? 29 lakhs. And for that only the answer also is D. Same workings also is available over here. Are you following guys? In a rough working. Next, second. What will be the amount of depreciation to be charged for the machine for the year ended 31st March 2022? Next year they are asking. But before the next year, what is happening? On 1st April 2021, grant is refunded. So I have to add back how much? 15 lakhs. So let me go back to our main working. Look at this. From 31st March, where it is at 29 lakhs, on 1st April 21, I am going to add back how much? 15 lakhs. Correct? On 1st April 21, I will add back how much? 15 lakhs. So I will be left with how much? 44 lakhs will be the value on 1st April 21. How many years are already completed? 2 years. How many years are left? 8 more years. So I will do 44 lakhs. Is there any change in residual value? Nothing given in the question. So minus 5 lakhs divided by how many years left? 8 years. Now what will be the depreciation per year? 4 lakh 87 500. So as on 31st March 2022, after 1 year, my value will be 44 lakhs is the value of asset minus depreciation of 4 lakh 87 500. I don't know if it's correct. I'm just going to check guys. I'm doing it with you. How much you're getting? 39 lakh. Is that correct? Oh, depreciation only. So what is the depreciation? 4 lakh 87 500. Do we have 4 lakh 87 500? Yes. Come down. 4 lakh 87 500. Are you all following guys? Okay. Leave this. Come back here. Are you all with me? Hello? Okay. So to summarize again how you got 4,87,500, we just took 29 lakh, added 15 lakh, we got 44 lakhs. 44 lakhs minus 5 lakhs divided by 8, we got 4,87,500. Are you all with me? Hello? Super. Next, what will be the test of impairment? How much is the impact of test of impairment to the company? How much is the loss? Now, when is the impairment happening? Careful. It is happening only on 31st March 2023. So now I have to travel and go to 31st March 2023. Okay. So from 44 lakhs which we found out, we have to reduce depreciation for 2 years. Each year I will reduce how much? 4,87,500. What is 4,87,500 into 2? Hold on 1 second. Okay. So I will do 44 lakhs, which is on this day, correct? 31st March 21. I have to do depreciation minus for 2 years. So I will minus 4,87,500, again minus 4,87,500. So how much you are getting? 34 lakh 25. 34 lakh 25,000. Use Calci and check, guys. That's what you will get. Coimbatore students are correctly saying. Online students, if it's wrong, don't ask me. Okay. So 34 lakh 25,000 is the book value on 31st March 2023. On this day, what is the recoverable value? 28 lakhs is my recoverable value. So recoverable value is 28 lakhs. If I reduce this, because no recoverable value is lesser. So if I reduce, how much is going to be my impairment loss? 6 lakh? 6 lakh 25,000 will be my impairment loss, which I will debit to P&L because there is no revaluation gain earlier. If there was a revaluation gain, I would have adjusted initial MCQs. Correct? So 6,25,000. Come back over here. Where is it? Answer 6,25,000. It's available. Go and check. Answer is C. Forget the workings, guys. Okay. Recording students, follow the workings. This is your workings. Okay. Later in the soft copy, when you download it, it will be updated for you guys. Those who are watching a recording, don't worry about that. What I'm doing workings here will be updated there. Okay. This is question number. No. Point 3. One more is there, I think. Okay. What will be the profit or loss on exchange on 1st April 24? First of all, what is the new value on 1st April 24? Just now we found out. We did impairment on 31st March 23 and we arrived at the new carrying value after impairment loss. What is the new carrying value? 28 lakhs. Correct? So the revised carrying value on this day is going to be how much, guys? 28 lakhs. Now what is happening? Follow. This 28 lakhs only, I'm taking it down, guys. This is on which day? 31st March 23 or nothing but 1st April 23. The asset is now worth 28 lakhs. What is the exchange given in the question? Follow. What they are saying, the company exchanged the machine. Enough of this machine. Grant refunded impairment. I exchanged this machine by paying cash off 2 lakhs and getting a new machine worth 18 lakhs. How to pass this entry? Look at this. 2 existing machinery. Correct? Existing machinery, I am throwing it out. So that machinery fully or old machinery, I am just passing journal. 2 old machinery, 28 lakhs. Apart from this, poor company is also paying cash of worth. For this, I am getting new machinery account debit worth how much only? 18 lakhs. That means my machine is a dabba machine. That's why I am exchanging it now. So I am getting a new machine worth 18 lakhs. That means P&L account debit. My loss on exchange is how much? Balancing figure how much? 12 lakhs is the loss on exchange. Do we have a 12 lakhs here? Hold on 1 second. 12 lakhs is there, huh? Not there. That's why they said answer No correct option. First step depreciation. 1st April 24. Okay. Okay, fine, understood. So, okay. Now I have solved the whole sum. What I have solved is correct if it is 1st April 23 exchange, but I missed it. Okay. So, the exchange is not happening on 1st April 23, it's actually happening on 1st April 24. That means this is going to be year 1, 2, 3, 4, 5th year. I am doing computation now for the 5th year. Are you following up? So for 5th year means what I have to do, the revised value will be 28 lakhs. What residual value? No, at this point 5 lakhs, correct? At this point 5 lakhs, beginning of question. How many years are left still? Is the depreciation correct? Nil, this 5 lakhs you don't want to take? Oh, okay. Fine. Residual value is nil. So let me do it freshly, guys. Don't worry. What we did earlier is fully correct. If the exchange is happening on 1st April, loss is 12 lakhs. Imagine it's a hypothetical question. But as per our question, exchange is happening on 1st April 24. But I have value only on 31st March 23, which is 20. Now this 28 lakhs they are given, residual value is nil divided by 4 years left. So what is 28 by 4? 7 lakhs with or without calculator, same answer. Okay, 7 lakhs is what we are getting over here, guys. Now on 1st April 24 my revised asset is going to be 28 lakh minus, you are ending up with, correct, 21 lakhs. Now this only I am going to exchange. Let me come above and change this journal entry because values are similar. Okay, so old machinery is how much now? 21 lakhs. So I'll write 2 old machinery 21 lakhs. 2 cash how much? New machinery I'm getting is 18 lakhs. Therefore loss 5 lakhs is my loss on exchange, which is the actual correct answer. 5 lakhs is there at least. 5 lakhs is not there anywhere. That's why ICA itself told no correct option. Are you all following, guys? Will they give? Okay, very good question from name Vikash. Previous year paper Jan 25 also. No correct question. They should have given grace marks. Anybody who got certified copies can check. But you won't know MCQ, correct? So we will never know. Okay. Understood, guys? Mostly they will give it, guys. That's how you can tell yourself and console yourself and feel good about everything. Okay. So the actual answer is how much? 5 lakhs. But if the same thing came in exam, you will be in stress, no? You will be in stress, sir, because when you solve this in exam, now you know no correct answer because ICA released it. But in exam, you would have got 5 lakhs. Or even like me, you would have got earlier that whatever 12 lakhs. You look at the options. None of the options are matching. You will waste time. Can't do anything, guys. This is, ICA is doing it intentionally or not also, we can't speculate. Okay. We can finish. Okay, we will not discuss all that. Recording is going on, guys. Recording, I'll often discuss all of that. Okay, fine. With this, we are done with question number 18 successfully. Anybody, any doubts in this before I close? Each question is taking 15-20 minutes, guys. Okay, but is it worth it with the time we are spending? Perfect. Okay. Let me start the next question. Question number 22 or case 22. Previous year paper, May 25. You can recollect. Good memory or bad memory? Good memory, I will not be here. Okay. Yeah. Fine. Health India incorporated under Companies Act is engaged in the production and distribution of medicines. It has manufacturing plants at Himachal Pradesh and Bhopal. It also imports medicines from New York. On 1st Jan, its HIL sold 2 lakh strips of medicine to D Limited for rupees 50 lakhs on 60 days credit. Cost per strip of this medicine was rupees 20. That is total cost 40 lakhs, 2 lakh strips into 20. We need to understand the question till here first of all. Okay. Totally they purchased how many strips, guys? For 50 lakhs on 60 days credits. Cost per strip was 20. So total cost is how much? 40. That means I just had to pay 2 lakhs into 20. I had to pay only 40 lakhs. But why did they pay 50 lakhs, sir? Are you following? Hello, 50 lakhs is selling price. It is sold to D for 50 lakhs, sir, but it is purchased at what price? 40. Are you following? Purchased at 40, sold at 50 lakhs. So my profit is going to be 10 lakhs. D paid 20% of the amount due on 5th Jan in March 2024. D is having significant cash flow issues and is trying to raise funds through bank loan to run its operation. This line is very, very important. Having significant cash flow issues will impact how we are accounting for AS11. Okay. Next, it is unable to do so and not able to release the payment. Subsequent to this, it has gone to liquidation on 15th of March itself. Okay. At the time when medicines was sold by HUL to D Limited, there was no reason for HIL to believe it will not be able to collect the proceeds from D Limited in the future. From where is HIL getting the money? Oh, HIL is manufacturing and selling. So for me to summarize the question so far, okay, HIL is selling to D Limited. For HIL, the cost is 40 lakhs. They sold it for 50 lakhs. While selling, D Limited was in a good position, but now they have cash flow issues. So whether they will pay HIL itself is a doubt. That means AS9, revenue recognition also is coming here. Uncertainty in ultimate collection. Are you able to follow, guys? Okay. On 1st April 2023, next year starting, HIL made investment of 200 lakhs in the equity shares of Rose, some other company. So let me write down HIL in Rose. How much they made? 50%, huh? No, 200 lakhs. Of which 50% is made in long-term category, long-term investment, and rest as temporary current investments. Okay. So in this 200 lakhs of investment, we are classifying into two types. 50% is long-term, 50% is short-term in rows. I am just trying to summarize the question. The realizable value of all such investments on 31st March has become 50 lakhs. Full investment value itself dropped, even current term and long. As Rose lost a copyright, from the given market conditions, it's apparent that the reduction in value of investment is not temporary in nature. That means it's a permanent decline. Why they don't use the word permanent decline? Because they can say nothing is permanent. We don't want to use negative language. So AS13, instead of using negative language permanent, they use the word not temporary. Permanent dana. Okay. Okay. HIL imported machines from Pharma Limited for a sum of $250,000. So HIL also is purchasing on 1st Jan 2024, beginning of the year, correct? Yes. HIL released the full payment on 17th April. Some other transaction. Which transaction we are talking about? HIL is now purchasing from whom? Pharma Limited. Huh? Some other transaction. Pharma? Some company. Pharma Incorporation. Okay. Yeah. INC is incorporation. In US they call it as INC incorporation. Here we call it as LTD. Okay. So some other transaction they purchased for $250,000 on 1st Jan, but they made the payment only on 17th April. So here what will come? AS11 on the date of transaction 1st Jan. What is the rate? 81. So I will record the liability at 81. Then on 31st March you have to do restatement of liability, and on 17th April you are making the payment. Are you able to follow, guys? It's a simple question. Again I will repeat. On 1st Jan I am recording liability at 81 per dollar. On 31st March my liability has decreased to 80. That means I have a gain on restatement. What is my gain? 1 rupee per dollar, 2,50,000. Again when I am making the payment, dollar became 79. So again you have a gain of 2,50,000. That means my overall gain in this transaction, forex gain, is 5 lakhs credited to P&L, but 2,50,000 is for previous financial year, 2,50,000 is for the next financial year. Are you following? See, I don't have to pass journal entries. I'm doing MCQ. Answer: my total gain is 5 lakhs. How, sir? When I accounted liability, it's 81. When I'm settling, it is 79. So 2 rupees gain. 2 rupees into 2,50,000. 5 lakh is the gain, split between 2 financial years. Clear? Okay. HIL is working on a strategic plan to close the production of Bhopal due to change in technology. Close pandranga Bhopal. Board approved the closure on 1st March. AS24 is coming. Okay. Maybe, I don't know. Yeah, AS24. The company did a formal announcement regarding the closure to the affected parties on 10th March 2024. And the company entered into a binding sale agreement on 21st April. Reporting date of the company is 31st March. Based on the information in the above scenario, answer the 4 questions. So additionally, I will also write here. Look at the AS covered here plus AS 24. So 9 is covered, revenue recognition. 13 is covered, current and long-term investment. 11 is correct. For what to say? Forex, it's not 4 actually, it should be 24 over here. I don't think 4 is covered. Correct? Let's go to the questions. Okay. I'll give you a minute, maybe go through and try to solve it, and then we will discuss. I gave a brief. This is the kind of understanding you should have when you read a question. Now try it. I want you to try it because it should not be a class where I'm giving answers, you're listening. Apply your knowledge and then we will discuss. Okay, let's proceed to the questions, guys. Question number 1. How will the recognition of revenue from sale of medicines to D Limited be done by HIL under AS9? And what is the treatment of the unrealized amount? Now, on the date of sale, which is which day? When is the sale happening, guys? 1st Jan. On 1st Jan, is there uncertainty in ultimate collection or uncertainty in amount? No. In fact, look at this, guys. On which day? 20% was paid on 5th Jan. That means first what I would have done, I would have recognized the whole revenue, guys. I will recognize the whole revenue of 50 lakhs. In balance sheet, in P&L I will recognize fully. And in balance sheet, under trade receivables also I will have 50 lakhs. Later this party paid how much? 20% they have given. Look at this, they have given 20% is paid. So this 20% is how much? Cash 10 lakhs would have been received. So my revised trade receivables will now become 40 lakhs. But subsequently later the party is not able to make the payment. So if they are not able to make the payment, what I have to do? Write off as bad debts. So what will be my bad debts, guys? 40 lakhs I will write off. My question is, can I be without recognizing revenue itself? No. At the point of sale, general condition of AS9 says no uncertainty in amount, no uncertainty in ultimate collection. Both of this was not there. Only subsequently which day? Look at this. In March only, I told the word is very important. Having significant cash flow issues. Only after 3 months this happened. Are you following, guys? So first answer will be, revenue will be recognized for 50 lakhs. Subsequently under this amount of 50 lakhs, no. Bad debts is not 50, bad debts is 40. Revenue for 40, subsequent 40, no. This also is wrong. First two are wrong. Okay. Next, third one, revenue recognized for 50 lakhs, correct? Bad debts unrealized is how much? 40. This is correct, guys. Last one, what is mistake in that? Again, revenue is not for 40, guys. Are you following, guys? Are you all with me? Understanding till here? Next, second question. How will you value the reduction in value of investments? Here, how much have we invested in investments over here? 200 lakhs. So long term will be 100, short term will be 100 because it is half of. Now my total investment is 200. In the question what they have told, in the question they have mentioned that, yeah, they have mentioned that the revised investment value has now become 50 lakhs. So 200 lakhs has dropped to 50, which is a permanent decline. So that means 200 minus 50, sorry, 200 minus 150 loss. My revised value is, that means my loss is how much? 150. Loss is 150. I have to allocate it equally because 50-50. So I will allocate here 75, here 75. 50-50. Are you following? So 75 here, 75 here. I will be left with 25 in both. Now this loss, will I debit to my P&L account? Yes. So when I will not debit to P&L, be very careful. If they say for long term, this is only a temporary decline. I'm again repeating. This is only a temporary decline. Then I will not account for loss for long term. Short term I will anyway account. Are you following, guys? See, again let me summarize. Look at this. Short term, long term. In short term, any fluctuation will be accounted. In long term, only a decline which is permanent or the wordings other than temporary will be accounted. Here the entire losses other than temporary which is permanent, therefore the full loss of 150 is allocated as 75-75 between the two. Which option is 75-75? Let me go check, guys. If I go check over here, it's not 50 lakhs. Okay, so which one? Reduction of 75 lakhs in the carrying amount of investment will be charged to P&L account. No impact in long term. No, this is not the correct one. Reduction of 75 will be charged to P&L and reduction of 75 of long term also will be charged. So this is the correct one, guys. C is the correct one. Then no need to check the last one. Let's see what they're saying in last. 75 will be charged to P&L, correct? Other 75 will be charged to capital reserve account. No. Any loss will go to P&L account. Are you all following, guys? Question is done. Next, third one. Ascertain the value of exchange loss or gain. We already accounted this while reading the question itself. Loss is how much? 5 lakhs, but 2,50,000 each year. So look at this. Amount is gain is 5 lakhs. So 5 lakhs gain should be credited to the profit and loss account. Oh, as of 31st March, fine. Total gain is 5 lakhs. So for this year, 2,50,000 will be credited to the profit and loss account. I'm just showing how to make mistakes also. Okay, fine. Last one, what would be the IDE, initial disclosure event? This is going to AS24. So let me go to AS24. AS24 has one theory concept which says, what is initial disclosure event? Earlier of two things. One is board approval of formal plan and public announcement. If this happens first, or enterprise ending into a binding sale agreement. To make you understand this easily, what is this? Left hand side is like arranged marriage. When somebody, family decides and then you make public announcement. When you get married, either arranged marriage takes place or second, the entity itself, by themselves they enter into a binding sale agreement and then the world will know. So when you get married, whichever is earlier, are you following? Like that for an entity for discontinuing operation, either board approve, whichever date is earlier. Go to this question. I don't want to go much into concepts in MCQ, guys, otherwise this will become too long. Go to question. Yeah, over here if you see, I'll erase the whole thing. Let's try to find out which date it is. Look at this. Strategic plan of closure. Okay, very good. Board of Directors approved the closure on 1st March. So board approved on 1st March. Look at this. Board approval is on 1st March. But it is 1st March and public announcement. So come back over here. The company did a formal announcement on which day? 10th March. So I will again come back over here and write down 10th March. So which day left hand side I will take? 10th March, because both are completed on 10th March. What about right hand side? In right hand side they are saying entered into a binding sale agreement only on 21st April. So right hand side is 21st April. We have to take whichever is earlier. So my answer will be 10th of March, come down. Do you have 10th of March? 10th of March is the correct answer. Go and check. Answer is D. IDE when formal, communicate to stakeholder. Okay, leave this guys. Basically, whichever is earlier. Are you all following? Clear? Understanding guys? Okay. With this, we are done with question number 22 also. Before we move on to the next question. Let's continue with model test papers questions now. Case scenario 24 guys. Let's start off. Seas Limited, the company, is in the business of tours and travels. It sells holiday packages to the customers. The company negotiates upfront with the airlines for specified number of seats in flight. The company agrees to buy specified number of tickets and pays for those tickets regardless of whether it is able to resell all those in package. So what's happening in this question basically guys? This company called Seas is booking, let's say for example, 100 tickets with Indigo or whichever flight, and then they will resell to the customers. They are going to resell to the customers. Whether they get booked or not is a risk for them. See, if Seas is able to resell 90, 10 seats are lost. Indigo doesn't matter because they are anyway getting all the seats sold. Now, the rate paid by the company for each ticket purchase is negotiated and agreed in advance. That means for each ticket 4K or whatever. Fine, good. The company also assists the customers in resolving complaints with service provided by airlines. Now, why will somebody prefer booking with the Seas? Imagine Seas is like Make My Trip, okay, where you can book flight tickets. So why somebody is booking with Make My Trip? Because the service is better. The booking experience is better than booking with Indigo in terms of cancellation, refund, all of that, okay. However, each airline is responsible for fulfilling obligations with the ticket. Of course, Make My Trip or Seas here can help you in the booking only. But who will provide the service? Airline only, okay. Including remedies to customer for dissatisfaction, all of that, fine. Company bought a forward contract for 3 months for $1 lakh on 1st March when the US dollar rate is 83, sorry, for $83.1 when the exchange rate was 83.02. On 31st March when the company closed its books, exchange rate was 83.15. On 1st April, company decided to for premature settlement of the contract due to some exceptional circumstances. The company is evaluating the below mentioned schemes. Now, when did they purchase the forward contract? On 1st March. For how much? 83.1 when the rate was 83.02. So whenever we purchase a forward contract, we have to check what is the spot rate, we have to check what is the forward rate as per AS 11 guys. So what is spot rate? Spot rate is today's date. When I entered into contract, what is the rate? So on that day it is 83.02. 83.02. What is the rate for future? 83.10 is the rate for which I purchased the contract. Sir, what do you mean by forward contracts, sir? For those of you who don't know what is forward contracts, understand, forward contract basically means irrespective of the actual price of contract, irrespective of the actual price of contract in the future contract can be 83.02, it can be 83.15, it can be 84, it can be 85. I don't care. Whatever the rate is, I will settle at this particular rate. So why do people enter forward contracts? To reduce the stress, to escape from the fluctuations, to fix a specific price. So next to what scheme? Introducing a formal retirement gratuity scheme by employer in place of ad hoc scheme. Some accounting policy change or not, we have to see that. Management decided to pay pension for those employees who have retired after completing 5 years in the organization. Such employees will get pension of 20k per month. Now earlier we don't have such a scheme. So what company is doing? They're introducing a new scheme for employees where they're paying gratuity after completing 5 years. Earlier we never had such a scheme. Okay. Cease has a subsidiary. Next we're going to subsidiary. So that's why we're covering what? AS 9 revenue 1 and 2 and 11. Now subsidiary in which business, in the business of construction having turnover of 200 crores. So Cease also has subsidiary. Cease and ADI hold 9% and 23% in an associate company. So what are the two companies we have? Cease, okay, we'll write here itself. Cease and ADI Limited hold 9% and 23% respectively in an associate company, ASOC Limited. Okay, so that new company is called what? ASOC Limited. That means Cease is having 9% in ASOC, ADI is having 23% in ASOC. Both these companies, Cease and ADI, prepare consolidated financial statements according to the provisions of Companies Act. Are you following, guys? So they're asking whether consolidation is needed or not needed over here. Next, we will get to the questions. So first question, they're asking revenue recognition. How will the revenue be for Cease? Because they're paying for tickets, gross or net basis and all. Next, they're asking with respect to forward contract accounting. So first question is AS9, second is forward contract. Next is AS1, whether AS1 that's there. And last question relates to consolidation of financial statements. So basically instead of AS2 here, I will write AS21. Okay. Are you following, guys? So I'll give you all a minute's time. Those who are watching online also, I hope you understood the question. If you already read it, start solving. In a minute we will start discussing maximum, guys. Proceed. So let's go to the questions, guys, quickly and finish off this. I hope you guys solve the answer, those who are watching online and here. First, what is the method of revenue recognition? They're asking for that, not the airline company, for Cease, for Make My Trip. Should it be gross or should it be net basis? This is not an agent business. I am buying the ticket and selling it. So I take the risk. See, in Make My Trip, if you book, I get the money. If you don't book, I don't get the money. But here, this company Cease is taking the full risk of all the tickets. It's like they're purchasing and selling. So you have to account only on what basis, guys? Gross basis. Now, second question, please suggest accounting treatment for forward contract. Now, when it comes to forward contract, there are two types. You have to find out which one it is over here. One type of forward contract is speculation. The other one is hedging. Okay. Hedging is basically somebody getting into gambling or speculative in, speculation is the one. Speculation is the one somebody is getting into gambling, simply playing with numbers. Hedging is someone who is doing it to protect themselves from the risk. So what is AS11 saying, sir? AS11 is saying in case of forward contracts, let me go show you the theory so you can connect with it a little better. AS11 says in case of forward exchange contracts, we are now in speculation. We are in speculation or hedging. Hello? You should tell me speculation or hedging. So this company Cease has a forward, exposure of foreign currency, and that is why, because it's airline, they have gone for hedging. Read the question once to understand. Look at this. The company bought a forward contract for 3 months. Okay. Anywhere have they given regarding what purpose? See, it looks like the company is gone for hedging or speculation, we don't know. But look at this. If it is for purpose of hedging, premium or discount arising on the contract should be amortized over the life of the contract. Only if it is for the purpose of speculation, then in the year ending on the balance sheet date, we will do mark to market and recognize the gain or loss. Okay. Now here come to the questions here. They're asking mark to market of contract will be recorded on 31st March. Then again on 31st March you will do mark to market, and again if there is a loss you will record during the next year. No accounting is done during 31st March. Premium on contract will be amortized over the life of the contract. If my question is hedging, then I know very well the answer is going to be D, because premium on contract will be amortized over the life of the contract. Now come down over here. The company decided for premature settlement of the contract due to some exceptional circumstances. Now follow very carefully. That line is the hint for us to pick up if it's hedging or speculation. If it is speculation, guys, we will sell anytime. I will buy today, sell tomorrow. Buy today, sell today. Buy today, sell after 1 week. Intention of buying is to sell when I have a huge gain, or if lost, to save my loss. But hedging, we will always keep until the 3 months of contract is completed. In hedging, I will keep it for the entire period. Are you getting it, guys? Okay. So here the clue is, it is premature, it is closed due to some exceptional circumstance. That means they're trying to say my intention was to keep it for a long period, but I closed it due to some exceptional reason. Therefore it will be what, guys? Hedging. So therefore I will go with option D, considering it as hedging. Are you following, guys? Clear? If it is speculation, then I will go for which one? Speculation. No, see, what is B saying? Mark to market of a contract will be computed on 31st March, and only if there is a loss, it will be recorded for that year ending. No. So if it is speculation, answer will be A. I will mark to market on 31st March, irrespective of gain or loss. Are you following, guys? Speculation na A, hedging na D. Here I am going with D because it's exceptional circumstance. I am closing. Next question. You are required to advise the company in change in the accounting requirements related to employee benefits. Employee benefits is coming over here, guys, where this paragraph, which right over here, management gratuity policy, which I discussed. You need to give the answers for this. So first, is this the two things are happening, basically two things. This is one, this is one, this is 2. So first, what is happening in first thing, they are introducing a formal retirement gratuity scheme where there was some ad hoc plan earlier. Point 2 is pension they used to pay after 5 years of retirement. Now the employees will get 20k. Earlier there was no such pension in the scheme. So follow very carefully. In option 2, they are introducing a new policy, brand new, for pension. In option 1, something ad hoc was already there. It was very messy, it was very ad hoc. Now they are streamlining and making it very structured policy. Are you following? Now you have to tell me, in both these, is this a change in accounting policy or not? No. This is not a change in accounting policy. This is only changing some internal policies of the company regarding operations of employees. Sir, where do we see this? If you go to AS1, in AS1 also, in theory this will be there. Let me show you, guys. I can only show you from my notes, guys. But, sorry, in AS5. AS5 if you go. Yeah, in AS5, look at this. One theory is there. All these points are from study material, guys. So whichever book you are studying, it will be there. What is not a change in accounting policy? Adoption of a new accounting policy for events or transactions which did not occur, or previously it was immaterial, or adoption of an accounting policy for events or different substance from previously occurring transactions. So these two are the 2 points that we discussed now. Therefore, both these are not a change in accounting policy. So look for the option where both is not a change in accounting policy. That means I am trying to communicate introducing something new or changing what's already there related to employees is not a change in accounting policy. Are you guys following? Okay. Last one, comment with respect to consolidation. Will I do consolidation here or I will not do consolidation here is the question, guys. You tell me before we go to options. For C's 9% in ASOC, should I do consolidation? No. For the other one, ADI having 23% in ASOC. Should I do consolidation? Yes. But this is consolidation of subsidiary, associate, joint venture. Associate. Associate is which standard? AS 23. So in associate 23, what method of consolidation I will use? Equity method. Correct? See, if you remember in AS 21, consolidation is normal method of consolidation. 23 is equity method. 27 joint venture is proportionate consolidation method. Come down to the options. Find where there is equity. Okay. ADI would use equity for accounting of 23% in ASOC, and Cs would consolidate and consequently automatic equity separately, and the balance 9% as per AS 13. Yes, less than 20% it is as per AS 13. This could be one of the answers. Keep it aside. Second, ADI would account for 23% in ASOC as per AS 13. No, not as per AS 13. This is wrong. Next, ADI will account for 23% of share in ASOC using equity method of accounting. Correct? Would consolidate ADI and consequently automatically account for ASOC 23% share and separately account 9% share in ASOC using equity method of accounting in consolidated financial statement. Okay, we'll keep it on hold. Come to last point. ADI would account for 23% in ASOC as per AS 13. Is it as per AS 13, guys? Not as per AS 13. Would consolidate using equity method of, okay, would consolidate ADI using equity method of accounting and separately account for the balance 9% as AS 13. Okay. Now the question is, there are two questions over here. Question the comment regarding consolidation requirement for Cs Limited. But at the same time, we have two things over here. For Cs Limited, correct only, Cs has a subsidiary ADI. Okay. Cs and ADI hold. Okay, I need to redraw the diagram, guys. That's why the points are a little different. So let me just redraw this more in detail. Follow. ADI is the head. Cs has a subsidiary, correct? Cs has a subsidiary in what company? ADI. So look at this. Cs has a subsidiary ADI, which is in the business of construction, having turnover of 200 crores. Cs and ADI hold 9 and 23% in an associate company. So Cs has 9%, ADI has 23% in a company called ASOC Limited. So diagram is like this. Here it is already holding. Are you following? It's already holding. So they are asking consolidation for Cs. Correct. So now Cs will do consolidation along with ADI. Correct. And at the same time, since Cs is the holding of ADI and ADI has 23% in ASOC, I have full 23% control because I am the holding. Therefore, for Cs also, I have to do associate for what? Which one? ASOC. Are you getting it? Earlier I drew the diagram little differently, guys, by skipping the holding one. That means now the ultimate holding is who? Cs. And for Cs, ADI is a subsidiary and ASOC will become a associate. So I have to do consolidation of holding and subsidiary together. Are you following, guys? Understood? So let's go check the answer and just correlate. What is the answer for this? C. A. Okay, leave these points. Answer given is C. Okay. So what is C? So we striked out both B and D already because AS 13 came into picture. We only kept which one? A and C. So what is C saying? ADI would account for 23% share in ASOC. Which one is this? ADI will account for 23% in ASOC associate. That's what it's saying. Correct? Using equity method of accounting, Cs would consolidate ADI. Correct? Cs will consolidate ADI in normal holding subsidiary relationship and consequently automatically account for ASOC 23% share, correct? So I told what will happen, automatically C's will consider 23% of ASOC because it is through my subsidiary, and separately account for 9% share in ASOC using the equity method of accounting in consolidation. So what they are saying, this 9% also you have to follow which one? AS23, and follow which method, guys? Associate. What is trying to say, because C's is the holding in ADI, automatically 23% comes to C's, and therefore for this 9% I will follow AS23. That's what we discussed. Are you following, guys? Venkat, understanding? Sure, all of you really understanding? Last row, girls. Sure? Following? Last row, girls, or anybody will tell me why point A is wrong. If you understood, you will tell B and D is wrong because of AS13. See, some of you are saying yes because I am talking for 5 minutes. Okay, sir, if sir tells only, if you tell okay only, he will leave us now. You tell me why A is wrong. That means you understood the logic. Otherwise, you are just bluffing over here. Why is A wrong? Why is A wrong? Separately account for the balance 9% as per AS. No, the balance 9% also comes under as associate, so I have to follow AS 23. So for that reason, A is also wrong. Are you following? Clear? Now last row understood? Came now only. Okay, fine. I hope recording fellows have understood. With this, we will move on to the next question. Next question, case scenario 25, model test paper 1. Primarily revolves around AS10 and little bit of AS16 also is there in this question, guys. On 1st April 2022, Shubham Limited purchased some land for 30 lakhs for the purpose of constructing a new factory. In 30 lakhs, I don't know how you can construct factory, but only for question purpose. This cost of 30 lakhs includes a legal cost of 2 lakhs incurred for the purpose of acquisition of land. For purchasing land, why you need legal cost? To give gift? No. To check with the lawyer, this land is fully safe. Is there any encumbrance on this? Does it actually, the papers are true or not? For doing all that legal due diligence. Okay. Construction work could start on 1st May 2022. So important date to note, guys. So 1st May important. Shubham provides you the following cost in relation to its construction. What is the following cost? Preparation and leveling of the land, 80,000. Will I capitalize this? Let's keep solving. Will I capitalize this? First, will I capitalize 30 lakhs fully? Yes. Okay. See, for capitalization, you have to go to AS10, and AS10 very simply tells what is included, what is not included. In inclusion, what is AS10 saying? Purchase price and any cost related to purchase price will be included. Any directly attributable cost, in that we have inclusion and exclusion list. What is the inclusion and exclusion list? Cost of employee benefits, cost of site preparation. That only is preparing and leveling the land. Therefore, I will include that. Next, the employment cost of the construction workers per month is 29k. Will I include this? Yes. They are working directly on the construction project, so I will include that also. Purchase of materials for construction, 21 lakh 24,000. Will I include this? Yes. It's like bricks, cement, water, all that's needed. Cost of relocating employees to new factory for work? No. We will not include. Don't minus actually. We just ignore it. Okay, we just ignore it. Go to your AS10. In AS10, they will give you in one exclusion list. They would have given over there cost of conducting business in new location with new class of customers, or look at this, cost of relocating. So generally this relocating cost will not be capitalized. Don't mug up, guys. I would have told concept in class, but why we don't include relocation cost? It's more of operating in nature. It's not creating value for me. Are you following, guys? Okay. Next, relocating cost I will not do. What about inauguration ceremony? No, I will not consider that also. Look at this. Cost of opening a new facility. Inauguration cost also will be excluded. All this is there straight away in AS10. Okay, are you all with me, guys? Okay, super. Next, overhead cost incurred directly on the construction of the factory per month. Will I include overheads? Overheads directly incurred. Okay, let's say you include that. We will keep it separately for now. Okay. General overhead cost allocated to the construction project by manager is 30k. General overhead will include. No. General overhead we don't include because it's indirect cost. Okay. As per the company normal overhead allocation policy, it should be 24. So, general overhead by manager is saying 30k. Company is saying as per policy it's 24,000. And next the auditor of the company has support documentation for only 15,000. And he has raised objection for the balance. So, auditor is saying 15,000. Company is saying 24,000. Manager is saying 30,000. You should decide which is the final one. Next, not yet done, guys. The construction of factory was completed on 31st December. When did they start? 1st April. Correct? No. Oh, 1st May. 1st May is when they started the construction. When it got over. So how many months from May to December? 8 months, huh? I don't know, guys. Online students, Coimbatore students are saying 8 months. Later when I'm solving, you ask them only. 1st May to December, 8 months. Okay. And production could begin on 1st Feb. That means asset is now starting to use. Okay. The overall useful life of the factory building was 40 years. However, it is estimated that the roof will be replaced in 20 years. So, they are now introducing component method of depreciation. Where an asset has different useful life, you have to split that asset and provide depreciation differently. So, whole building is 40 years, but roof is 20 years. Okay. After the date of completion, the cost of replacing the roof at current price would be 25% of the total cost of building. They are giving breakup. Once you find the total value of the asset, 25% is roof, 75% is the building balance. The construction of factory was partially financed by a loan of 28 lakhs and the loan was borrowed on 1st of April. 1st April we borrowed. The loan was taken an annual interest rate of 9% during this period when the loan process has been fully utilized for construction. So they are saying loan is fully used for construction and Shubham also had a temporary income of 25,000. Very simple. Loan is given, used for qualifying asset, amount is given, interest also is 9%, duration also is given, find the period of the period, compute the interest, reduce temporary income, how much? 25,000 and balance will be capitalized. You are required to assume that all of the net finance costs are allocated to the factory and interest cost to be capitalized based on 9 months period. So, follow very carefully. Question is giving, guys. I hope they don't confuse us like different questions. Here, construction started and got over 8 months. But loan is taken on which day? 1st April. To 31st December it got over. So, that is how many months? So, we will again have the doubt. Loan is for 9 months. But construction is for 8 months. Normally, if question is silent, I would have mostly taken what? 8 months. But in the question itself is saying capitalized based on 9 months period. So you have to take 9 months period. But in option, if they give you both 9 and 8, and if they give you 2 answers and MCQ is wrong, don't ask me. Okay. Based on this question, a prudent human being with basic common sense will take what? 9 months. That's it. Okay. ICA has little high IQ, so they may give you different answers, guys. Come down. We will see. Hopefully, there's no confusion here. Confusion will not be there because it's model test paper, latest release. So they should fix all the mistakes. Which of the following costs incurred directly on construction will be capitalized to the factory building? You tell me, guys. Quickly, let's start answering. 2 lakh incurred as legal cost. Yes, I will capitalize. Relocating? No. Inauguration? No. General overhead? No. I'm discussing answer because already we saw this point while reading. Are you following? Next. What is the amount of employment cost employment cost of construction workers will be capitalized to the factory building. Go above and see related to employees, what is the one cost, the multiple cost available in this question now? Only one cost. Employee cost is given separately. It's given separately, guys. How much? 29,000. But it's given for per month. So you have to multiply into 12 and do 29,000 into 12. No. It is 29,000 into 8 months. How much, guys? Do you have the option to like 32? Yes. So first answer is A, next is C. I don't know if it's correct. Let me just cross check, guys. Yeah, A and C. 29 into 8 months answer is given. Legal costs are capitalized. Are you following, guys? What is the amount of net borrowing cost to be capitalized to the factory? Let's compute that quickly. What is the amount of loan they have taken? 28 lakhs, 9%. How many months? 9 months. So can I write 28 lakhs? 28 lakhs into 9% into 9 by 12. How much are you getting? 1 lakh? Oh, so no, sorry. Okay. 1 lakh. We have an answer. Is this the correct answer? No. 1 lakh it is there in the option, but it's a bait, guys. There is a temporary income. While reading the question also, I told you how to reduce that, guys. So I will reduce how much? 25,000. You end up with how much? 1 lakh? 64,000 is the answer. Do you have that? Answer is D. So come down. D is there. Yes. This is the breakup, guys. Okay. 28 lakhs into 9%, 9.1. That is the amount. Are you following, guys? Understood? Now last one question. Are you able to quickly solve, guys? 3 questions, 3 minutes, but the paragraph matters. This I'll allow you to solve because this part, what will be the carrying amount, the closing balance of the land after charging depreciation as on 31st March 2023. For this you have to do the whole working. You have to find the first building value, how much you will capitalize, and then you have to, what is it, charge depreciation for 1 year. It's getting over. When is construction ending? 31st December 2022. So next year you should provide depreciation for how many months? 3 months you have to provide depreciation. Are you following, guys? Okay. Building is put to use from February, correct. So from Feb you have to do it. Quickly compute, guys. I'll give you a minute time. Quickly compute, start off. Try it out. So this last question is the most important one in this MCQ. The first 3 A, B, C are easy ones. 6 marks in your pocket. In just 2 to 3 minutes. This one will take time. Okay. So generally in exam, if you are running short of time, this one MCQ itself is equal to a 4 or 5 mark question. The time that it takes. Only thing you are going to save is presentation, but the computation you have to do. What they're asking you to find the value of asset on 31st March 2023. Construction got over on 31st December 22. The year is ending on 31st March 2023. But the asset was starting to use from which day? 1st Feb 22. So first question I have to ask is, first you have to find the value on this day, 31st December 2022. What is the value of asset when construction was completed? Okay. And then you have to depreciate till 31st March 2023. Correct? Now the question is, will you depreciate for the entire 3 months or just for 2 months? How many months? Now they generally say we will start depreciation when asset is ready for use. Go to the question over here. They have clearly mentioned construction got over on 31st December. Okay. And then they never said production started on 1st Feb. Look at the wordings very carefully. Production could begin. So the wordings could begin means it has not started, but it can start from 1st Feb. So I will take the assumption that from 1st Feb only asset is ready for use. What about this 1 month? Maybe some other small work is pending still. Are you following, boys? But the construction work is done. Borrowing cost will stop capitalizing. Now what I will consider for so first step is, the first step you have to do is find the value of asset on the date when construction got over, and then depreciate for 2 months. That's it. What all I will include over here? Okay, I will include the whole value of land 30 lakhs I will include. Then site preparation 80k I will include. 29,000 into 8 months I will include. Then purchase of materials I will include, and overhead cost 25,000 into 8 I will include, and borrowing cost that we already computed above I will include. Writing all this only, formally I wrote everything over here, guys. You don't have to write like this. You can do a calci working itself, but it's up to you. Okay. So whatever I highlighted now, I have written everything over here. Are you guys following? Recording, I hope you're following. I wrote everything. Employee cost breakup also we have over here. 29 into 8 months. Direct overhead also I wrote. Which case study is this? This previous is case 24, no? 24. Just for reference, if some of them are taking notes later. Case 25. Are you all with me, guys? So now this 58 lakhs I found. So as of 31st December 22, the value is 58 lakhs. Up to 31st December March 23, I have to find after reducing depreciation, and this will be my answer. Now first mistake what students will do here is, they may depreciate. You are getting the answer only if you depreciate for 2 months, correct? They may depreciate for 3 months. I explain why you don't take 3 months, you take 2 months. Second mistake they will do is, they will depreciate the whole 58 lakhs for 2 months. No. Question gave a hint of what? 40 years for the whole building, and 20 years is for what? Roof. And roof comprises 25% of the asset. So first, next step, I have to split this into 2. 75% and 25%. So what is 75%? What is the value, guys? 43 lakhs? 50,000. And this other one is 14 lakh? 50,000. This 75% we will depreciate for 40 years. This I will depreciate for 20 years using component method. Have they given any residual value? No. So I will straight away divide by 40 first to find depreciation per year. But I should also multiply into 2 by 40 is for whole year, but I need only for 2 months. Same way here, 14 lakh 50 divided by 20 years, but I will multiply into 2 by 12 because I need depreciation for 2 months. So how much you are getting? This side 18,000, 125. Right hand side 12,083. Okay. So now you find the revised value after depreciation. Left hand side, how much you are getting, guys? Left hand side 43 lakhs 50,000 minus 18,125. Recording students, don't wait for me to write the answer. Use your calci and compute. How much? 43 lakh 875. This side 14 lakhs 917. Okay, recording students, you need to give the answer before students give it over here. We have 50 students over here giving the answers, so you need to give it before them, guys. Answer, how much you're getting? Add both. 57 lakh 792 or some, whatever, this is the number. 57 lakh 69,792. Go here. Do we have that option? 57 lakhs 69,000 is not there. Now let's do the same thing, but instead of 2 months, try it for 3 months. Let's try it for 3 months. So I'm only trying to derive the answer for you guys. Try the same thing for 3 months. Let's not, okay, we will keep this. I will just erase this and try it for otherwise rest of the answer should be correct. Let's see. 3 Varda, let me see guys. How much total? 50? 688. Are you getting the answer then? No. 5778. Did we miss something? Okay, what did you do? Okay. Interest we already added, no? Borrowing cost we added, no? Adding this only you gave the value, correct? Okay. Okay. Hold on, we will find it. Okay. This computation all of you understood. We got 57,69,782. Okay. Now the answer here is 57,78,000. That means it's approximately how much extra? Plus another roughly 8 plus roughly another something roughly around 8,000 is the answer. Now I'll give you all a minute, try to see where it went wrong and then we will discuss. We have to get the answer guys. I can't tell it's wrong in model test paper or it may be wrong, we don't know. This is the option given there. We have done everything correctly, but let's try a few permutation combination to see if we're getting the answer. So try it out guys quickly. Online also try it out guys. The idea is we are trying solving together. It's okay to make mistakes, but we will get the answer. So guys, where we reached is we understood how we arrived at 58 lakhs. Firstly, all of you are clear with this 58 lakhs. Huh? So these are the values that we will capitalize for the purpose of what? Overall value of the asset. Now we have to look at depreciation, and for depreciation we discussed this part, correct? Where we were at a confusion whether we have to, first we have to, I told you you have to find the value on 31st December 2022. That value only is how much guys? 58 lakhs. Is everyone clear with this? Next we told, I discussed saying we have to depreciate for the subsequent period and arrive at what? 31st March 2023, and here only we had a discussion where whether we will depreciate for 3 months or we will depreciate for 2 months. Initially what I told, I said based on the values in the question and based on the wordings that production could begin on 1st February. On that assumption, I thought could begin on 1st Feb, so I told we will go depreciate with 2 months. But then what happens over here? This word could begin, it looks like ready for use. But what if it doesn't start? And one more student pointed out saying, sir, the factory was completed on 31st December itself. Could begin means it depends when they are starting. It could be their inauguration cost or whatever work. That means 31st December factory is ready for use. So we will go with the assumption instead of production could begin on 1st Feb. That means when they are starting. So the wording says, let me just clarify here. Could begin is more like when they are going to start. But when it's ready for use, 31st December itself. So based on the answer also and the wordings, see all these things will help you in what? Now you got clarity. Next time if a wording like this comes in the main exam, where production could begin on 1st Feb, construction got over on 31st December, same wordings, you will start depreciating from which period? 31st December itself, 3 months. And the reason for this is earlier I told, I myself told it could begin. So I'll take that day, but we thought that's ready for use, but could begin means it's company's choice. So company is taking the choice of 1st Feb, which is not right. They can start on 1st Jan itself, correct? So on that interpretation, we will take depreciation for how many months guys? And not 2 months. So I will depreciate for the entire 3 months, and we will come here, and ideally we will depreciate 58 lakhs for 3 months. Most students would have done that. That is natural, including me. I would have done that and made the mistake. But we should not depreciate what? So the entire land part should not be depreciated. So what we have to do, I will write down 58 lakh minus 30 lakh. We are left with 28 lakhs only. I will depreciate. What normally anybody will do, they will do 28 lakh divided by 40 years into 3 by 12. But that also is a mistake, because question has clearly mentioned what? Question has told this asset is broken down into roof and building, and roof is 25%, building is 75%, and roof has 40 years of life and building has 20 years. That is clearly given in this paragraph which I am erasing over there. It's given over there. So what I will do, very simple. Now I will just split this 28 lakhs into two parts. 75% building, 25% roof. What is 75%, guys? 21 lakhs. What is 25%? 7 lakhs. And this left hand side I will depreciate for 40 years. This I will depreciate for 20 years. So while I am doing this depreciation, it will be divided by 40 into 3 by 12 depreciation. Here again divided by 20 years into 3 by 12. Can you tell me what is the amount of depreciation? 20,000? 30,000? 13,125 here. 7? Okay, 8,750. So we will get revised answer. This depreciation you guys compute online, guys, compute by yourself, you will get it. So here you will get 20 lakhs. 875, perfect. And this side 250, yeah. 91,250. Computation you guys do it, guys. So if I add both, how much are you getting? 125. This is the value of only building. Now I have to add value of land, which is 30 lakhs. So if I add value of land along with the new depreciated value of building, you will get how much value, guys? 57 lakhs 78,125. Let me go to the answer. You will have 57 lakhs 78,125. So this one MCQ for 2 marks is taking us 5 to 7 minutes. So exam you have to be smart. Okay, time is there, I will do it now. Otherwise, inky pinky ponky, go. That's it. Time is not there means what you will do, guys? Fine. Understood? All of you with me, guys? Are you all clear in this sum? Good sum. What is the key adjustment over here? Fourth one is a very good adjustment. Again, let me summarize in this. What are the common mistakes that is there? 3 important points. 1, do not consider land for depreciation, add back in the end. Second, take 3 months from construction end and not from what to say, when they are going to use. And third one, split between roof and building for 75-25 and do component method of depreciation. Is that clear, guys? Yeah, that's about it. With this we are done with this question. We will move on to the next set of questions, guys. Case scenario question 28, model test paper 2, guys. Simple one. Beloved Finance is a financial enterprise. It's a financial enterprise. Make note of that. It's not a normal operating. It's a financial like banking. In the business of lending loan to small business and earning interest on loans. During the year, company has lent 50 lakhs and earned 1.5 crore as interest on loans. Since I wrote AS3 here, let's start classifying also. What activity is this? Operating. Normally financing, but for this entity it becomes an operating activity. Next, the company had surplus funds during the year. Surplus, remember surplus funds, and invested them in fixed deposits with the bank and earned interest on fixed deposit worth 20 lakhs. What is this? Even though it's financing entity, surplus funds is invested, now it becomes investing. The company also acquired a gold loan unit for 10 crores during the year, and company provided interest-free loan for 15 crores to its wholly owned subsidiary. What is this? Should be operating, but we will discuss, because they acquired a gold loan unit to give what? Interest-free gold loan to subsidiary. That means it's part of operating, At this point, I will assume as operating, guys, but I don't have a conclusive evidence. We will discuss. Okay. The company paid a total income tax of 75 lakhs for the year. Based on the above, answer the following question. Interest income of 1.5 crore earned on loans given by company will be as what, guys? Operating activities. Let's check the answer. It's A. Yeah? Okay, that's A. Next, in the cash flow statement of AS3, interest income of 20 lakhs from fixed deposits with bank. Fixed deposit, surplus funds, fixed deposit with bank will be taken as what? Should be investing, but I don't think they gave investing as answer. They have given us. Okay. We'll come back and discuss this. Hold on, we'll come back and discuss. Next, cash flow of AS3, amount paid for acquiring gold loan. What is it? We discussed as operating. I'm just going with the majority answers that everybody is giving. Are you all with me, guys? Okay. What is the answer below for this? Third one is B. We will check, guys. So B, we discussed operating, but the correct answer given is investing. We will come back to it. Let's finish all the questions that we know first. Income tax of 75 lakhs is disclosed as what? Income tax should be operating. Okay. That is fourth one. That's given as operating. So this is fine. Income tax, it's financing entity. This is correct. Correct. Last one. If any specific disclosure required to be made in relation to interest-free loan of 15 crore provided by company to its wholly owned subsidiary, it is required as per which standard? Which one? Option B, related party. Correct? They're asking, so I'm giving interest-free loan. That means normally to others I will collect interest. Now I'm giving interest-free loan to my subsidiary AS18 holding subsidiary. So this also answer will be what? B. Correct. Are you following, guys? So it's a combination of AS3 and little bit of AS18. The 2 points where we had a conflict was these two. Go through, think for a moment, then we'll come back and discuss. Fine. I hope you guys discussed. On the face of reading, most of you for question number 3, this one, surplus funds, you all took it as what? Investing. We also took it as investing, but the answer is operating. Now I'm not going to tell the answer. I'm just going to give an example and you tell me what it is. Okay. You are a biryani restaurant. Your goal is to sell biryani, correct? On a Sunday, you thought 50 kg of biryani is enough. So you produced 50 kgs, but only 45 kgs of biryani got sold. So extra 55 kgs is surplus biryani. You kept it back in the fridge. Next day you reheated. Okay. And you gave sale 50 buy one get one biryani off on Monday. So generally I don't go on Monday and eat in restaurants because extra food will be there. Okay. Now you tell me, for this restaurant, the extra food that they had, the surplus food that they had, they're again selling at a discount. Correct? It will be operating or financing or investing. Operating. Now same logic apply over here. This is a financing enterprise. Financing enterprise, main product or commodity for them is money. Like how for biryani shop, biryani. For financing enterprise, money is the main one. So with money only they deal. Now they have surplus funds and they invested in FD and earn some interest. Now what does a financing company do? They give money to people for loan. They earn interest. Instead of giving to people for loan, they gave for FD and earned interest. So therefore this will be what, guys? I didn't change the answer. I only changed the example and changed the way you are thinking. So this becomes what? Operating. So we will go here. Write the correct answer. What is it? I will pick operating activities. Is this clear, guys? Next one. Follow very carefully. I am only going to change the way I am explaining. Okay. You're going to, if you're convinced, change your answer. Like how previous question. Third one. The company is in financing business. They acquire a gold loan unit. Now, an ATM machine, it will be with gold and all. They will disburse gold for 10 crores during the year. Now, okay, during the year, and the company provided interest-free loan of 15 crores to its wholly owned subsidiary. Okay. Now, what is the question over here? The question over here is, follow very carefully. Amount paid for acquiring gold loan unit only they're asking, not the interest-free loan. Keep this question in mind. I'm going to give you a different example. Okay. Take McDonald's. All of you have been to McD? Not McD, KFC, McD or Subway. Okay. Now, in McDonald's, there will be a machine from which if they keep the glass, Pepsi will come or Coke will come, correct? Similar machine is there in Subway. Similar machine is there in KFC also. Now, can you relate? Or PVR theater, Pepsi, Coke. Now, that machine, will cost how much? For PVR or for McD, that Coke dispersing machine will cost how much? Let's say 5 lakhs. Now, with that machine, what they are doing? Whenever customers are coming, whenever they are buying Coke, they will fill and give it. One glass of Coke, they will sell for how much? 100 rupees. Correct? For example, in theatre I'm saying, they sell for 100 rupees. What is the cost? 10 rupees. Okay. Leave about all that mathematics and all of that. I mean, profitability, 100 rupees they are selling. Now for PVR, selling Coke for 100 rupees, operating or investing? Operating. Do you agree? Now for PVR, that equipment which they purchased, which is helping them generating revenue, what is that equipment? Investing. So every investment in PPE, which is going to help you generate operating revenue, will be an investing activity. Now you understood the example. Now come back and read. In this question, this company acquired gold loan unit. For what purpose? This gold loan unit is going to disperse gold and get income. So the unit of gold loan is what? PPE. From that, what revenue you get will become what? Operating. Therefore, you tell me now, gold loan unit, what is it, guys? Investing. Are you convinced? So the company is buying an asset. With that asset, I will start generating revenue. So they are investing into a gold loan unit, like how a restaurant will purchase fridge, restaurant buying refrigerator or utensils. They all become investing activities. From that, we generate revenue. Are you following? Are you really convinced? Yeah, okay, all of you. So with this, we are done with question number 28. Model test paper is done. Okay. Same answers are given over here. Okay. Let's start off, guys. Case study 32. Model test paper 3. AS 26. On 1st April 2022, Excellent approaches a software company for implementing SAP ERP. SAP, like Tally, for those of you who don't know, it's one of the largely used accounting software in the world. Like, which is the best brand in the world for sports gear? Adidas, Nike. Like that, in accounting software, the biggest and the most used is SAP. Okay. The cost of implementation of SAP is 25 lakhs and the time required is 15 months. It takes time to implement such a big, it's a whole digital transformation of company. Okay. The company also required to pay 1 lakh annually after implementation for maintenance and normal updation of ERP. So this maintenance I will not capitalize, but first time implementation of 25 lakhs is an intangible asset because it's a software. I am purchasing software, correct? The implementation work started in June 2022, but could not be finished in 15 months. The ERP was implemented only on May 2024. That means it took 2 years. Correct? June 22 to May 24 is how many months? Correct? Correct? 24 months. So it took almost 2 months, where it took almost extra 9 months. Due to delay in implementation, the vendor refunded 2 lakhs. The vendor is who? SAP. He said, I'm sorry, pa, because of me delay came. Let me refund 2 lakhs. The company recognized the intangible asset in September 23 itself. So they capitalized the whole amount. They capitalized. After 2 years, the company has got SAP more upgraded with latest version and additional features and functions, which also increased its speed and functions to 7 lakhs. What they are saying, they upgraded later by spending 2 lakhs. Simple questions. 7 lakhs. This upgrade, so first basic points. This 25 lakhs initially, will I capitalize? Yes. The upgrade of 7 lakhs, it's increasing speed and usage. That means efficiency and productivity of the asset is improving, of the intangible asset. So will I capitalize this also? Yes. The only question we have to discuss is what to do regarding the refund. Can we reduce it? That is the only unique point that we have in this question. Even day before exam, if you have to focus on something, it's like this. Okay. Come down. On which date intangible asset should be recognized? When I should recognize in the book? That's first question. You will try it, guys. What amount SAP ERP should be initially recognized as intangible asset? The question is again 25 or 32. Sorry, not 20, 25 or 23. Either 25 or minus 2 and take it as 23. That's the point of discussion that we will have initially. Correct? Next. How should the annual maintenance and updation should be accounted? You tell the answer, guys. These are straightforward. Maintenance expense, what we will do? Should be recognized as an expense in P&L annually. This is straightforward answer. Nothing to think. Correct? This all of you agreeing? Maintenance expense we will debit to P&L. Fourth one. During the implementation period, how the expenditure incurred will be accounted? Implementation period expenditure should generally be debited to. Okay, that one. Okay. I'll explain this point when I got the answer. Answer is basically it comes under, mostly it is B. Okay. But you go through, guys. I don't want to give you the answer or other paste. Okay. What they are saying is during implementation now, during those 15 months or during those 24 months. Simple. Forget about this. For constructing a normal individual apartment, one bungalow for you, villa, how many years it will take? Let's say 2 years. See, I am not building, 1 to 2 years. Okay. Let's say 2 years it's taking. Now, during these 2 years, I will spend on bricks, cement. That time, what entry I will pass? The entry I will pass that time is to bank. 50, let's say 5 crores. I'm building independent house. Correct? Now, what I will debit in this time? I can't debit P&L. Why? Because it's not an expense. I can't debit PPE also because it's still not an asset ready to depreciate. So, if for a tangible asset, we will debit something called capital work in progress. Schedule 3, you remember. For intangibles, we will debit something called intangible under development, and that's what they're asking here. So, during the implementation period, until it's ready, we will recognize an asset under intangible under development. So, it will be an asset in the books, but I will still not provide depreciation. Are you getting the logic? So, this one answer will be B. This also we saw, answer is C. Easy. Now, take a minute, think, apply your mind, common sense you apply, revise AH 26 if you want, try to answer first and second. With that, this question will come to an end. We have 2 questions left, first and second. Correct? I gave you some time to discuss. I hope you discussed. I'm not going to give the answer. Again, I'm going to give you the situation and you will pick the answer. Okay. Generally, any asset, when we will start capitalizing? When asset is ready for use. Again, we will start capitalizing when the asset is ready for use. Until then, it will be under capital work in progress or intangibles under development. Metro is taking construction 10 years, sir. Until 10 years, metro value will be shown in capital work in progress. Once I start capitalize, once I capitalize, it will convert to building or vehicle or whatever. So, generally, you will capitalize when you should recognize as a PPE asset. When asset is ready for. Now, in the first question, when is the SAP ready for use? May 2024 when it actually got implemented. That's it. That is the answer. Are you following up? So then until May 24, where it will be? Fourth option. Intangibles under development. Clear up? Next, second option. Simple. We all already eliminated second and fourth. Correct? It is either going to be 25 or 23. Now, we never knew the refund is going to come. Correct? As and when money kept coming, we kept adding to intangibles under development. It would have been 25 lakhs only. Correct? So, the entry I would have passed is first intangible under development. How much? 25 lakhs to bank would have been passed for the construction period of 2 years. So what if it's delay? If it's delayed, only borrowing cost will get angry. That's standard. Hey, time is over. I will not allow you to capitalize. This is normal. Delay is normal in India. Correct? IST is what? Indian Standard Time is normally known for coming late. Correct? Metro is going to come late. So few months delay is okay. Since they are refunding, my entry for refund is going to be bank account debit 2 lakhs. To what I will credit? It's a refund. That means net cost from my pocket. How much I paid? 23 lakhs. So two intangible under development 2 lakhs. Therefore, what will be the net amount in intangible development? 25 minus 2 is going to be 23. What will be the third entry I pass once the completion is over? After 24 months, what I will pass? I will pass intangible asset account debit 23 lakhs to intangible under development. That means what is happening over here? The intangible under development will get striked off, and that's striked off here, and it's transferring where, guys? To intangible asset. Are you guys following up? Say I'm scribbling over here just to save time. Are all of you understanding? Should I write neatly? It's MCQ only, guys. So basically what amount is being transferred to intangible asset will be 23 lakhs. To summarize, intangible under development will be debited for 25 first, again credited by 2 lakhs for refund. So the balance in intangible under development is 23, and that only is transferred to intangible asset as 23. And the question is, what is initially recognized as intangible asset is going to be 23 lakhs only. Clear? Are you satisfied with all the 4 options for this MCQ? Clear? We are done with question number 32. Case study 36, model test paper 5. AS 17, 10 and 26 is what they have mentioned on top, but 1 or 2 AS maybe they're extra also. Okay. This kind of heading you will not get in exam. This case is from which AS case? I am just giving in our book. AB is engaged in manufacturing variety of products including modules, dies and infrastructure goods. Okay. The company caters to a broader customer base across sectors like automobile, infrastructure, construction. Okay, fine. India International. In financial statements are prepared as on 31st March. Additional information is given. Okay, fine. One company has some multiple segments. They are catering to many clients. Okay. What are the details over here? They gave 5 segments. 1, 2, 3, 4, 5. It's already given. They have given revenue, export and domestic, and a total. We only need total column for most of the test except for the last test others. They have given result test profit. They have given asset test. Excellent. Come down, additional information. Machinery purchase. On 1st April 2023, AB purchased machinery worth 15 lakhs for producing specific item for a particular customer. Okay. What's happening next? The cost is deductible over 2 years for tax purposes. 10 lakhs in first and balance in year 2. Must be year 2, correct? Balance in year 2. 2 years only, no. 10 lakhs in year 1, balance in year 2. Applicable tax rate is 30%, correct? Balance in year 2. Now what to do with this information? We have to wait and see. MCQ question. Next, trademark and process development. This part only relates to AS 26. Correct? The first part relates to AS 17. This missionary purchases AS 10, and they are talking about cost is deductible over 2 years for income tax purpose. That AS 22, if the question is asking, we don't know. We have to see. Okay. Now, AB introduced a new manufacturing process, incur the following costs. Trademark acquisition 70 lakhs. Will I capitalize? Yes. Intangible. Next. Product promotion 2 lakhs. Will I capitalize? No. Promotion cost, how you will capitalize? Promotion is marketing. It gets debited to the P&L account. Are you all with me, guys? Employee benefit for testing. Employee benefit expenses for testing. It's part of the production. You will add it and capitalize. Direct labor. We will add it. Okay. Government grant. Oh, AS 12 also is coming. Okay. Now, AB was engaged in the process of development and manufacturing unit in one of the specified industrial area. The development of the manufacturing unit shall be completed within 2 years. Super. To encourage industrial promotion in specified areas, the government provides government grants in the form of subsidies. Very good. The cost of the project for the company is 700 lakhs, against which we got 500 lakhs. He is giving the question and saying it's in the nature of promoter's contribution. That means maybe some other question like how to account or wrongly usage may be there. Answer the following question. So beautiful. 4 AS covered. 17, 10, 22, little bit 26 and 12. 5 AS are covered in the question. Okay. Come down. Are there 4 MCQs? Yeah. Perfect. First MCQ is a straightforward question based on AS 17. Which segment is reportable segment? Earlier days, this used to be a 4-mark question. Find out reportable segments. Now it's an MCQ question. Dead easy question. Next. What will be the impact on financial statements in respect of 1st April? DTA or DTL they're asking because they gave tax rate. Next is AS 22. Next. What is the total cost that should be capitalized for trademark? AS 26. How should the subsidy received be accounted in the books? AS 12. This we know. Promoter's contribution. What we will do? Credit to capital reserve. Answer appre malark. I don't have to give you time for discussing because you know the answer. That's it. Now we have these 3 questions. 1, 2, 3. So those who are watching online also, I'll give you a few minutes. Recording students, pause, solve and come and we'll discuss the answer. Here, try to solve the first 3 questions, guys. Let's go. Yeah, start off. We have 3 questions to deal with. Let me do the easy one first. For trademark, how much should be capitalized? While reading the question itself, I gave the answer. We have to capitalize how much? 70 plus 3, 73 lakhs. While reading, I told you. So the answer for this will be 73 lakhs. Simple. Fine. Next, let me come to I'm coming in reverse, just random. Deferred tax. Okay. If you take deferred tax, what have they given in the question? They have given an asset is purchased for 15 lakhs with a useful life of 2 years. So as per books, in year 1 and year 2, how much they will depreciate? 7,50,000. Are you following, guys? As per books of accounts. As per, let's say, income tax, this is as per books of accounts. As per income tax, what they told? First year they are going to allow only 10 lakhs. Second year they are going to allow the balance 5 lakhs. That means now I am in year 1. In year 1, now let's do this without applying what? Imaginary number. Let's apply the concept over here. Okay. I told you shortcut. I will do in shortcut and concept. Here, based on concept, where is more depreciation allowed? Income tax. That means, if I write that, this is case number 36. Second one. Look at this. In income tax, in books of accounts. Okay. In income tax, they are allowing 15 lakhs. I am talking only about year 1. Here they are allowing only 7 lakh 50. Correct? Sorry. Income tax they are allowing 10 lakhs. Books of accounts 7 lakh 50. That means income tax is allowing for a higher depreciation to the extent of 2 lakh 50,000 in year 1 now. In year 1, that means in year 1 I will pay more tax or less tax. Think and tell. In income tax, if they are allowing a higher depreciation, in year 1 you will pay less tax. Go to year 2. Go to year 2. In year 2, what they are allowing? Here they are allowing in income tax, they are allowing 5 lakhs. In books will be still 7 lakh 50. Now, again, what is the difference in year 2? Year 2, the difference, if you see, it is going to be how much, guys? Same 2 lakh 50,000, but income tax is allowing a lower amount of what? Depreciation. So if I write down tax paid in year 1, I paid less. Year 1, why I paid less? Because in year 1, they are allowing a higher depreciation. In year 2, they are allowing a lower depreciation. Now, that means in year 2, the tax paid will be higher. To what extent is this difference? In both the years, it is 2 lakh 50, 2 lakh 50,000. So in year 1, for this 2 lakh 50, since I have paid higher tax, that will be more like what, guys? What will that be, guys? It will become a deferred tax liability. Correct. So first year I saved, correct. So first year I saved tax. How much is the tax? I'm going concept wise, that's why it's lengthy. After this, I will show you shortcut and close the sum in 15 seconds. Okay. So in year 1, how much tax I saved? 2,50,000 into 30%. 75,000. What I am supposed to pay, I didn't pay. Correct. In year 1, look at this. In year 1, because of higher rate of depreciation, follow carefully, I am going conceptually. Because of higher rate of depreciation, higher amount, I saved how much? 2,50,000 worth of profits by not paying tax. So the amount of tax I have paid less in year 1 is 2,50,000 into 30%. So 75,000 rupees worth of tax I have saved in year 1. But it's not a saving. Year 2, what happened? They are allowing only 5 lakhs, whereas they are supposed to allow 7 lakh 50. So my, what to say, up to 2 lakh 50,000 is disallowed. So year 2, I will pay more tax. How much? 2 lakh 50,000 is disallowed in year 2. So into 30%, 75,000 worth of tax I will pay higher in year 2. That means year 1 you didn't pay, that you are going to pay in year 2. Year 1 I didn't pay, I am going to pay in year 2. Let me repeat again, are you getting it? In year 1, 75,000 I didn't pay because of higher depreciation. In year 2, I am paying extra 75,000 because of lower depreciation. Are you getting this? Let me repeat one last time. Conceptually, 75,000 what is supposed to be paid in year 1 is being paid in year 2. So my liability of this year is deferred to the next year. So I have to create deferred tax liability for 75,000. Are you getting the logic? But in exam, I don't have time to interpret and find out logic. Are you getting it, guys? See, in fact, I can go much more in depth in MCQ. If you've seen the class, you will know, guys. Okay, but for this sum, I'm covering the concept in just 5 minutes. Are you getting it? Are you genuinely understanding? Sir, all this I don't want, sir. 2 marks, 20 seconds. What is the shortcut? Year 1, income tax, books of accounts. My method, I will assume here income is 20 lakhs. Here also income is summa some random number. Okay, just to make the comparable easy. How much allowed here? Income tax 10 lakhs. How much allowed here? 7 lakh 50. I'll do like school days, BRS. What is the income here in income tax, sir? 10 lakhs is after tax. I'm talking part, correct? Sorry. Profit before tax, 10 lakhs. Here how much it is? 12 lakh 50,000. Simple. Which is correct? Income tax is always correct. Which is wrong? Books are always wrong. In life, we have to go from wrong to correct. So write down. Income tax is 10 lakhs. Correct, correct. Which is wrong? Books of accounts is wrong. 12 lakh 50. Sorry, yeah. Income tax is 10. 10. This hand is income tax. Income tax is 10. Books is 12 lakh 50. So from 12 lakh 50, I have to make it 10 lakhs. Logic, no, I don't know, sir. What is the shortcut? Income tax is correct. The correct is 10 lakhs. Books is wrong. The wrong is 12 lakh 50. So how 12 lakh 50 will become 10 lakhs? I have to reduce. That means in books, I have to reduce 12 lakh 50. So in books of accounts, what I have to do? So in books of accounts, from 12 lakh 50,000, I have to bring it to 10 lakhs. So if profit has to reduce, if my PBT has to reduce from 12 lakh 50 to 10, what I should do? P&L account debit by how much? 2 lakh 50. Therefore, what I will credit? I have to credit. Credit means liability. Deferred tax liability 2 lakh 50. But you will not debit or credit the amount into 30% in both cases. Are you following, guys? So my DTL will be 75,000. Sir, what is the shortcut? Keep your hands. Keep income tax. Keep accounts. Which is correct? Income tax. From books you go to income tax. If books is increasing now, you credit P&L. If books is decreasing now, you debit P&L. And the other will be balancing figure, asset or liability. Are you understanding the shortcut also, guys? Hello, sure? Huh? Genuinely understanding. Let's see if you actually understood. Okay. Yes. Correct. So good question from Shreya. Shreya is asking, sir, is it necessary to write this 20 lakhs, 20 lakhs? No, not at all. I am writing so that you can easily compare PBT in mind. Okay. Her doubt is, sir, can I directly compare 10 lakh and 7 lakh 50? Very much yes. Let me do it like that without any assumption. Okay. I will directly compare 10 lakh and 7 lakh 50. 10 lakh, if my income, simple. If my depreciation is 10 lakhs, income tax profit will be here of some amount. If my depreciation is 7 lakh 50 in books, book profit will be higher. It will be higher by how much? 2 lakh 50. So debit 2 lakh 50. Understood? No need to keep assumed income. If you're able to process that directly, I can compare, do it. Books is more than income tax by 2 lakh 50. So 2 lakh 50 I will do it. Are you all getting it, guys? Okay. So we have a DTL 75,000. Clear? Okay. Last question. AS 17. Reportable segments we have to find out. You are saying all the segments. Let me quickly compute, guys. Reportable segments. These are all the 10% rule except for profit. Okay. Assets. Anything which crosses 10%. No need format. In 25 crores and 65 lakhs, what is 10%? 2 crores, 56 lakhs, 50,000. What all is crossing this? 1, 3, 4, 5. Correct? Except 2, everything crossed. Don't do profit test. Because profit test has more steps. So straight away I will go for revenue test. What is my, should I take total revenue or domestic exporter? Total. What is my total revenue? 5 crores, 94 lakhs. So it will now become 59 lakhs. Correct? What all is crossing that? Second is crossing. Third is crossing. Fourth is crossing. Now K, L, M, N, O all became reportable segments. I am yet to apply profit test. No need to do. It is a 5-mark question now. MCQ. Otherwise I will do profit test. Profit test we have steps. Find out total profit. Find out total loss. Take whichever is higher. Apply 10% on that which crosses 10%. What is the logic for that? I'll come to that. Here the answer is what? All segments are reportable segments. Clear? Oh, sorry. So all segments are reportable segments. Another mistake that you can do in exam, you will think all segments and mark something else. Okay. Then after exam you will discuss and be like, ayo, gone. Okay. Fine. Now I just want to discuss that logic in reportable segments since first time we are taking up AS 17 in our MCQs itself. In the profit test, okay, let me give you 5 segments. Segment 1, segment 2, segment 3, segment 4, segment 5. Profit only I am giving you 10, negative 10, negative 20, 40, 30. Okay. What they are actually saying, they are saying calculate total profit. What is total profit? 10, 40, 30. It is 80. Then they are saying calculate total loss 30, ignoring the negative sign. Only keep the absolute numbers. Which is higher in this? 80 is higher. So in this you apply 10%. How much you are going to get? Any segment which crosses 8, irrespective of the symbol, we will take it. So crosses, we will take it. This is the step you mug up for exam, enough for exam. But what is the logic behind this? Very simple. Why can't we take just the total? If you take total, what will happen? The total over here is how much? 70, 80, 80 minus, no, 50. Correct? Now, so you will divide into 10%, you will take 5. If you do it like that, but that's not correct, because what if this 40 also is negative? Then what's the total? What's the total then? Minus 30. Minus 30, how you will compare? So what happens when you do profit and loss together? If you keep, the profit and loss will get set off. So the total is not a realistic number. That's why they are saying take higher of profit or loss. Higher of profit or higher of loss. Which is higher here? Profit. Why I am taking which is higher? What is the logic here? This company has a net profit or net loss. Original sum has a net profit of how much? 50. That means it's a profit making company. Yes. So I will give importance to profit. Are you understanding? Whichever is higher means if loss is higher, it's a loss making company. If profit is higher, it's a profit making company. So whichever is higher, profit is higher, give importance to profit, because most segments looks like profit. Are you getting it? Getting the logic behind this equation, how they framed it? Okay. Surely following. It's like give more importance to the number which is there in the balance sheet or P&L net. That's it. Okay. Not relevant for exam. Exam, what to do? Take profit, take loss, take higher 10%, whichever crosses. That's it. So we are done with case study number 36. Clear? Any doubt in this case? Easy one. Okay. Sure, any doubts? Fine. We'll close. Let's start off with case 37, model test paper 5. Referring to AS 28, maybe some other standards also will be there, but primarily which standard is given. G Limited is an automotive supplier and is in the business of manufacturing components and parts to be used by various automotive companies. The company has its registered office in New Delhi and is listed in a stock exchange. Not much relevant. Listed company into manufacturing. Okay. Following are some outstanding issues not yet resolved towards the finalization of financial statement for the year ended 31st March. So first paragraph not that important. Second, G Limited installed a new machinery in its plant during 23-24. Incurred the following cost. Machinery cost 5 lakhs, 50 lakhs, sorry, handling cost 10 lakhs, site preparation 5 lakhs. Will I add all these three? Will all these three be capitalized? Yes, these three will be capitalized, guys. Next, the interest charge for deferred credit paid to supplier is 1 lakh. Will I include this? Deferred credit include Panvama? Will I include it, guys? Go to AS 10. In AS 10 and inclusion and exclusion, see where it's coming, guys. Deferred credit. It is coming under special transactions here. This is the concept which says if payment is deferred beyond normal credit terms, meaning I have to pay within 30 days, but I am paying after 40 days. So extra 10 days I have to pay credit interest. So for that extra interest Will I capitalize or not? AS10 is saying, ayo, I don't know. You go and ask AS16. So if AS16 says it is needed for the purpose of qualifying asset, now we will capitalize. Okay. So interest starts for deferred credit paid to supplier is 1 lakh. If it's a qualifying asset, we will capitalize because it's an interest. Correct. Interest comes under borrowing cost. Clear? Next. Present value of the estimated dismantling cost to be incurred after 15 years is rupees 5 lakhs. What do you mean by this? Again, I will go back to AS10. When I spoke about in AS10 definition, inclusion and exclusion, we have something called in inclusion. I told there are 3 things over there. One is purchase price, one is directly attributable cost. This point refers to decommissioning, restoration and similar liabilities, which means estimated cost to dismantle the asset. Sir, what is the logic of this? Very simple. Have you seen these natural gas and oil rigs in the middle of the ocean? They will construct one huge tower for extracting oil. That equipment or cannot be there for whole life. After 10-15 years, they have to remove it because it will be a, what to say, it will keep polluting the ocean. Now I know today itself that after 10 years I have to remove that. I'll give an example. Venkat knows today itself that in 5 years he is going to get married. Okay. And he wants to get married in Switzerland, destination wedding. So for that, from now itself he has to start saving. And I told you depreciation is a saving in a different MCQ. So I know that I have to remove a structure, and to remove that structure, the present value of that today is 5 lakhs. So if I capitalize that 5 lakhs into my asset now, what will happen? Every year when I keep depreciating this 5 lakhs, that cash of 5 lakhs will be saved. After that 15 years, I can use that for dismantling the asset. Are you getting the logic? Sir, why only present value? Only when I capitalize at present value, after 15 years, it will become the future value that I need after 15 years. Meaning if I need 10 lakhs after 15 years, if I capitalize 5 lakhs now and depreciate every year 5 lakhs and save it, after 10 years, it will become 10 lakhs. Are you following, guys? Getting the logic? First row, not getting it. Sure, 100%. See, usually I will draw an oil rig, show numbers. I want to quickly solve the MCQ. That's about it. So I'm going fast. Operating losses after commercial production is 4 lakhs. Will I capitalize this, guys? No. Look at this. Excludes initial operating losses or any other loss of business will not be capitalized. Where is that? Yeah, I will not include it. So far what all I am including, sorry, these 3 are included. This depends on AS16. This 5 lakhs I will add, correct? Because it's cost of dismantling. Are you all with me, guys? Super. Next. The plant was ready for its intended use on 1st July. Finally an MCQ where they have clearly told from which day I will start charging depreciation. From which day? 1st July 2023. But commercial production started on 1st August. What to do? Ignore. I don't care. Ready to use date only I will start charging depreciation. The estimated life of machinery is 10 years with no residual value. Have you ever thought why it is, what to say, why it is ready to use and not when I'm actually using? Fire extinguisher is always ready to use. Can I say I will charge depreciation only when I use it? Our goal is not to use it. Correct? So asset also, just because you didn't use it, you can't say I won't charge. I bought a new iPhone. I kept it in the house for 3 months. I didn't use. The value will still drop. That's logic. Okay. Now come here. So till here, till this paragraph what I finished, it's not even AS20, it's only AS10. Okay. So I can write here additionally AS10. Come down. To acquire the above machinery, G Limited is to borrow 62,500 on 1st April 2023, which will be repaid on 1st July 2024. So repaid after April, May, June. 3 months. Again AS11 has come. So let me write here AS11. Rate of exchange between reporting currency and foreign currency on a different dates are under. So 1st April date they have given, and some other date, 31st March date also they have given. Okay, we will see what they are asking. G Limited acquired the machine on 1st April for 25 lakhs that had an estimated useful life of 8 years. The machine is depreciated on straight line basis and does not carry any residual value. On 31st March 2022, asset is revalued for. So this part is basically the AS28. Impairment. This is a different machine, correct? First about, yeah, this is the different machine. See, this part relates to a different machinery. Then in middle, they are talking about AS11. That's for the above machinery. Are you following, guys? So for the first machine, this one, they borrowed how much? 62,500. Are you able to see, guys? 62,500. So the first paragraph is AS10. For that AS10 machinery, they borrowed 62,500 on 1/4/2023, and on that day when they borrowed, rate is 80. Are you following, guys? Come down. Next, G Limited acquired a machine on 1st April 2018, much in the past, long back, for 25 lakhs and had an estimated useful life of 8 years. The machine is depreciated on straight line basis and does not carry any residual value. Okay. After 4 years, it was revalued with 18 lakhs with revised useful life of 5 years. So 25, what was 25 lakhs 4 years back? Now after 4 years, it is now revalued to 18 lakhs. So first we have to find the carrying value, then we should do revaluation, all of that. Next, the surplus arising on revaluation credited to revaluation reserve account. Fine. Impairment, when we get there, we'll discuss. Simple adjustment only, nothing great. 4 years asset, depreciated, revalued. Now, what happened? G had the policy of writing down the revaluation surplus by increased charge of depreciation resulting from the revaluation. Very, very, very important statement. What they're trying to say in this point, I'll give a simple example to understand. Okay, very, very important statement. If asset was 10 and now it became 120, what is revaluation reserve? 20. So if I take P&L, what would have been the old depreciation if my rate is 10%? 10 now. Correct? What will be depreciation now? 10%. It's going to be new depreciation 12. Now this line in AS10 had followed the policy of writing down revaluation surplus by the increased charge of depreciation, means on the same percentage at 10%, how much? 2. Every year I will write by revaluation reserve, how much? 2. So every year there will be a debit of 12 and credit of 2. So net impact of depreciation is how much? 10. This 10 is same as the old 10. And my revaluation balance in the question, instead of 20, it will be 18. So 20 minus 2, it became 18. Now in this question, they are following that method. That means after revaluation balance every year gets transferred to P&L credit side in the ratio of the excess depreciation. Are you following, guys? Have you all understood this? The same thing is happening in this question. Finally, recoverable amount came down to 6 lakhs. The company sold the asset as on 1st May for 2.8 lakhs. G Limited acquired 35% shares of Bill Limited as on 1st July 2023 for 14 lakhs. By such acquisition, it can exercise significant influence over Bill Limited. The following balance of bill is on that date. Okay. They're talking about some sale. When relevant, we will come there. Particulars. Share capital 15 lakhs, reserves is so much. B Limited paid dividend of 1,50,000 on 15 July for the year ended 31st March. The profit earned by Bill during the year ended 31st March amounts to 4,80,000. Answer the following questions. What is this paragraph about? Can you guess? What is this, sir? Significant influence. AS 23 associate. Are you following, guys? So I will write here plus AS 23. Are you following, guys? Clear? All of you with me, huh? So it's actually not one question. It is 3 4-mark questions. AS 10 is a 4-mark question. AS 11 is some 2-mark question. Then you have AS 28 is a 4-mark question. And AS 23 is a 4-mark question. So if this comes as standalone question, it's a 16-mark question clubbed into one MCQ just to torture you. Okay. Fine. Let's go through the questions. What is the carrying value of mission on 31st March 2024 installed in the plant? First question you answer as per AS 10. Just the first paragraph along with foreign exchange. Along with foreign exchange if it comes. Next. Second. What is the amount of exchange loss or gain to be recognized? And what will be the amount of foreign loan shown in financial statements for 31st March 2024? Purely AS 11. What is the amount of impairment? AS 28. And what is the carrying amount of investment in separate financial statements on 31st March 2024? You have AS 23. Are you all with me, guys? Now each sum will take 5 minutes itself for us. So what we will do, we will go one by one. Okay, we'll go one by one. First you do first 2 questions only, 10 and 11. Then we'll come and discuss the rest. Try it out, guys, online students, quickly. Pause and try it out before I discuss. So first let me start with the first question, guys. Like I said, each of these questions are a big question. First I have to find out the value on 31st March 2024. Before that, find out what all you will capitalize as per the question. What all I will capitalize? 50 lakhs, 10 lakhs, 5 lakhs. Interest I will not capitalize because question is silent. Nothing about AS 16 is given, and purchasing machinery is not a qualifying asset. So 50, 60, 65 plus another 5 present value. How much, guys? So I will capitalize 70 lakhs. How did I find this? 50 lakhs plus 10 plus 5 plus 5. Are you all clear about this? Now 70 lakhs is the value I am capitalizing on which day? Beginning of the year 1/4/2023. No, when I purchased, okay, some other time, but which day it is ready for intended use? Here, 1st July 2023. That means this will be the value on 1st July 2023. But question is asking value on 31st March 2024. So I have to depreciate for how many months? For 9 months I have to depreciate. Are you all with me, guys? So 70 lakhs. What is the useful life given in the question? They have given in the question, first paragraph or second, yeah, here, 10 years useful life with no residual value. So I will do it divided by 10 into 9 by 12. That means depreciation for this year is how much? 5 lakh? 25,000. So the value will be 70 lakhs will be on 1st July minus 5.25 lakhs. The value on 31st March will end up being 64.75 lakhs. Are you following, guys? So my answer is going to be 64 lakhs 75,000. All of you getting it? Sir, I want the breakup for that. Simple breakup. 70 lakhs we already figured the total amount. Minus depreciation for 9 months is 5 lakh 25,000 and you will get the answer. Easier. How many of you got this? Super. Online, if you got this, clap for yourself, guys. Next. Second question. What is the amount of exchange gain or loss I will recognize? Not that difficult. This one is easy. When is the asset? For this they are saying we have some borrowed some forex. This one paragraph, guys. What I am erasing now, no? This one paragraph is what is relevant for us. Okay. They have borrowed how much? $62,500 on 1st April 2023. So let me write that down. 1st April 23. How much, guys? $62,500. And that day, what is the exchange rate? That day it is 80. At how much? 80 per dollar. Okay. Now they're asking you in question what? They're asking you, what do you think is the exchange loss or gain to be recognized on 31st March 2024? So after 1 year, 31st March 24, they're asking you, correct? So all I have to do is same 62,500, same 62,500, I will multiply on the rate on 31st March 2024. What is the rate on 31st March 2024, guys? Here, 31st March 2024, 82 point. So 82.50. So my revised principal balance sheet, because they haven't spoken anything about repayment yet. They haven't spoken about repayment. So how much it's coming to? 51 lakh? 56,000? 250 will be the value of the loan. Are you following up? What is the value of loan on the date of purchase? 62,500 into 80, how much? 50 lakhs. So 50 lakhs is the value on date of, that means, look at this guys, in balance sheet, when I took the loan, my loan will be 50 lakhs. After 1 year, loan in year 1 will be 51 lakh, 56,250. So what will be the entry for this as per AS 11? First when I purchased, it will be missionary account. Missionary account debit 51 lakh 56,250 to bank. What is the breakup of that? $62,500 into 80, correct? No, on the date, on date of purchase I want 50 lakhs, correct? On date of purchase. Next year ending, what I will do, the amount of increase is how much? 2.50, 62,500 into 82.5 minus 80, which is nothing but 2.5. How much is that? Perfect. So here what I will again write, it will be my loss for me expense. Okay. So P&L account debit 1 lakh 56,250. See, if I made the payment, I will credit bank, but I am yet to make payment because it's only a restatement of liability. So too I will write down forex sum payable. I am not focusing on entries here, guys. Are you following? So what's happening? 50 lakhs has become 1 lakh 56, 250 has increased, so it will become totally 51 lakh 56,250. Are you following, guys? Clear? Instead of writing to forex payable, what I'm going to pay extra? Loan. So I'll write loan account. I am yet to pay actually, correct? So both will be loan account, correct? Are you following, guys? So let me summarize the whole transaction. First I purchased machinery when the rate was 62,500 into 80, 50 lakhs. So I created loan for 50 lakhs. Later next year what happened? Dollar rate increased by $2.5. So P&L is debited for the extra 2.5, debiting 2.5, and I'm crediting loan again by the same amount of 1,56,250. So my revised loan amount will be 50 lakhs plus 1,56,250, 51 lakh 56,250. That only in shortcut I did directly over here. Are you following? See, all these journals are required only if it's a proper 4-mark question. Now come back to the question. What they're asking, what is the amount of exchange loss or gain to be recognized? What's the loss, guys? 1,56,250. Everywhere it is 1,56,250, but loss is coming only in two places. Are you following, guys? What is the value of the loan? Just now I told you it became 51,56,250. That is there only in the last option. So last option is the correct one. So basically I am trying to say the excess forex payment will be debited to P&L, and since I am yet to pay that, my loan amount will increase. Clear? Are you following, guys? Last row not clear? You are nodding the sure? Okay. Next is impairment. Loss as of 31st March. Try it out, guys. It's a proper 4-mark question. Don't think it's 2-mark MCQ. Try it out with rough workings and I will discuss in a few minutes. Let's resume, guys. Basically, I asked you guys to try it. We finished question 1 and 2, and now we are in what is the impairment loss as of 31st March 2024. This is a proper detailed question. Okay. The recording students, I hope you have tried this in any way, calculator or some computation, instead of just checking the answer and feeling you know it. Let me give you a background as to what they have given as facts in question and what we have to solve. They told asset is purchased on 1/4/2018 for 25 lakhs with a useful life of 8 years. No residual value in the entire question. Okay. After 4 years, on 31st March 2022, after 4 years, value of asset is 18 lakhs. No, value of asset is revalued to 18 lakhs. So it is revalued, correct? Revalued to 18 lakhs, and the revised useful life is 4 years, correct? Is how many years? The revised useful life given is 5 years. Okay, yeah, 5 years. So revised useful life is given as 5 years. Very good. And after that, what is happening? Follow carefully. After 31st March 2022, after 2 more years is when the year that we need is given, 31st March 2024. In this 31st March 2024, the recoverable value given is 6 lakhs. Okay. All you have to do is find this carrying value X and then compare with the recoverable value of 6 lakhs and find whether we have impairment or we don't have impairment. Of course, impairment is there. Option I give 4 values, no. So we have to find the impairment. How do I do it quickly? In exam 2 marks, I should spend 3 to 4 minutes, correct? For me to gather this information, it will take me 1 to 2 minutes. Of course, some MCQs will take more than average time. Some will take less time. We will set off. Quickly, guys, we have to come in the same order. First, I need to find out what is the revaluation gain, correct? For that, I will come from the starting. 25 lakhs divided by 8 is how much? 3 lakh 12,500. No need to prepare any statement and all. Rough working. Okay, 3 lakh 12,500. For how many years depreciation is kept? 4 years. So I will do 25 lakhs minus 3 lakh 12,500 into 4. I can do this in Calci itself, roughly. Okay. If I do it like that now, only half of you will understand. So exam, should I draw like this? No need. If you want, you draw, as long as you have control. So what is the book value? 12 lakh 50,000 is the book value. Follow, guys, is the book value on which day? On this day, on 31st March 2022. But on 31st March 2022, this value has been increased to how much? 18 lakhs. Therefore, how much is revaluation gain, guys? We have revaluation gain of 5 lakh 50,000. All of you clear? Is this the value you all got when you solved? Yes, keep checking the answer. Okay. 5 lakh 50 is the revaluation gain. Super. Where will this 5 lakh 50 be sitting? In revaluation reserve or revaluation surplus account, credit side 5 lakh 50,000 will be sitting. Now this revised 18 lakhs, has life of how many years? 5 years. So for the next 2 years also, I have to again depreciate. Guys. So how much I will depreciate? 18 lakhs divided by 5. So I will again do 18 lakhs minus 18 lakhs divided by 5 is how much, guys? You are getting 3 lakh 60,000. So I have to reduce 3 lakh 60,000 into 2, which is nothing but 7 lakh 20,000. How much you are getting? 10 lakh 80,000 is the value of the carrying value after 2 years. Are you all following, guys? But there is one more important thing we have to do over here. So that means, can I tell this X is how much, guys? 10 lakh 80,000. How, sir? From 18 lakhs, which is the value on 31st March 2022, I did depreciation for 2 more years. So on 31st March 2024, my carrying value is how much, guys? 10,80,000. Are you all with me? Got it? Therefore, can I say impairment loss 4,80,000? Go to impairment loss 4,80,000 is there a 4 lakh? Where is it? 4,80,000. Can I write 4,80,000? Is that the answer? Hello? Impairment losses 4,80,000. Is that the actual answer given? Okay, but what if they tell, they ask one more question. Additional, I am asking you, what is the amount of impairment loss debited to PNL? How much? 4,80,000, yeah? No. 4,80,000 is the impairment loss, correct? But how much is debited to PNL? Not 4,80,000. Are you following? Now, why did you solve that? Correct. Some of you solved and got the answer. Why you did then this sum? Not required. Because in this question, they're asking only up to 4,80,000. So don't waste time in exam. But since I am asking you, you gave the answer. What is that extra step that you have to do? Now, the PNL for the next 2 years, each year you will debit depreciation of how much we wrote here? 3,60,000 for each year. So, my PNL will have a debit of 3,60,000 and 3 lakh for the next 2 years, which is basically year 5 and year 6, because first 4 years got over, next year 5 and year 6. Now, I told that line, revaluation reserve will be transferred back to PNL in the ratio, in what ratio? In the same ratio, in the ratio of 5. So what is divided by 5? 1,10,000 each year, correct? So here I will write revaluation reserve creditor 1,10,000. 1,10,000. Are you getting it? So by doing this, I am debiting revaluation reserve 1,10,000. 1,10,000. Sir, why are we doing this? I will tell you. What is the closing balance of revaluation after year 6? How much? 3,30,000, correct? That means, as on which day? As on 31st March 2024, write down, as on 31st March 24, revaluation balance is 3,30,000. Are you following? But correct only, yeah? Correct? Okay. Now what is the impairment loss? We already found 4,80,000. So impairment loss 4,80,000 will be first adjusted with revaluation reserve. And then what is the balance available? 3,30,000. 1,50,000 only will be actually debited to PNL account, correct? No. Is this correct, guys? Are you following what I am saying? See, this is not asked in the question. I am asking additional question. How much will be debited to PNL? For this, we went to our AS28. In one more question also, I discussed this actually. I discussed this in AS28. In one more question, what I would have discussed, the revaluation gain, the impairment loss, accounting for impairment loss should first be charged to revaluation surplus where available, and balance only is debited to the PNL account if there is no revaluation surplus. Are you all with me, guys? So here, the revaluation surplus available is how much? 3,30,000. So what is my impairment loss? 4,80,000. So impairment loss will be first adjusted with the available revaluation gain. What is the available revaluation gain? 3,30,000. So after adjusting this, what is the balance? 1,50,000 is still there. That 1,50,000 only is debited to my PNL account. Is this clear? Yes or no? Yes, Venkat, what is the change? Yes. What you did? This 2,20,000 you adjusted. Why? That is already credited to PNL, no? Correct? Are you following, guys? Understanding? So basically what I'm trying to say, you are all correct. My revaluation, impairment losses. Did you understand till impairment loss 4,80,000? Sum is over. Additionally, if they ask you in one more MCQ, how much is debited to P&L? Additionally, what I will do, in this 4,80,000, first I will check, do I have for this asset any balance in revaluation reserve? Yes, sir. 3,30,000 is available. Why, sir? From 5,50,000, 2 years, I transfer already 1,10,000, 1,10,000. So available balance is 3,30,000. So 3,30,000 I will debit revaluation reserve, and the balance 1,50,000 of loss only I will debit P&L. How will my entry look, sir? My entry will be like 2 impairment loss 4,80,000 or 2 asset impairment loss. Now credit the asset only, no, correct? So 2 asset 4,80,000, revaluation reserve account debit 3,30,000, P&L account debit how much? Are you following? Are you all understanding, guys, this entry? Clear? They didn't ask in this question, but if they ask how much of the impairment loss will be debited to P&L, 1,50,000. Are you all clear? It's a 6 marks impairment question what we have discussed now. That's why this question is taking time. Is the question done? What done? One more MCQ is there. Okay. We are now done with 28 we finished, 10 we finished, 11 we finished. 23 is waiting for you. That's the last paragraph. Try it out. What's the question? What will be carrying amount of investment on the same day, 31st March 2024? If you studied AS 23, it's a double question, very easy. If you didn't study AS 23, wait for me to solve it. But others, quickly try it. Recording students, don't be like already 30 minutes over, sir. I will go for the sum. Try it by yourself and then check the answer. So let's start off the last question. The last question is basically, what is the value of the investment in separate FS as on 31st March 2023? What is AS 23 saying? How you will account for investments in associate? It is basically a simple logic. What you paid, that is the value, minus if there is any pre-acquisition dividend. That's it. They are not asking me here to find out goodwill, nothing else. What is the value of investment? Value of investment is what I paid, that is the value of investment less any pre-acquisition. What I paid over here, it's given I have paid 14 lakhs. So what I paid is 14 lakhs. See, if I am computing goodwill only, there is more computation. That is not there here. What is pre-acquisition dividend? Is it there first in this question? I have to see. Very simple. How much percent I acquired? 35%. Okay. Now follow carefully. Which day did I make the purchase? I made the purchase on 1st July. Correct? Which day that I made purchase in shares of Build Limited? Now Build is paying dividend of 1,50,000 on which day? 15th July. Immediately they are paying, and this dividend is paid from current year profits or previous year profits? Previous year profits for the year 31st March. That means the entire dividend is pre-acquisition dividend. So what is the pre-acquisition dividend? Out of 1,50,000 fully is for me? No. Minus 1,50,000 into my share of dividend is only 35% because I invested 35%. So it's going to be 14 lakhs minus 1,52,500. The answer will be how much? 13 lakh 47,500. Go down, find the answer. How much, guys? 13 lakh 47,500. Sir, then what to do with all this information, sir? They are saying share capital 15 lakhs, reserves and surplus so much, profit accrued over 3 months. Assume then again profit earned by Build during the year is 4,80,000, profit accrued evenly. To confuse you in this question, it is needed if you are finding goodwill or any other thing for comparison purpose. Are you following, guys? It's only value of investment. So with this, we are finally done after 40 minutes of close to 40 minutes discussion. Question number 37 from model test paper 5. Have you understood, guys? In exam, you can't take 37 minutes for this. Okay, 10 minutes. Because I'm explaining, it's taking time. When you solve, it will get over fast. Okay. Let's take case scenario 43, model test paper 7 relating to AS12. Quickly, we have to do these guys. Less than 5 minutes. Supercool is manufacturing company, very good. Engaged in manufacturing eco-friendly equipment, fine. 1st April 23, they received a grant of 20 crores from the government, which is 25% of the total capital of the company for various purposes that the company deems fit, and no repayment is required for the to be made. What nature is this? It looks like grant in the nature of promoter's contribution, because we are getting for, there is no specific use I can use for anything, and the main keyword is what? 25% of capital of the company. So they are investing in terms of capital. Next, the company also borrowed 10 crores from financial institution, and interest is paid on that is how much? During the year they have paid 1 lakh only interest on 10 crores borrowing. The company acquired plant and machinery from the funds of 10 crores, and 1 crore was spent on installation and assembly. Okay, that means it is not just AS12, this is also AS10 and AS16 is coming in it. Okay, 10 lakhs were spent on professional fee necessary for installation and operating the machine. So how much I will capitalize so far? Look at this. First 10 crores I will capitalize, because I purchased for 10 crores. 1 crore was spent on installation, so I will add again 1 crore. 10 lakh was spent on professional fee necessary for installation. That 10 lakhs also I will add. What about the interest of 1 lakh? Interest, we have to see if it's a qualifying asset. It looks like it acquired plant and machinery. Acquired means there is no substantial period of time. So far I am not adding interest. Then the company also spent 50 lakhs on revenue expenditure. Very good. The plant and machinery for ready for its intended use on 30th September 2023. When did they borrow? The company also borrowed. They have not given the date. The depreciation on plant and machinery is charged at 10%. Fine. To an extent we got the idea. But instead of solving everything, straight away go to questions. The 20 crores grant received by the company should be represented as what, guys? 25%. Yeah, 20 crores is what? Capital reserve, because it's promoter's contribution. At what value plant and machinery acquired should be recognized as on 31st March 2024. 31st March 2024 means after depreciation. So we have to compute. Give it some time. I'll give you time to compute. Next, the revenue expense of 50 lakhs should be recognized as what? Which revenue expense is referring to? They spent 50 lakhs on revenue expenditure. Is what purpose? Is it part of plant and machinery? No. Is it part of grant? No. Is it revenue expense in P&L account? Yes. Can I reduce from loan? Have you ever studied any concept where revenue expense reduced from loan? No. So answer is C. Only second question we have to do, because second has some numerical computation where you have to first find how much you will capitalize, then you have to reduce depreciation for whatever period that's given, then only you will find 31st March 24. So you guys are going to do that and I will help you. Last one, which of the following statement is true? Okay. Plant and machinery has been acquired out of government grant, so the same should be disclosed at nil value. No. Plant and machinery belongs to financial institution. No. Just because they gave loan doesn't mean they own the asset. Plant and machinery belongs to the company and should be recognized as property, plant and equipment. So far it is correct from what I have read. Plant and machinery should not be disclosed in the financial statement at all. That means it becomes fraud. So answer is C. So the first thing is C, C and C. Oh, all are C. Okay. So you got the answer for second also, but you have to try and solve it, guys. Quickly solve it, guys. I'll give you only 2 minutes time. Recording students, pause, solve and check the answer. Fast, guys. How many of you got the answer as 10.54? 20% of class here. Let's compute. Come on, help me guys. Okay, we'll do it here itself. First 10 crores I will add up. Next I will add 1 crore. And next I will add 10 lakhs. Are you considering interest? No interest. That's it to capitalize, correct? So what is the value of capitalized asset? 11.10 crores, correct? Or 11 crores and 10 lakhs. We do not take interest because it's not a qualifying asset. The asset is ready on 30th September. So from 30th September to 31st March, you have 6 months left in the year. How, sir? October, November, December, Jan, Feb, March. 6 months. So I have to provide depreciation just for 6 months. What is the rate of depreciation? 10%. So I just have to do reduce depreciation, which is nothing but 11.10 crores into 10% into 6 by 12. How much are you getting? 0.54 crores, huh? Correct? 0.54 crores. What is the net answer you are getting now? 10 lakh? 10.54. 10 lakh 54,000? Okay, if you write the whole numbers, maybe you will get it better. So 11 crores and 10 lakhs, correct? In this I have to reduce depreciation, which is nothing but 11 crores 10 lakhs into 10% into 6 by 12. How much is that? 50? 55 lakh 50,000. So the carrying value will now be 10 crores 54 lakh 50,000. Are you following, guys? So 10.54. Go check the answer. We have 10.54 crores. Are you following? Easy question now. Okay. With this, we are done with case scenario 43. So all this time we've been doing MTP questions or RTP or past exam. What came in exam already is what we've been discussing. It's important that when you learn concepts, even if you solve 100 case studies, you will never be confident in exam until you can solve a known case study by yourself. So in this material, we'll also be having a lot of own questions. When I say own research, it could be from some other, what to say, like some old books, or it could be from ChatGPT, it could be what I did myself. Mix of everything, there are some questions. Some I've kept it easy just to give you confidence. Some are complicated. So if you are watching a complicated case study, starting itself I will tell you, hey, it's a complicated case study. So if you are watching this, especially recording students watching this 2 days before exam, complicated case study, don't watch. It will take away your confidence. I'm just giving you general overview for any case study question, which is own research. So this is case scenario 48 in our book, own research. This is not complicated. It's a very simple, straightforward question. But since it's new, first time you'll be seeing a question like this, it will make you think, are you getting the correct answer? That's it. Let's start off with question number 48. 4 AS is covered over there, guys, but that will not be there in exam. I think next time I should remove that thing, no? What AS is here, I should remove that, correct? And keep it where bottom, near the answer I should keep it. I can keep it here next to the answer or somewhere. I'll do that next time, okay? Yeah, I'll do it like that. Fine. Now, Mara Limited, a listed company in the tech manufacturing sector, closed its books for 24-25 on 31st March. Fine. On 27th March, it entered into a contract. Look at the date on 27th March. That means close to the year end. Entered into a contract with Tanga Limited, promoted by the chairman's daughter and managed by individuals overlapping with Mara Limited's management. Are you following, guys? That means there are two companies, Mara Limited and Tanga Limited. In Tanga Limited, who's running it? It is the daughter of chairman of Mara Limited's daughter. Are you following, guys? Okay. The chairman of Mara, their daughter, his daughter is in this company. Okay, fine. And the management also is similar team for both these companies. The agreement required Mara to spend 4 crores upfront on R&D customization, recoverable through future product pricing. Okay, so they are saying agreement includes Mara will spend 4 crores on upfront R&D. Around the same period, CFO discovered that a government grant for 2.5 crores received in Jan 24 had been incorrectly credited to the capital reserve and never routed through the P&L account. Now what grant is this? Maybe it's a revenue grant. So revenue grant only goes to P&L. So he's saying incorrect, capital reserve incorrect means it didn't go to P&L, it must be revenue grant. Management is unsure whether this should be adjusted in current year or disclosed separately. Last year they made some mistake in accounting grant 24-25. This year they found that mistake. What to do? During 24-25, the company availed 90 lakhs worth of design service from Sketch Studio, a partnership firm where the CEO's brother-in-law is a partner. There is no ownership interest. Okay. The company had not disclosed this in related party notes. Which company we're talking about? Mara Limited. That's the main primary company, correct? So what Mara Limited is doing here in this paragraph? In this paragraph, they got some design services from a Sketch Studio. Fine. For which they also paid 90 lakhs. Just at the design studio, the CEO there is the brother-in-law. Okay. Next. On 26th March, a foreign subsidiary of Mara Limited received a penalty notice of 6 crores for environmental violations, again during the year ending. Legal counsel at the time considered the outcome uncertain, but learning negative. On 12th April, the judgment went against the subsidiary and fine became legally payable. So summary, what happened? Our company is Mara. Mara is now having first a contract with Tanga promoted by chairman's daughter, and the agreement in which Mara paid 4 crores to that Tanga Limited. That is first. In second, what happened? Grant received accounted wrongly. Third, what happened? From my brother-in-law's company, where he says not his company, brother-in-law is CEO, there I got some design service. Fourth is some penalty. I didn't last year it was doubtful, now it became confirm. That's it. Let's go to questions. What is the most appropriate treatment of 4 crores spent under the agreement with Tanga Limited in Mara Limited's financial statements? Now, who spent this under the agreement with Tanga Limited and Mara Limited's FS? Now, basically, who's spending? Look at this. This question, if you see, okay, this question, if I see, guys, Mara Limited is spending for whom? Tanga Limited. That means this Mara is spending that 4 crores for the R&D of Tanga Limited. This is the transaction. They are asking what is the most appropriate transaction. In books of Mara, capitalize the amount as development expense recoverable under in future under AS 26. Recognize a provision in AS 29, obligation from legal binding. Disclose only under AS 18 as related party transaction and defer recognition until actual supply begins. Treat as contingent liability since future supply and recovery are uncertain. They are not asking the correct answer. What is most appropriate? What do you think is the most appropriate? Go through and tell me in a minute, guys, quickly. Most of you have given multiple answers. I got most options from you guys here for C. I don't know about online, and some of you chose B. Now, in this 4 crores is already spent, going to be spent. It is not spent. Follow, guys. Look at this. Contract agreement required Mara to spend 4 crores upfront on R&D customization recoverable through future product pricing. So the agreement only is made. They are going to spend, but agreement is made. Once you make an agreement, it's a commitment. Once you make a commitment and promise in life, you have to honor it. Correct? You should not simply tell everybody, I promise I will do it. Not okay. So here, you're all right. It's okay. It definitely is not option A because capitalized amount as development expenditure. No. It's an asset for me. No. It's an asset for Tanga. They should only capitalize. Treat as contingent liability. No. Agreement already made. I'm going to spend. So why I'm recognizing as provision under AS 29 as the obligation arises from legally binding. That means contract is already made. I am definitely going to spend. So option B looks appropriate. But what is the other option you all chose? Because I read the question in such a way, making you feel they are related parties. While reading the question, I spoke much about this. But I didn't talk much about the transaction, all of that. Okay, that's why I gave you time to go through. That is the time when you have to go through. Disclose only under AS 18 as a related party transaction and defer recognition until actual supply begins. The real disclosure is both disclosures will come. It will come in AS 29 plus in AS 18 also I will tell related party transaction I have given a loan or I am taking care of their expense, but I can only pick one. Which is most appropriate here? B is fully correct because in C they are saying defer recognition until actual supply begins. Why should I defer the recognition? Already agreement made, future liability is certain, so provision. Are you following, guys? So answer will be which one finally? B is the answer. Next, how should 2.5 crores of R&D grant error in Jan 25 be treated in 24-25 financials? Or 25-26 next year financials, whatever. Generally, how will the error be treated? Rectify the error. AS5 prior period items. If there is any error or omission, you will do rectification. Treat as extraordinary item. No. Mistakes happen, it's not extraordinary. Treat as prior period item and disclose separately in 24-25. Yes. Include in other income of 24-25 since retrospective correction is not. No, not like that. We are not doing, but it's prior period item. Ignore it because it was adjusted in capital reserve and has no future effect. What is the correct answer? B, prior period items. What is the answer given, guys? B, which is prior period item. Are you following? So generally remember, here we are connecting AS5 and AS12, but generally any error or omission in the past, we are allowed to rectify it now. Next, should the 90 lakhs transactions with Sketch Studio be disclosed under AS 18? First understand what is Sketch Studio doing in our question. Okay. From Mara Limited. Okay. Let's assume the Mara Limiteds, they are saying this company's, what to say, founder, his daughter-in-law only runs Sketch. Son-in-law or daughter-in-law? Sorry, brother-in-law. Brother-in-law only is running Sketch. Who is brother-in-law? Basically, first you should know who is brother-in-law first. Correct? Who is brother-in-law? Wife's sibling. Wife's brother. Okay, so let's say Mara is the company's owner. Okay, let's say Mara's wife is some name. Sorry? Yes. X in vechukongla. Why nobody is telling a name? Solunga. Come on, Venkat, tell some name fast. Venkat, tell some name faster. Nee 5 seconds if you don't tell Mara's wife's name, some random name, I'll tell wife is Venkat. Fast. Sorry? Karava. Radhava. Okay. Fine. So Mara's wife is Radha. Radha's brother, no. Is brother-in-law. Correct? I'm correct only, no? Sure? Okay. Now the question is this Mara and the brother-in-law, wife's brother, related as per AS 18? What is AS 18 saying for related party disclosures? Who is the relative, correct, for an entity? What are they saying is the entity relative? First they are seeing as an individual. For individual, spouse is included. Parents, brothers and sisters. Basically AS 18 covers the close family and children who may be expected to influence or be influenced. AS 18 is a beautiful definition which says even if parents or brothers are there, they are not relative if I can't influence or they can't influence me. Mukesh and Anil Ambani used to fight. Even though they are own brothers, they are not related as per AS 18. Because here you have to be relatives plus have the ability to influence or be influenced by other person. Here first of all brother-in-law is coming up. No brother-in-law is covered. Second, for the company they are seeing, since we are seeing for individual Mara, see for the company. For the entity A, the most important thing is the other person in that entity should have control or significant influence. Since brother-in-law is not covered in relative, the only area I can go and see is that particular entity, sketch studio, or brother-in-law should have what? Control or significant influence in me. In this question, anywhere is there control or significant influence? No. In fact, they have also given there is no ownership interest. That means there is no control, no significant influence. Therefore, what answer I will take? No, since A is 18 does not list brother-in-law and there is no ownership interest. However, for best practices in real life, you may disclose for the sake of disclosing, which is optional for you. Are you all following, guys? Understood? Clear? Last one. How should the penalty, I'll come to it. How should the penalty judgment received on 12th April be disclosed? What penalty is this? During the year, there was a case for environmental violation 6 crores. On 26th March, we did not consider this. But later, on 12th April, judgment went unfavorable for us. So we had to pay. Therefore, this becomes what event? Adjusting event. So event as an event occurring after the balance sheet date provides an evidence of condition as of 31st March. It becomes an adjusting event. That's what they gave. Yeah, it becomes an adjusting event. Easier. Out of 4, I was able to at least get 3 correct. That's it. We are done with one own question. Question number 48 is done. Let's start off, guys. Finally, we have reached case number 50. Again, another own question. Like I already mentioned, own questions are simple. It's just to test your mind. If an own question is complicated, I will tell you it's very challenging one. And if you are watching this close to exams, don't watch it very close to exams because it's a very complicated question. Not this. I'm just saying if it's complicated. This is a simple one covering few standards. Let's proceed. Nila Limited is engaged in industrial design and construction service. Guna is the CEO and also an independent director at Roja Private Limited. Okay. Immediately you should not go to movie, guys. Okay, names are kept intentionally so that you will get distracted in exam. So in Roja Private Limited, who is the CEO? Guna. Who is Guna? Not Kamal Hassan, guys. That is the distraction you should not have. Immediately you will start thinking about that song in movie. Oh, idla panene. All those things. So Nila is engaged in industrial and Guna is its CEO and also an independent director. Okay. In Roja, okay. And the other company is Nila Limited. Fine. Let's proceed. A vendor supplying metal parts. Though he attends board meetings at both the companies, he is not involved in pricing or operational decisions. So what they are saying basically, Guna has relationship both with Roja and Nila, not Kamal Hassan. Guna has relationship. He's related to the company of both Nila and Roja Limited. Okay. During the financial year 24-25, Nila Limited undertook a fixed price construction contract. Who is the base company for us here? Nila is the base one. For 12 crores. Expected to complete in 18 months. By 31st March 2025, only 40% of the contract was completed with 3.8 crores cost. Always no, we expect something, we never get there. Same way, 40% work only they finished. Unexpected rains in March delayed further billing. The client later agreed to compensate 60 lakhs for delay losses caused by the site's flooding on 10th April. So client is being compensated for 60 lakhs. Separately, the CFO found that in previous year, separately means some other transaction of Nila, last year 23-24, not 24-25, 15 lakhs of warranty expense were omitted due to a clerical error, though it was related to the products sold in that year. This you know, there is going to be a question regarding prior period items. This year I have to rectify. 85% of Nila's packaging is supplied by Billa Packaging Limited. and 60% of funding comes from Canara Bank. That means there is no relationship between both. 85% of packaging is supplied by, don't immediately 85 plus 60, 100 varli. Packaging 85% Billa, 60% of funding is coming from Canara Bank. Why have they given this? That means Nila is fully dependent on Billa for packaging. Almost fully dependent on Billa. Are you guys following? Again, you should not go into the movie and all, guys. Intentionally, sometimes in main exam, those kind of things will come. In one exam, an amalgamation long back they gave. When Bahubali movie was trending, they said Kattappa and Bahubali are going to amalgamation. Especially when first part got over and second part didn't come. In that time, that gap exam. So immediately what you will think, on the scene you will keep thinking, okay, fine. Come back. Venkat is saying, Adla Yosik Mata sir, only if Monica comes I will think. Correct? Okay, first, does Guna's directorship in both Nila and Roja make them related parties? Now, how is Guna related to both the companies? Get back to exam. Nila is engaged in industrial design. Guna is the CEO of Nila and is also director at Roja. So, in one company I am CEO, in one company I am director. Am I related? Now the question is, are both the companies Nila and Roja related party? Just because Kamal Hassan has relationship with both these entities, are both these entities related? Yes or no, guys? Go to AS18. AS18 says, look at this, AS18, some transactions that look like a transaction with control but not related parties. Some transactions that look like related parties but they are not related parties. Two companies merely having a common director, unless the director is influencing policies in both the companies in mutual dealings. Just because I am director in two companies does not make those two companies as related parties. I should influence the decisions of both the companies in that transaction. In this question, if you see, he is clearly given he is not involved in pricing or operational decisions. Therefore, answer no, because AS18 excludes common directorship unless mutual policy influence exists. Clear? Okay. Next. How much revenue should be recognized in construction contract for 24-25? Contract, here they gave the values, guys. Same thing is given above also, I think, correct? It's there above also. 12 crores is the contract. 3.8 crores is the cost. 40% of the work is done. Same thing is typed here. Ideally, it should not be typed. Okay. How do you find out the contract revenue? Very simple. How do you do it, guys? In fact, they have given the percentage also. What is revenue? I told you 3 steps in construction contract always. First step is find the. Second step is apply the percentage on. Third step is revenue minus cost. In this question, they are asking only revenue. That means I need step number 2. So for step number 2, what is the revenue, guys? 12 crores is given. What is the percentage? 40% into 40%. How much you are getting? 4.8 crores is the answer. Are you guys following? So straightforward, no, so easy. Sometimes question will be easy. You should not think why it's easy. It's easy, solve it, go to the next one. It's like in cricket, sometimes when you're batting, you will think he's going to put slow ball, off spinner, leg spinner, off or outside swing or whatever, in swing or whatever. So you will be ready for all the balls. He will bowl one straight ball. You will try some reverse sweep bowled. That same thing, sometimes exam, some questions will be straightforward. How many marks? 25 marks in the exam will be straightforward generally. Correct? No. In any paper you see, even in the hardest of papers, have you always seen 20 to 30 marks? You can easily grab it. You just have to be smart in exam over there. Next, how should the 60 lakhs compensated confirmed on 10th April be treated as what? Let me check the first 2 answers so far. It is B and C. B, C. Hey, why it's not coming? Okay, B and C. Okay. Next, how should the 60 lakhs compensation confirmed on 10th April be treated, guys? What is the answer? It becomes an adjusting event because during the year itself already there was delay due to floods and my own fault, both delays. Therefore, adjust in 24-25 as it confirms condition on 31st March, it becomes an adjusting event. Here AS4 with AS7. Previously we saw AS4 with AS12 in the previous question number 48. Yes. Answer is C. Oh, B. We marked B only, no? Yeah, B only is marked. Okay. Next, 2 more questions. Generally 4 should be there. They just gave 5. How should 15 lakhs of missed warranty in previous year be treated, guys? How do you treat prior period item to be disclosed? That's it. It's not extraordinary, not current year, nothing else. Prior period item. Last one. The 85% supply dependency. What is this? Nilava. Nila is fully depending on Billa for packaging. Are you following? So the question is, just because 2 people are dependent on each other for purpose of business, are they related parties? Answer, no. Same thing is there in AS18. Look at this. Sole supplier, sole customer, sole franchisee with whom the enterprise has a significant volume of business are not deemed to be related parties. Just because we have a lot of business between ourselves. So, no, because excludes sole supplier even with economic dependence. Answer is A. Are you following, guys? Easy question. Okay. So with this we are done with question number 50. Anybody has any doubts? Hello? Fine. Let's start off, guys. Case scenario 51, MTP September 25. AS13. Okay. Mr. Lal purchased 1000 equity shares of 100 each in an X company at 125 from a stockbroker who charged 2% brokerage. So what's my cost so far? 1000 into 100. No. 1000 into 100. 100 is the face value. They purchased at how much? So 1,25,000 plus 2% brokerage. How much? 1,27,500. Okay. Clear, guys? Next. He incurred 50 paisa. Sorry. At the end of year 1, the market value of these shares is 1,50,000. Good. I purchased for 1,27,500. Market price anyway higher. He incurred 50 paisa per 100 as cost of share transfer stamps. We will see what it is. 50 paisa per 100 as share transfer. He also purchased gold, different transaction, different investment. Gold for 5 lakhs for long term perspective, and by year end its value became 5,50,000. When something is held, long term investment is held for longer period, of course, that time we value only at cost. We don't do the comparison. Next is year 2. X Limited issued bonus shares in the ratio of 1:1. So that means I already have 1000 shares. Now I'm getting additionally plus 1000 shares. At the end of year 2, market value, at the end of year 2, market value of 2000 shares, including bonus, is still 1,50,000. Are you following, guys? Okay. At the end of year 2, gold value purchase has now become 6,50,000. When value is going up, nothing to worry. Gold will still remain at 5 lakhs. Mr. Lal sold the bonus shares for rupees 110 per share during the year. Answer the following questions based on the above information. At the end of year 1, what will be the value of investments in equity shares in the financial statements? Basically, you have to do cost plus brokerage plus stamp duty, if any. At the end of year 2, again, what is the value of equity shares? Is there a change or not? End of year 2, what is the value of investment in gold? Gold is going to be same. What, guys? Gold is going to be still at cost only, no, long term investment. In fact, only if the gold value drops, I have to worry. Remember, see here, gold value I purchased for 5 lakhs. First year it became 5,50,000. Second year it became 6,50,000. Even if it becomes 25 lakhs, I will not revalue it. Okay. But only if this drops to, let's say, 4 lakhs, will you still write off? No. In long term investment, you will always carry at cost unless such a fall is a permanent fall, or otherwise we call it as other than temporary fall. Next, fourth question. How much profit was earned on sale of bonus shares? Use proportionate cost method. Similar sum we have solved, but again do it for practice. Question 1, 2 and 4 you have to solve it by yourself, guys, and then we will cross check the answer. Online also do it by yourself. Don't fast forward. Pause and check it fast. Pause and do it and then you check. Let's start solving the question, guys. Case scenario 51. First we have to find the total cost of investment. We already ascertained above 1,27,500 is the total cost. This is including brokerage. We did it over here, correct? Now for stamp duty charges, for every 1 rupee 50 paisa is the stamp duty, correct? So I will be taking only which one for computing stamp duty? 1,25,000. We will take only the share cost. We will not take brokerage for stamp duty, because brokerage is, what to say, it's an expense for different purpose. 1,25,000 into divided by 100 into 0.5, correct? What is the meaning of this, guys? For every 1 rupee, for every 100 rupees 50 paisa is the one. Okay, so for every 100 rupees 50 paisa is stamp duty. So you end up with how much? 625. So my total cost will now be 1,28,125. So to conclude, this 1,28,125 is purchased cost plus brokerage plus stamp duty. Stamp duty is only on the amount of shares that we have taken. Do not include brokerage. Brokerage is added to value of investment for the purpose of accounting as per AS 13. But practically for stamp duty purpose, they only take the value of shares. Let me give an example for you to understand this. Okay. Now, I'll give an example. You are purchasing a house, okay, for 2 crores. In that house, you are adding TV, fan, AC, all of that. All that costed 50 lakhs. So what is the total value of the house? 2.5 crores, correct? I'm repeating again. House value is 2 crores. Interiors costed 50 lakhs. So total value of house is 2.5 crores. Now municipality will put property tax as a percentage based on the value of asset. They will put percentage on 2 crores or 2.5. 2 crores. Interiors will change house to house. Only on the value of building they will charge. Same way stamp duties on the value of share and not brokerage. Got the logic now? Okay. Now come down. At the end of year 1, what will be the value of investment in equity shares? It is going to be the cost. How much, guys? 1,28,125. Next, at the end of year, so 1,28,125. End of year 2, what is the value of investment in shares in financial statements? Have they sold anything? End of year 2, they've sold the bonus shares, no? So what will be the value of investment in equity shares? No, investments, bonus shares sold means price will reduce, correct? Value will drop. Yes or no, guys? So the company issued bonus at the end of year 2, market value 2000 shares including bonus is still 1,50,000. First let me find per share value. So it is 1,28,125 is the total value of shares. For how many shares? So what is per share value? 64.0625 is the per share value, correct? Now they are saying Mr. Lal sold the bonus shares for 110 per share during the year. So while selling, what is his profit going to be? So if I prepare the investment account, okay, or leave the investment account, selling price is going to be 110 minus 64.0625 is going to be the profit per share. How much? 9375 is the profit per share, correct? Into how many shares? Into 1000 shares, you will get how much, guys? 45,937.5 or 938. This is the value of what, guys? Profit. Let me repeat what I have done over here. I found the total cost of investment to be 1,28,125 divided by number of shares 2000. So I found per share value is 64.0625. So profit per share is 110 minus 64.0625, 45 something is the profit per share. Multiply in 1000 shares, you get 45,937.5. Last question, we got the answer, that only we did know. What is the profit earned per share is 45,937. But that's not the question I'm discussing. Discussing question number 2. What is the value of investment at the end of year 2? Initially you had how much? 1,28,125. At the end of year 2, what will be the value of investment now? Is it after sale or before sale, they're asking? At the end of year 2, what will be the value of investment in equity shares? Sorry? What will be the entry for sale when you are selling this? Okay. The entry will be bank account debit, to investment, to profit. So, to profit. So, what is the amount on bank? It is going to be 1000 shares into 110, which is 1 lakh 10,000. Are you all agreeing with me, guys? To profit will be, just now I computed how much? 45,937. Therefore, my investment will reduce by how much? 1000 shares. What is the cost per share, guys? 64.0625. 64.0625, which is nothing but the balancing figure, correct? How much you are getting? 64,000. That means the amount of investment left in my books is only 64,062. Do you agree, guys? Hello? We don't reduce? So, to answer your doubts, guys, you are saying we should not reduce the cost. Let me show you. Investment account. This is the opening balance, 1,28,125. When you sell 1000 shares, this is the cost for 2000, correct? Of course, this is the actual cost only for 1000, but because it is bonus, the cost has been now averaged to both sides. When I am selling, if you are not going to reduce it, then the closing balance will still be the same 1,28,125. Then when will this become zero? Only when you sell, the value of investment will drop. So therefore, I'm saying when I'm selling for 1,10,000, my investment will reduce by 64,062. So what I should actually write here, guys, is from investment account, I will write 64,062 will be the sale, but I'm taking only cost price. Are you getting it? This also is cost price. Therefore, what should be the closing balance? 64,062. This is for 2000 shares. This is for 1000. This is for 1000 shares. Are you understanding, guys? So this is the closing price after sale. But unfortunately, in our question, in none of the options, we have 64,062. The closing should also be 64,062. So what is happening over here? At the end of year 2, what will be the investment in equity shares in FS? Then I will reassume saying they are asking me the value before sale. So before sale means, look at this. That means they are asking me at this point. Okay. X Limited issued bonus in the 1:1 at the end of year 2. Can you see here? At the end of year 2, the market value of 2000 shares, including bonus, is still 1,50,000. Then this 1,50,000 I will compare with 1,28,000, 125 and keep the answer at 1,28,000, 125, and I will then assume that, look at this, at the end of year 2 value of gold is so much. Here also they are saying at the end of year 2 this is the market price, and after that there's a point coming. Mr. Lal sold the bonus shares for 110 per share during the year. Answer the following based on above question. If it is sold during the year, then ideally price has to drop. Correct? That means I am assuming that they are asking this question, what is the value for the whole 2000 shares, because bonus adjustment is also coming next only. Are you getting it, guys? Ideally in this question, if instead of 1,52,500, if I had 64,062, what's the correct answer? 64,062. Since that is not there, I am assuming and ignoring bonus over here and taking 1,28,125. Or the alternate way of doing, like how you are doing, is, since it's bonus, you can tell it is 0. You can still write 1,28,125 after sale, and only when the non-bonus shares are sold, you will reduce this fully. But what is AS13 saying? Is AS13 saying that no. AS13 generally average is what, guys? The cost. Correct? Are you all following? Anybody has any doubt? Generally for bonus, debit side, when we buy only, cost won't increase. When I sell, the value will drop because the cost gets averaged out. Are you following? So let me explain the whole thing again one last time. Everybody understood how 1,28,125 came? This is the value for 2000 shares. Now when I am selling 1000 shares, I found already above what is the cost per share, which is 64.062, which is the cost per share. Using this assumption only as the cost per share, you found profit as 45,937. That means cost per share is 64, profit is 45,937. I am coming down here and writing answer as 45,937. At this point, none of you had objection. Sorry? Okay, using proportionate cost. Okay. As a, okay. So then I'll have finished. So in the same assumption, what I'm doing, this is the cost. If this is the cost, then when I'm selling, this is the cost price is reducing. So my closing will be 64,062. The alternate from what she's saying is, because option 4 only specifically mentions using proportionate cost method over here. Proportionate cost. Option 3, they are not saying any proportionate cost method. What she's saying is, when I'm selling bonus shares also, in what she's saying, her method of accounting is, when she's selling bonus shares, what she wants to do is remove this investment and take the full profit to P&L. Correct? That's what you are doing. That means that if you take this assumption, then you are assuming for bonus shares, cost is 0. If I go with this assumption, then when I sell, cost will be 0. Then for the remaining 1000 shares, still the value will be 1,28,125, and the value will go here as 1,28,125. Are you following, guys? Usually what do you do when question is silent? Default. AS13 question comes. Question is silent. Do you do the second method of taking bonus at 0, or do you do proportionate? Proportionate. All the study material sums in AS13 does proportionate. So on default, we will do proportionate and hope to find an answer of 64,062. Since that is not there, we are taking as 0 and taking it 1,28,125. This is the answer to justify the latest MTP. But in my view, the options are not fully correct. Are you following, guys? Clear? Understood? Any doubts? Fine. Perfect. Case 52, MTP September 25. A company acquired an asset for 60 lakhs with a useful life of 10 years. The remaining useful life of the asset is now 4 years, and the current carrying amount is how much? 30 lakhs, which includes an upward revaluation of 6 lakhs done in the asset in the last year. Recoverable amount is 20 lakhs. Fairly easy. Let's see what the questions are, and then we will start diagnosing the problem. At what value will the asset be carried in the balance sheet after considering the above facts? That means they are saying test for impairment, see if there is impairment loss, what is the final value? What amount of impairment loss will be charged to the statement of P&L? That means for solving both these questions, you have to do the entire computation and find impairment loss. What amount of depreciation is to be charged to P&L after considering impairment? Again, I should do the whole sum. What amount of revaluation reserve? What is the amount of revaluation in respect of this asset? How much is there for revaluation? Simple. If I solve the whole sum, all the 4 points, I'll get the answer. Quickly solve it, guys. Those who are watching a recording also, pause. Hardly 2 to 3 minutes, and then we will start discussing the answer. Okay, let's start solving this. I hope you solved it by yourself, guys. Let me prepare a small timeline over here. Okay. Now what they are saying, a company acquired an asset for 60 lakhs in the beginning, for 60 lakhs with a useful life of 10 years. Now the remaining life of the asset is 4 years. That means already 6 years are done and 4 years are left. I want to first find out what is the book value at end of year 6, for which I have to depreciate nothing but 60 lakhs divided by 10 years. I will get depreciation for per year is 6 lakhs, sorry, is 6 lakhs into 6 is nothing but 36 lakhs will be the depreciation already charged. Therefore, the book value is supposed to be 60 lakhs minus 36 lakhs, and you get 24 lakhs is what we are going to get. Correct? So 24 lakhs is supposed to be the book value, but in question what they are saying, the current carrying amount is how much, guys? 30 lakhs. That means what is supposed to be 24 lakhs over here, the book value is 30 lakhs. That means what is the extra 6? So revaluation reserve will have a balance of 6 lakhs as of now. This is the post-mortem of the past 6 years. Clear? All of you understanding, guys? See, I'm not teaching like a regular class, same question for half an hour, 10 minutes. Since you all know the concepts, we are doing MCQ towards the end of your preparation. We are doing it this pace. Are you all following? Hello? Okay. Now, next what is happening? Oh, avane kurtuna. So, he is told upward revaluation of 6 lakhs, which we have cross-checked also. Now, current and recoverable amount is 20 lakhs. So, currently, the recoverable amount is how much, guys? No value in use, estimated selling price. Whichever is higher is only 20 lakhs over here. So, now I have to test for impairment. My asset value is 30 in the books, but the recoverable is 20. So, what is my impairment loss? Come here. What is the impairment loss? First one. Okay. Okay. First one. At what value the asset will be carried in the balance sheet after considering the above facts? So after impairment. So after impairment loss, what will happen, guys? Currently asset is 30 lakhs. What is the impairment loss? 10 lakhs. Correct? So if I reduce 10 lakhs, what will be the revised value? 20 lakhs will be the value in which I will carry it in the books. Are you all with me, guys? Correct? Next, what amount of the impairment loss will be charged to the profit and loss account? Come back above here. How much is the impairment loss, guys? 10 lakhs. We already studied in AS 28 multiple times. Impairment loss will be first debited to the P&L account only. But before that, I will cross check if for that asset is there any balance in revaluation reserve or surplus. If such revaluation is there, first I will set off fully against that revaluation, and balance only will go to my P&L account because I already have a gain. First you set off with that gain, then go to the net gain to P&L. So revaluation reserve is how much? 6 lakhs. So out of this 10 lakhs, I will debit 6 lakhs to revaluation reserve. So balance how much is there? 10 minus 6. This 4 lakhs only will be debited to my profit and loss account. So come down. The answer is going to be 4 lakhs. Are you following, guys? Clear? 4 lakhs will be debited to P&L account. Next, what is the amount of depreciation charged to P&L after considering the above facts? Now, what is the new value of asset? We discussed 20 lakhs after providing for total impairment loss of 10 lakhs is 20 lakhs. And this 20 lakhs already how many years over? 6 years. How many years are left? 4 years. So 20 lakhs divided by 4 years. How much per year? So from now, prospectively in the future, I have to debit 5 lakhs as depreciation every year. So 5 lakhs is going to be my answer. Clear? Anything else? Anybody has any doubts so far? Okay. Last question. What is the amount of revaluation reserve in respect of these assets? Okay. You should not put 6 because 6 he itself gave in question. Now what is the revaluation after all of this? Nil, because it is fully used. So my answers, let's cross check. C, D, A, A. C, D, A, A is the answer. With that we are done, guys. Insights, don't worry, those who are getting the material, I'm talking online, all the workings I'm doing here will be added in the insights for you guys in detail. So you don't have to like write down this also when you get it fully. Any doubts? Yes. Okay, your doubt is, let me just read the doubt again. So your doubt is, sir, which includes upward revaluation of 6 lakhs done in the asset last year. That means we are assuming how many years are over already? The previous year is what? So in 5th year it is done. So in the previous year of this. So this 6 lakhs is done in the asset last year. That means the previous year before 6th year I have done the upward revaluation. Correct. Depreciation is given for all the 6 years. So basically what is happening in the previous year they have done revaluation. That's it. We still don't know about which year, which time they have done. So what I am doing is, ideally if revaluation did not take place, value should be 24. With the revaluation value is 30. So my revaluation gain is 6 lakhs. Doesn't matter when it's done, doesn't matter what the actual depreciation, doesn't matter if depreciation changed because of revaluation. Of course depreciation will change after revaluation. Since we don't have exact data when it's done, we are just computing evenly. Are you following? Clear? Anybody else? Any other doubts in this question? Fine. So we are done with this. Fine. Case 53, MTP of September 25 exam, series 1. Gases Limited is installing a 2000 kilometer gas pipeline for distribution of gases project for gases. The project is a qualifying asset. How do you think LPG or petroleum products come to us from the Middle East? It comes in pipelines only. Okay. For this purpose, it borrowed funds of 700 lakhs, nothing but 7 crores at subsidized rate and has to pay annually interest of 70 lakhs. That means 10% annual interest. Clear? The company has also invested unused funds and is earning income of 7 lakhs annually. You already know the answer. How much to capitalize? 63 lakhs. 70 lakhs is my interest. See, project 70 lakhs is my interest minus temporary income 7 lakhs. 63 lakhs I will capitalize without calculator. Guys, I am hearing calculator sound. During the next year, the company used all the funds and no income is being earned. During year 5, the company has completed one stretch of 100 kilometers. Out of 2000 kilometers, 100 kilometers is completed, which is operational between 2 points and is capable of intended use. So project is not fully over. Out of 2000 kilometers, 100 kilometers project is completed. That's it. Fairly simple. which is, which AS is this, sir? AS 16. For year 1, how much borrowing cost should be capitalized in this project? Come down. I just want to check if the annual interest is 70 lakhs. So minus 7, 63 lakhs. Correct, guys? For year 2, how much should be capitalized? Same 63, no, sir. No. What did they say? They said during the next year, company used all funds and no income is being earned. That means what? In second year, I can capitalize only 70 lakhs. Correct? Are you all with me, guys? Understanding? Because first year 70 minus 7, second year no temporary income. So it is how much? 70. For year 5, how much borrowing cost should be expensed? Expensed, not capitalized. First to 2 is capitalized. Expensed, how much? Quickly compute, guys. Very easy. Quickly compute and give the answer. I gave the answers for first 2. Try this out. Okay, I hope you solved it. How do we solve this? Look at this. Totally for 2000 kilometers, my interest is 70 lakhs of interest. Totally for 2000 kilometers, my interest is. Now, how many kilometers is completed in year 5? So, for 100 kilometers, what will be the interest? Cross multiply. How much you are getting? 70 into 100 divided by how much you are getting? 3.5 lakhs. Or in a more logical way of solving. Sir, I want a more logical way of solving. Very simple. Out of 2000 kilometer, how much is done? What is the percentage? How much? So 5% of the work is completed. Therefore, 70 lakhs into 5% will give me 3.5 lakhs. This is concept. Previous is cross multiplication method. Both are the same actually. So how much, guys? 3.5 lakhs will be capitalized. Sorry, debited to my P&L. Therefore, the balance 66.5 lakhs will be capitalized. Next. For the year 5, how much should be capitalized? Okay, without seeing the question, we discussed that point. So out of 70 lakhs, how much are you expensing? 3.5 lakhs. So how much will capitalize? 66.5. So answer is 66.5. With this, we are done with model test paper September 25. Let's all pray that a question like this comes in the exam. Fine. Thank you. Next question, case scenario 25, model test paper 1. Primarily revolves around AS10 and little bit of AS16 also is there in this question, guys. On 1st April 2022, Shubham Limited purchased some land for 30 lakhs for the purpose of constructing a new factory. In 30 lakhs, I don't know how you can construct factory, but only for question purpose. This cost of 30 lakhs includes a legal cost of 2 lakhs incurred for the purpose of acquisition of land. For purchasing land, why you need legal cost? To give gift? No. To check with the lawyer, this land is fully safe. Is there any encumbrance on this? Does it actually, the papers are true or not? For doing all that legal due diligence. Okay. Construction work could start on 1st May 2022. So important date to note, guys. So 1st May important. Shubham provides you the following cost in relation to its construction. What is the following cost? Preparation and leveling of the land, 80,000. Will I capitalize this? Let's keep solving. Will I capitalize this? First, will I capitalize 30 lakhs fully? Yes. Okay. See, for capitalization, you have to go to AS10. And AS10 very simply tells what is included, what is not included. In inclusion, what is AS10 saying? Purchase price and any cost related to purchase price will be included. Any directly attributable cost, in that we have inclusion and exclusion list. What is the inclusion and exclusion list? Cost of employee benefits, cost of site preparation. That only is preparing and leveling the land, therefore I will include that. Next, the employment cost of the construction workers per month is 29k. Will I include this? Yes, they are working directly on the construction project, so I will include that also. Purchase of materials for construction 21 lakh 24,000. Will I include this? Yes, it's like bricks, cement, water, all that's needed. Cost of relocating employees to new factory for work? No, we will not include. Don't minus actually, we just ignore it. Okay, we just ignore it. Go to your AS10. In AS10 they will give you in one exclusion list. They would have given over there cost of conducting business in new location with new class of customers, or look at this, cost of relocating. So generally this relocating cost will not be capitalized. Don't mug up guys, I would have told concept in class, but why we don't include relocation cost? It's more of operating in nature, it's not creating value for me. Are you following guys? Okay, next, relocating cost I will not do. What about inauguration ceremony? No, I will not consider that also. Look at this, cost of opening a new facility, inauguration cost also will be excluded. All this is there straight away in AS10. Okay, are you all with me guys? Okay, super. Next, overhead cost incurred directly on the construction of the factory per month. Will I include overheads? Overheads directly incurred. Okay, let's say you include that, we will keep it separately for now. Okay, general overhead cost allocated to the construction project by manager is 30k. General overhead will include no, general overhead we don't include because it's indirect cost. Okay, as per the company normal overhead allocation policy, it should be 24. So general overhead by manager is saying 30k, company is saying as per policy it's 24,000, and next the auditor of the company has support documentation for only 15,000 and he has raised objection for the balance. So auditor is saying 15,000, company is saying 24,000, manager is saying 30,000. You should decide which is the final one. Next, not yet done guys. The construction of factory was completed on 31st December. When did they start? 1st April, correct? No. Oh, 1st May. 1st May is when they started the construction. When it got over? So how many months from May to December? 8 months, huh? I don't know guys, online students, Coimbatore students are saying 8 months. Later when I'm solving, you ask them only. 1st May to December, 8 months, okay. And production could begin on 1st Feb. That means asset is now starting to use, okay. The overall useful life of the factory building was 40 years. However, it is estimated that the roof will be replaced in 20 years. So they are now introducing component method of depreciation, where an asset has different useful life. You have to split that asset and provide depreciation differently. So whole building is 40 years, but roof is 20 years. Okay. After the date of completion, the cost of replacing the roof at current price would be 25% of the total cost of building. They are giving breakup. Once you find the total value of the asset, 25% is roof, 75% is the building balance. The construction of factory was partially financed by a loan of 28 lakhs, and the loan was borrowed on 1st of April. 1st April we borrowed. The loan was taken at an annual interest rate of 9% during this period when the loan process has been fully utilized for construction. So they are saying loan is fully used for construction, and Shubham also had a temporary income of 25,000. Very simple. Loan is given, used for qualifying asset, amount is given, interest also is 9%, duration also is given. Find the period, compute the interest, reduce temporary income. How much? 25,000, and balance will be capitalized. You are required to assume that all of the net finance costs are allocated to the factory and interest cost to be capitalized based on 9 months period. So follow very carefully. Question is giving guys, I hope they don't confuse us like different questions. Here construction started and got over 8 months, huh? But loan is taken on which day? 1st April to 31st December it got over, huh? So that is how many months? So we will again have the doubt. Loan is for 9 months, but construction is for 8 months. Normally, if question is silent, I would have mostly taken what? 8 months. But in the question itself is saying capitalized based on 9 months period. So you have to take 9 months period. But in option, if they give you both 9 and 8, and if they give you two answers and MCQ is wrong, don't ask me. Okay. Based on this question, a prudent human being with basic common sense will take what? 9 months. That's it. Okay. ICA has little high IQ, so they may give you different answers, guys. Come down. We will see. Hopefully, there's no confusion here. Confusion will not be there because it's model test paper, latest release. So they should fix all the mistakes. Which of the following costs incurred directly on construction will be capitalized to the factory building? You tell me, guys. Quickly, let's start answering. 2 lakh incurred as legal cost. Yes, I will capitalize. Relocating? No. Inauguration? No. General overhead? No. I'm discussing answer because already we saw this point while reading. Are you following? Next. What is the amount of employment cost? Employment cost of construction workers will be capitalized to the factory building. Go above and see. Related to employees, what is the one cost, the multiple cost available in this question? Only one cost. Employee cost is given separately. It's given separately, guys. How much? 29,000. But it's given for per month. So you have to multiply into 12 and do 29,000 into 12. No. It is 29,000 into 8 months. How much, guys? Do you have the option to like 32? Yes. So first answer is A, next is C. I don't know if it's correct. Let me just cross check, guys. Yeah, A and C. 29 into 8 months answer is given. Legal costs are capitalized. Are you following, guys? What is the amount of net borrowing cost to be capitalized to the factory? Let's compute that quickly. What is the amount of loan they have taken? 28 lakhs, 9%. How many months? 9 months. So can I write 28 lakhs? 28 lakhs into 9% into 9 by 12. How much are you getting? 1 lakh? Oh, so no, sorry. Okay. 1 lakh. We have an answer. Is this the correct answer? No. 1 lakh it is there in the option, but it's a bait, guys. There is a temporary income. While reading the question also, I told you how to reduce that, guys. So I will reduce how much? 25,000. You end up with how much? 1 lakh? 64,000 is the answer. Do we have that? Answer is D. So come down. D is there. Yes. This is the breakup, guys. Okay. 28 lakhs into 9%, 9% 1. That is the amount. Are you following, guys? Understood? Now last one question. Are you able to quickly solve, guys? 3 questions, 3 minutes, but the paragraph matters. This I'll allow you to solve because this part, what will be the carrying amount, the closing balance of the land after charging depreciation as on 31st March 2023. For this, you have to do the whole working. You have to find the first building value, how much you will capitalize, and then you have to, what is it, charge depreciation for 1 year. It's getting over. When is construction ending? 31st December 2022. So next year, you should provide depreciation for how many months? 3 months. You have to provide depreciation. Are you following, guys? Okay. Building is put to use from February, correct. So from February you have to do it. Quickly compute, guys. I'll give you a minute time. Quickly compute, start off. Try it out. So this last question is the most important one in this MCQ. The first 3 A, B, C are easy ones. 6 marks in your pocket. In just 2 to 3 minutes. This one will take time. Okay. So generally in exam, if you are running short of time, this one MCQ itself is equal to a 4 or 5 mark question. The time that it takes. Only thing you are going to save is presentation, but the computation you have to do. What they are asking, they're asking you to find the value of asset on 31st March 2023. Construction got over on 31st December 22. The year is ending on 31st March 2023. But the assets was starting to use from which day? 1st Feb 22. So first question I have to ask is, first you have to find the value on this day, 31st December 2022. What is the value of asset when construction was completed? Okay. And then you have to depreciate till 31st March 2023. Correct? Now the question is, will you depreciate for the entire 3 months or just for 2 months? How many months? Now, they generally say we will start depreciation when asset is ready for use. Go to the question over here. They have clearly mentioned construction got over on 31st December. Okay. And then they never said production started on 1st Feb. Look at the wordings very carefully. Production could begin. So the wordings could begin means it has not started, but it can start from 1st Feb. So I will take the assumption that from 1st Feb only asset is ready for use. What about this 1 month? Maybe some other small work is pending still. Are you following? But the construction work is done. Borrowing cost will stop capitalizing. Now what I will consider for so first step you have to do is find the value of asset on the date when construction got over and then depreciate for 2 months. That's it. What all I will include over here? Okay, I will include the whole value of land 30 lakhs I will include. Then site preparation 80k I will include. 29,000 into 8 months I will include. Then purchase of materials I will include, and overhead cost 25,000 into 8 I will include, and borrowing cost that we already computed above I will include. Writing all this only, formally I wrote everything over here, guys. You don't have to write like this. You can do a calci working itself, but it's up to you. Okay. So whatever I highlighted now, I have written everything over here. Are you guys following? Recording, I hope you're following. I wrote everything. Employee cost breakup also we have over here. 29 into 8 months. Direct overhead also I wrote. Which case study is this? This previous is case 24, no? 24. Just for reference, if some of them are taking notes later. Case 25. Are you all with me, guys? So now this 58 lakhs I found. So as of 31st December 22, the value is 58 lakhs. Up to 31st December March 23, I have to find after reducing depreciation, and this will be my answer. Now first mistake what students will do here is they may depreciate. You are getting the answer only if you depreciate by 2 months, correct? They may depreciate for 3 months. I explain why you don't take 3 months, you take 2 months. Second mistake they will do is they will depreciate the whole 58 lakhs for 2 months. No. Question gave a hint of what? 40 years for the whole building and 20 years is for what? Roof. And roof comprises 25% of the asset. So first next step I have to split this into two. 75% and 25%. So what is 75%? What is the value, guys? 43 lakhs? 50,000. And this other one is 14 lakh? 50,000. This 75% we will depreciate for 40 years. This I will depreciate for 20 years using component method. Have they given any residual value? No. So I will straight away divide by 40 first to find depreciation per year. But I should also multiply into 2 by 40 is for whole year, but I need only for 2 months. Same way here, 14 lakh 50 divided by 20 years, but I will multiply into 2 by 12 because I need depreciation for 2 months. So how much you are getting? This side left 18,125, right hand side 12,083. Okay. So now you will find the revised value after depreciation. Left hand side, how much you are getting, guys? Left hand side 43 lakhs 50,000 minus 18,125. Recording students, don't wait for me to write the answer. Use your calci and compute. How much? 43 lakh 875. This side 14 lakhs 917. Okay, recording students, you need to give the answer before students give it over here. We have 50 students over here giving the answers, so you need to give it before them, guys. Answer, how much you're getting? Add both. 57 lakh 792 or some whatever, this is the number. 57 lakh 69,792. Go here. Do we have that option? 57 lakhs 69,000 is not there. Now let's do the same thing, but instead of 2 months, try it for 3 months. Let's try it for 3 months. So I'm only trying to derive the answer for you guys. Try the same thing for 3 months. Let's not, okay, we will keep this. I will just erase this and try it for. Otherwise, rest of the answer should be correct. Let's see. 3 Varda, let me see, guys. How much total? 50? 688. Are you getting the answer then? No. 5778. Did we miss something? Okay, what did you do? Okay. Interest we already added, no? Borrowing cost we added, no? Adding this only you gave the value, correct? Okay. Okay. Hold on, we will find it. Okay. This computation all of you understood. We got 57 lakh 69,782. Okay. Now the answer here is 57 lakh 78,000. That means it's approximately how much extra? Plus another roughly 8 plus roughly another something roughly around 8,000 is the answer. Now I'll give you all a minute. Try to see where it went wrong and then we will discuss. We have to get the answer, guys. I can't tell it's wrong in model test paper or it may be wrong. We don't know. This is the option given there. We have done everything correctly, but let's try a few permutation combination to see if we're getting the answer. So try it out, guys, quickly. Online also try it out, guys. The idea is we are trying solving together. It's okay to make mistakes, but we will get the answer. So guys, where we reached is we understood how we arrived at 58 lakhs. Firstly, all of you are clear with this 58 lakhs, huh? So these are the values that we will capitalize for the purpose of what? Overall value of the asset. Now we have to look at depreciation, and for depreciation we discussed this part, correct? Where we were at a confusion whether we have to, first we have to, I told you you have to find the value on 31st December 2022. That value only is how much, guys? 58 lakhs. Is everyone clear with this? Next we told, I discussed saying we have to depreciate for the subsequent period and arrive at what? 31st March 2023, and here only we had a discussion where whether we will depreciate for 3 months or we will depreciate for 2 months. Initially what I told, I said based on the values in the question and based on the wordings that production could begin on 1st February. On that assumption, I thought could begin on 1st Feb, so I told we will go depreciate with 2 months. But then what happens over here? This word could begin, it looks like ready for use. But what if it doesn't start? And one more student pointed out saying, sir, the factory was completed on 31st December itself. Could begin means it depends when they are starting. It could be their inauguration cost or whatever work. That means 31st December factory is ready for use. So we will go with the assumption instead of production could begin on 1st Feb. That means when they are starting. So the wording says, let me just clarify here. Could begin is more like when they are going to start. But when it's ready for use, 31st December itself. So based on the answer also and the wordings, see all these things will help you in what? Now you got clarity. Next time if a wording like this comes in the main exam, where production could begin on 1st Feb, construction got over on 31st December, same wordings. You will start depreciating from which period? 31st December itself, 3 months. And the reason for this is earlier I myself told it could begin. So I'll take that day, but we thought that's ready for use, but could begin means it's company's choice. So company is taking the choice of 1st Feb, which is not right. They can start on 1st Jan itself, correct? So on that interpretation, we will take depreciation for how many months, guys? And not 2 months. So I will depreciate for the entire 3 months, and we will come here, and ideally we will depreciate 58 lakhs for 3 months. Most students would have done that. That is natural, including me. I would have done that and made the mistake. But we should not depreciate what? So the entire land part should not be depreciated. So what we have to do, I will write down 58 lakh minus 30 lakh. We are left with 28 lakhs only. I will depreciate. What normally anybody will do, they will do 28 lakh divided by 40 years into 3 by 12. But that also is a mistake, because question has clearly mentioned what? Question has told this asset is broken down into roof and building, and roof is 25%, building is 75%, and roof has 40 years of life and building has 20 years. That is clearly given in this paragraph which I am erasing over there. It's given over there. So what I will do, very simple. Now I will just split this 28 lakhs into 2 parts. 75% building, 25% roof. What is 75%, guys? 21 lakhs. What is 25%? 7 lakhs. And this left hand side I will depreciate for 40 years. This I will depreciate for 20 years. So while I am doing this depreciation, it will be divided by 40 into 3 by 12 depreciation. Here again divided by 20 years into 3 by 12. Can you tell me what is the amount of depreciation? 20,000? 30,000? 13,125 here. 7? Okay, 8,750. So we will get revised answer. This depreciation you guys compute online, guys, compute by yourself, you will get it. So here you will get 20 lakhs. 875, perfect. And this side 250, yeah. 91,250. Computation you guys do it, guys. So if I add both, how much are you getting? 125. This is the value of only building. Now I have to add value of land, which is 30 lakhs. So if I add value of land along with the new depreciated value of building, you will get how much value, guys? 57 lakhs 78,125. Let me go to the answer. You will have 57 lakhs 78,125. So this one MCQ for 2 marks is taking us 5 to 7 minutes. So the exam you have to be smart. Okay, time is there, I will do it now. Otherwise, inky pinky ponky, go. That's it. Time is not there means what you will do, guys. Fine. Understood? All of you with me, guys? Are you all clear in this sum? Good sum. What is the key adjustment over here? Fourth one is a very good adjustment. Again, let me summarize in this. What are the common mistakes that is there? 3 important points. 1, do not consider land for depreciation, add back in the end. Second, take 3 months from construction end and not from what to say, when they are going to use. And third one, split between roof and building for 75-25 and do component method of depreciation. Is that clear, guys? Yeah, that's about it. With this we are done with this question. We will move on to the next set of questions, guys. Let's go to question number 2. This is September 24 RTP, guys. Suman Limited is in the business of manufacturing electronic equipment, but I don't want you to focus on this heading, which is giving the source. Automatically eyes will go there, but that's for you to get clarity for practice later. So Suman is in the business of manufacturing electronic equipment and selling these at various outlets. Okay, super. It provides installation service for equipment sold and also provides free 1 year warranty. Replace Suman Limited with, let's say, Vasant & Co or Vivek's or Chroma. So they are basically manufacturing electronic equipment and selling them at various places, and they're also saying what we will give you free installation or paid installation. They haven't told that, along with 1 year of warranty. Beach resorts are leading resorts in the city. Okay, it purchased 5 ACs from Suman Limited, just 5 ACs for such a big resort. Okay, Suman Limited sold how many ACs, guys? 5 ACs for 45,000 each, which includes installation of rupees 1,000. So let me write the breakup now. 5 AC, or let me write breakup for each AC. So 1 AC is worth how much? 40. 4,000 only is the AC price, and includes how much? 1,000 rupees for installation. Are you following? That means this is AS9, which includes sale of goods and rendering of service. The 44,000 is AC, the 1,000 rupees is service. Are you all with me, guys? Following? Super. Now what they're saying next? The company also offers 1 year free warranty. Already told, thanks. The company also offered 500 rupees as trade discount. What do you mean by trade discount? Discount that you get at the time of purchase. Let me give an example. They are saying on Swiggy or Zomato, when you order food, they will tell 1 plate of biryani 250 rupees. Apply coupon. If you go to a place and apply coupon on Swiggy, Zomato, they will do flat 50 rupees off. Then you will pay only 200 rupees. That 50 is called trade discount. Are you following, guys? So trade discount before I make the payment itself, to make me buy flat 20%, flat 10%, at the time of purchase, it's called what, guys? Trade discount. Okay. Next, so 500 rupees is trade discount. Beach Resort placed the order on 15th of March 2024 and made the payment on 20th of March. AC was delivered on 27th March. Appa, thankfully, everything got over in March. Delivered. AC came to my house, came to the resort itself on 27th of March, but installed only on 5th April. That means from 27th March till 5th April, AC is there in the resort, but no, it's not working because it's yet to be installed. These are the facts in the question. Let's quickly go to understand what each MCQ is they're asking. First MCQ, how much revenue should be recognized by company as on 31st March? Now, what is pending in this entire transaction? As on 31st March, sale is complete. But what is not complete? That means I cannot recognize the revenue of 1,000 installation for this year, but I can recognize the revenue of 44,000, which is for ACs. So how many ACs totally? 5 ACs into 44,000. How much? One second, how much is coming? 2 lakh 20,000. 2 lakh 20,000. If I am creating this MCQ, I will keep an option for 2 lakh 20 also. They have not kept any option for 2 lakh 20. That means even I thought it's correct, but it's not correct. What is missing? Trade discount. They also gave me 500 rupees off per AC. So I should not do into 44,000. I have to basically do it into 43,000. So basically from 45,000 I am reducing 1,000 rupees for installation, 500 rupees for what, guys? Trade discount. So 5 into 43,500 is how much, guys? 2,17,000. Let me go check the answer. Here we go. 2,17,500. Whatever I have explained now, answer also is given over here, inside. Are you following, guys? This insight is given later when you are doing self-study or for those students who are just using the material for them. Are you getting it, guys? Okay. Next, how much of revenue should be recognized in the financial year 24-25? That means next year, how much should recognize? That's it. 2 marks in 10 seconds. Are you following, guys? 5,000 is next year. Okay. What will be the accounting for trade discount? Before you read the option itself, simple. Imagine the scenario where you are going to SS Hyderabadi biryani or some biryani shop. Okay, what is famous here in Coimbatore? Sorry? Talapakettiya. Chennai liye irke. Hari Bhavanam is what I heard from students, guys. YouTube students, if you come to Coimbatore, have a biryani from. Yes, Hari Bhavana. Hari Bhavan is the recommendation. Okay. Don't ask me if it's not good. Students have told. Now, come back, guys. Imagine I'm going to Hari Bhavan today for biryani. They are saying one biryani is 300 rupees. For me, they are giving flat 10% discount. So, one biryani is how much? 300. Flat 10% na minus 30. I am paying only. Now, what will be the entry I pass in my books? I will give you 2 options. You pick which one it is. Okay. Option 1. Will I pass entry biryani expense account debit to cash 270 or will I pass entry biryani expense, or let's say 300 to cash 270 to discount received 30? Which one? Option 1 na? Option 2 How many of you option 1? Majority of you. How many of you option 2? A few of you. Understand, guys? The second option, recognizing discount as an income, should be recognized only if you get the discount subsequent to the sale. Are you getting it, guys? Subsequent to the sale means, let me explain over here. When I make the sale, let's say biryani is 300. Credit sale, I am yet to pay. Now I am getting 300 rupees discount, 30 rupees. Then I can recognize as discount whatever for the biryani shop. Okay. When it is discount on the time of sale itself, we call as trade discount and we take only 270. So it will be 300 minus 30. Entry which is correct, the first one only is correct, guys. I'll give you a better example. You want to take an auto to go to railway station. First you ask auto Anna, how much? He's saying 200 rupees. Ayo, 200. Then you both bargain. He's saying 150. You got in for 150. What entry you will pass? Auto expense account debit 150 to cash 150. Will you write auto expense account 200 to cash 150 to discount earned 50? Are you getting it now, guys? So that is called trade discount. In negotiation you got the discount. So here, will I account for trade discount separately in P&L? No. Are you getting it? So I have to record only net of trade discount. Which option is correct? The trade discounts are deducted. Correct. It should be reduced. Let me go check the answer. Where is it? Yeah, answer is 2. I get scared sometimes. Kill up what if it's wrong? Okay. Fine. Are you all understanding, guys? Will it be recognized after 1 year? No. Recognized separately in P&L? Just now I gave you auto example. Recognized after installation is complete? No. Sometimes when you know the answer, you should not waste time like what I did, reading the other options and telling why it's no. Clearly answer is 2. But in exam, safe side, read all the options to convince yourself that others are not the correct answer. Are you following, guys? Clear? Last question. Is the company required to do any accounting for 1 year warranty provided by it? Now this is not AS 9. This comes in AS 29. That's why in start I would have given over here. Okay, yeah, I would have given over here AS 29. Are you all with me, guys? Following? So now you tell me, guys, should they provide for 1 year warranty? Now very simple. Follow, guys. For one AC, let me do 2 financial years. This is financial year 1. This is financial year 2. Correct? In this year, in financial year 1, in financial year 2. In financial year 1, the revenue they recognized, I'm doing per AC. I'm doing per AC is 43,000. In financial year 2, they only kept 1000 rupees, which is my installation. Now, until the next 1 year is completed, that person can come back with some warranty saying AC is not working, all of that, correct? Now, if he comes back with some service, I have to account the expenses, correct? I have to account the expenses. Let's say my expenses actual 5000. I don't know if he will come for expense. Now you tell me, guys, will he definitely come for expense? It's only an maybe. It's only a maybe. Loudly, it's only a maybe. Now you tell me, should I create provision till he comes, or only to create provision? I need to create a provision because I don't know whether he will come or not. So what I will do, very simple, in the first year itself, I will write 2 provision on sales, some percentage, maybe 10%. If it's 10%, 4350, I will create as provision. Now after 1 year, nobody came. So next year, I will reverse this provision as by provision reversal 4350, because after 1 year, he cannot come and claim for what? Warranty. Are you all understanding? Are you all with me, guys? So now you tell me, this is concept as per AS 29. So where is this given? If you just go to my AS 29 notes, okay. If I just scroll down, if you are using this book, it's anyway available freely. Okay. AS 29, if I go, yeah. Here I would have spoken about reimbursement. Look at this. Okay. Warranty also I would have given, yeah. In case of, yeah, insurance contract and warranty provided by supplier, you have to create the provision because there is a present obligation. Look at this. An enterprise with a present obligation may be able to seek reimbursement of parts, so you can create the provision. Leave the theory part of it, guys. You understood the numbers over here. So which option is the correct one over here? Quickly go through. As there is a present obligation, can you connect with the notes of AS 29 now? To provide warranty for customers for 1 year, the company should estimate the amount that it may have to incur considering various factors, including past trends, and create provision as per AS. How much to create? Question has not given you any details. Are you following? Let me check if answer is 2. Yes. We have to create the provision. Are you following, guys? So provision warranty creates a constructive obligation. Are you all with me, guys? Understood this question now? This is question number 2. Let me go to the next question. Question number 3. Sir, what's the question is so small? I am not framing this. I am taking it from Jan 25 RTP. So there are 55 questions. Some 15-20 will be small like this. Some will be big. Clear, guys? Okay. Case study 3. Can we continue solving? Hello? Yes, okay. Surya Limited. Yeah. Okay. You can see it, right? Yes. Yeah. Surya Limited. What is it? Yeah. Surya Limited has 2 fixed assets. FA1 is being carried in the balance sheet for rupees. Let me document the facts that they are giving. FA1 is 600 lakhs. FA2 is how much? 300 lakhs. As of which day? 31st March 24. Whenever I read an MCQ, I will try to document those facts. Okay. The value in use, which standard? Value in use, AS 28. Until this word value in use comes, I cannot conclude it is AS 28. They just gave 2 FAs. Sir, it's there here, no sir. 28 you gave, no. Don't see that. Okay, fine. 600 and 300. What is value in use? Let me quickly revise impairment, because we are into impairment. I will take my material. AS 28. I know you all know the concepts, but quickly. What is impairment loss? We will compare carrying amount, which is nothing but the book value. Book value will be compared with recoverable amount. Do you remember, guys, impairment? Let me quickly revise. If carrying value is 100, if recoverable value is 120, do I provide impairment? No. But what if my recoverable value is 60? I will provide impairment loss of 40. Are you all with me, guys? Impairment loss of 40. Now what is recoverable amount? It is the higher of 2 things. Net selling price and value in use. Net selling price is what I will get if I sell the asset today at time 0, at year 0. Today if I sell, let's say I'm getting only 50. What is value in use? What you will get if you sell in the future. Let's say 5 years. After year 5, I'm going to get 60. Future cash flow discounted. So why am I taking whichever is higher? Don't mug up. Use common sense. I am telling you, hey, you have a bike now. This bike, if you sell today, you will get 50 rupees now. If you sell this bike after 5 years, you will get 60 rupees. What you will do? Somebody with common sense will sell after 5 years. No, sir, I will sell now only for 50. I can't help you. You can go to some clinic for some IQ test. Okay. So I will take whichever is higher, which is 60. Compare with 100. This is impairment with a core concept. Correct? Let's come back to our sum. I wrote 2 FAs. Come down. As of 31st March, they are giving the values. Let me write them down. The value in use of FA1 is 500 is the value in use. And the net selling price is 550. Which I will take? Whichever is higher. So I will compare. This is my carrying value. My recoverable value is whichever is higher. Which is higher, guys? So I will take 550. Are you all with me, guys? Then the company did upward revaluation last year for 20 lakhs for FA. That means this 600 includes upward revaluation of. So revaluation panni mudistan. They have done the revaluation already, which is 20. Only facts. I am only summarizing the facts. As of 31st March, the value in use of FA2, second asset, is how much, guys? Again, let me draw that over here. 350 and net selling prices. So which is higher? Of course, 350 is higher. Okay. Recoverable. So here also, what I will write? Carrying value, recoverable value. Now on the face of it, even before we go to the questions, okay, you tell me which asset requires impairment. FA1 requires impairment because carrying value 600, recoverable value is. What is my impairment loss for asset 1? 50. Definitely one question will ask what is impairment loss. FA2 impairment is there? No. My asset today is worth 300. If I sell, I will get how much? No need to have any impairment. Are you all with me, guys? Understood? Clear? Let me go down to questions now. How much is the total impairment for FA1? We already computed. How much, guys? Impairment loss is 50. Correct? Answer is 250. Are you all with me, guys? Clear? Next. How much of impairment loss will be charged to P&L account? What is the entry normally we pass? Impairment loss account. Sorry. First entry will be impairment loss account debit 50 to fixed asset 50. Correct? Next I have to transfer this impairment loss to my P&L. That time my entry will be P&L account debit to impairment loss 50. Correct? So how much I will transfer to P&L? 50. Can I write 50? Can I write 50? You can write. What will happen? Next attempt. That's all. Okay. Now what is the mistake over here? Look at this. They have told in the question there is a revaluation of 20. I gave a subtle hint also. AS28 says if there is a revaluation gain, first adjust the impairment loss with the revaluation gain and subsequently only goes to P&L. So my entry will change over here. What I will do, look at this, I will write revaluation reserve or gain account debit. How much is there? Beyond this, how much is the loss? 30 only I will transfer to P&L. Are you following? Where is this given? In provisions they will tell you how do you account for revaluation. Look at this. Yeah, here. Look at this. Individual asset charged to P&L. Thereafter, if there is no revaluation, surplus available. Look at this. Initially, reverse to the revaluation surplus to the extent of revaluation surplus. No, this is different. This is reversal, guys. Leave reversal, sorry. We are only talking about impairment loss. Charge to. First I will charge where? Charge to revaluation surplus if available. How much is available for me? 30. Beyond that, you charge to P&L thereafter. Are you getting it, guys? 20 and? Very sorry. So first I will charge to revaluation surplus 20. Beyond this 30, I will be charging where, guys? P&L. Are you all with me, guys? So that's what I'm doing here. This is the entry. So answer is what, guys? Not 50. It's going to be 30 lakhs. Go to point number 3. Yeah, where is it? Here. 30 lakhs is charged to P&L. Are you following, guys? Sorry, point number 2. Are you all with me? Is the speed okay? You should only tell me, guys. Are you understanding? Question number 3. How much is the total impairment for FA2? Just now we saw no. FA2 it is nothing but nil. Are you all with me, guys? So come down here. FA2 answer is nil. I don't have to check the answer and all. It is going to be nil only. Next, the last question. What will be the carrying value of on 1st April for FA1? Let me go above. And option A, when a question like AS28 comes, you solve and check the answer. Look at this. Initial asset was 600. Now impairment, how much is reduced? 50 is reduced totally. So my revised asset will become 550 is nothing but recoverable value. In AS28 we would have told you, if you account for impairment, the carrying value will become recoverable value. Are you following? So recoverable value is how much? 550. Go and check. Do you have an option for 550? Yes, first option. Let me go check the answer. D is 1. 600 minus 50. 550 is the new carrying value, because from 600 of the amount I am reducing impairment loss of 50. Are you all with me, guys? Anybody has any doubts? Hello? Sure. I hope all of you are understanding. Okay. Let's go to next question. One more question, guys. Case study scenario 4, which is May 25's RTP. First I am finishing all these RTP, MTPs, then we go to past exam question, then I go to last only I am doing own questions. Okay. In the books of G Limited, what's the question? Inventory valuation AS2. Okay. Guys, are you all understanding? Sure. In the books of G Limited, closing inventory as of 31st March amounts to 10 lakh 40. On what basis? FIFO. So if I write FIFO here, it's 10 lakh 40,000. Weighted average is how much? During the year, company wanted to change the method. Look at this. Change from FIFO to weighted average. So in weighted average, it is 8 lakh 80,000. Realizable value inventory 31st March is 12 lakhs. Look how smart the company has become. If I keep in FIFO, do I have to do what is the reduction of value of inventory? No need. Realizable value is still 12 lakhs. Now they have changed to 8 lakh 80. Still should I do reduce in value of inventory? No need, because this is cost, this is NRV. That means here NRV is higher, no need to do any write-off of inventory. What is the question, sir? Only one question. Super. What will be the value of inventory in the books? What is the value of inventory? 8 lakh? Because they want to reduce it. So 8 lakh 80,000. And what disclosure should be given in the FS? What disclosure I should give? I am changing the method of inventory. Now you go to AS 2, read along with AS 5. What is AS 5 saying? Can I simply change the method of inventory valuation? No. Let's go see what AS 5 is saying, guys. AS 5 says, hold on. Yeah, AS 5 says, look at this. Change in accounting policy. Look at this. AS 5 says, what is an accounting policy and when you can change? AS 1. When you change, what you should disclose? Impact on current year profit and impact on future year profit. In this question, when my closing stock from 10 lakh 40,000 drops to 8 lakh 80,000, my gross profit will decrease in this year. Are you following, guys? Correct? When my closing stock decreases, profit will decrease. Correct or no, guys? Yes, okay. Go to AS1. AS1 says when you can change inventory. Look at this. AS1 says change in accounting policy. When you can change it, guys? Yeah. When you can change accounting policy only if it is required by the statute or accounting standards, or it leads to a better presentation of financial statements. Now come and read the options. Tell me which one according to you is correct. The value of inventory is 8 lakh 80, correct? That means anything which is 12 lakhs I will strike, correct? Because we have changed. So the correct option could be only one of these two. What is the first option? And the fact that valuation method has changed to be disclosed in FS. Yes, we will disclose. Second, value of inventory is 8 lakh 80 and the full disclosure with the amount the valuation method has changed to be disclosed in financial statement. No, which is correct? Option D. Why? We need to have full disclosure. Here only they are saying what? Fact that the valuation method has changed to be disclosed. Not only the fact of change, I also need to give, look at this, just now I showed you, I proved to you in AS1, if there is a change in accounting policy, what I should do? Amount ascertained, amount to be disclosed, and also fact to be disclosed. So both amount and fact should be disclosed. So I have to give a full disclosure. So the answer should be D. Are you getting it, guys? Now this is a twisted MCQ in the sense, most of you would have picked the A or D, but you would have got little confused. Mostly would have gone with full disclosure only. Clear up? Understanding, guys? Hello? Okay. We will do one last case here and go for a small break. One last case. So case scenario 5. So at least 5 will be done. So all the cases will be this smaller. No, I have just compiled from RTP MTP. Okay. May 25 RTP. This may be MCQ. I think this came in one previous exam also, or it can be a separate question in schedule 3. Are you all following, guys? A Limited has a balance of 17 lakh 15,000 in the loan account with State Financial Corporation, which includes 1 lakh 15,000 for interest accrued but not due. That means 17 lakh 15,000. How much is principal? Principal component is, interest is 1 lakh 15. This is a very common adjustment for those of you who have not skipped the schedule 3. You would have seen this. Guys, are you all following? Okay. Now, the loan is secured by hypothecation of plant and machinery. For this, what I should do in schedule 3? Disclose in the notes to accounts. This 17 lakh 15, can I show as loan? No. I have to split. This will be shown as long-term borrowings. This will be shown as what? Interest accrued but not due is what? Other current liability, non-current liability. Other current liabilities. Question also will be something similar. As per schedule 3, how is the loan to be disclosed? Go through the options. Quickly let's go through, guys. Disclose 16 lakhs as secured under long-term borrowing. Partially correct. They are not talking about interest. Disclose 16 lakhs as secured under long-term borrowing and 1 lakh 15 as short-term borrowing. No, it's not a borrowing. Then disclose 16 lakhs as long-term and 1 lakh 15 other current. So far C looks correct. Disclose 16 lakhs as secured long-term borrowing and no disclosure for 15 lakhs. So answer is C. Easy one. Answer is C. Are you all following, guys? Easier. Understanding so far? We are done with the first 5 case study based MCQ. In reverse, we are also reversing. In reverse, we are also revising the accounting standards. Clear, guys? Understood? Okay.